a rolling dope. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Morning, you knuckleheads. Happy Thursday to you both.
Hello.
Woo. Hola.
I love that we match. It's my favorite thing.
It is. It's nice.
It's unintentional, but I love it when the squad comes together.
Mm. Yours is very nice with the heart.
Thank you.
Very lovely. Oh,
You gotta do it the Gen Z way, Nikki. Come on, you could do it, Nikki.
No,
Come on, Nikki. Nikki, you got this. You got aw. Yay! Can you do it, Pat? There you go.
I don't know.
There you go.
That's a tough one.
That's the
a tough
Gen
one.
Z way.
I actually, as I was leaving yesterday, I saw you driving out,
Yeah.
blasting Taylor Swift.
Oh, no. Seriously?
It was like echoing in the parking garage. Like I could just hear. I don't know which song it was.
Yeah.
I knew.
I'm glad.
That's fine.
Yeah, I knew.
It's my favorite thing to just terrorize people in that garage. Like there's a lot of construction and architecture guys who like work in our building.
Yeah.
So this morning when I pulled in, there was this guy in like a big like F-150 truck or like whatever. I come barreling up the ramp and it's like, baby, where the hell is my husband? What is taking him so long? And then I whip around and then I back into the spot and then I just look at him and I go, sup?
Did you need Taylor Swift from a higher high, or did you need Taylor Swift to lift you from a lower low?
She is something for everything.
Yeah.
Oh, she is.
Every mood, every emotion, every feeling. Do you want me to make you a playlist?
Like a mixtape? No.
It's a playlist now, but like, yeah.
No, that's okay. But I think I've heard some of her music.
You have.
It's okay.
You have. You can't escape it.
Yeah, I'm sure. Sure.
Yeah.
Has it? I mean, is it on TV commercials and stuff like that?
Maybe not commercials. Oh.
Maybe not
In
for
shows.
A quick ding.
What was that, NASDAQ?
Oil.
Oil?
Oh.
Oil options.
I did a stupid, aka a Super Bowl. I sold a put spread to buy a call spread.
Okay. Sold a put spread to buy a call spread. Okay.
Yeah. So both bullet.
Both are bullet
Right.
trades.
Stupid trade. AKA the Super Bowl.
America.
This is, I guess, anti-America because I'm long a little.
Oh.
But I bought back the put spread and I
So
sold.
you're buying the put spread back for a profit
Yes, and I sold a call spread in the same transaction.
to make yourself an iron condor.
Butterfly, iron condor on the upside. So I'm long the 100, 103 call spread, and I'm short the 110, 113 call spread against it. It's like a equal with butterfly.
So you're long almost the at the money.
Right at the money to the upside.
Right.
On oil for a net 20-cent credit because I did that transaction,
Which is a $200.
So
credit.
yeah,
20 cents is $200.
$200.
So you got a guaranteed 200 profit.
and a shot
and
at
you
up
gotta-
to $3,000.
Best case scenario. Let's be realistic and say $1,000.
Yeah.
free.
But that's what I did on the last one.
Yeah, no, I get it.
Where do you need oil to be?
Between 105, 103 and 110.
Oh, okay.
And it's 91
91 in that.
right now.
But that's the expected move on the upside.
Right. And it's 91 because that's the futures that you're looking at. You're looking at these M futures, not the K futures, which will be rolling.
But the position is trading for 25 cents. So it's worth $450. I locked in $200. And I have a shot,
Okay.
$3,000, up to $3,000.
yeah. Where's the butterfly going to go to the downside? It's not going to move
It's not
too
gonna move
much.
all that
$50, something like that.
It actually might if you get like a.
I mean, it's 35 days away, but this is an incubator trade right now.
Yes.
Yeah.
That's a fun little shot.
Yeah.
Okay.
Yeah.
Sorry.
No, you're good.
Taylor Swift makes all things good. See?
Yeah.
That is true. That is true. A little dingy there. How about you, What'd you get up to last night?
Ooh, I had the pleasure of watching my son drive away with his hockey gear
Girlfriend?
and everything else. No. With his hockey gear and everything else like that.
So he drove himself to practice.
Yeah.
Oh, that's nice.
Yeah. Wife still had to wait up for him, kind of thing.
Sure, of
She's still
course,
doing that.
of course.
Sleeps with the phone, at the bed, kind of thing. And wait for him to come in. So Still got that going for us. But
Just remind him though, he's got to take the hockey gear out of the car to like wash it or clean, or else it's going to get funktastic in there.
Yeah, no, his is not bad because I take care of it. He'll hang it up and then I'll spray it. So we hang it up in the garage.
Yeah.
And then I spray it.
Sure.
The garage is, as you know, heated in the winter, so it dries out some of the clothes and stuff like that. But it makes it better. But it's still got a little bit of funk to it. But hockey equipment is by far the most nasty thing that you can ever smell. It's horrible.
Yeah, I'm sure. Like, I know that as a teenage girl, like, I was abusing Bath and Body Works lotion and I just smelled like cucumber melon. But I would take that over like teenage boy stink any day.
Was it worse than my camp clothes when I came home?
Yeah, I would say so. Your camp clothes were something different. Your camp clothes, the problem with your camp clothes was you brought home your pillowcase and it was all like worn out and ripped up, like it had like I don't even know that it could cover the pillow anymore.
Oh.
And his, I believe you had Ivory soap back in the day. Mm-hmm. It still had the name on it. He was gone for 3 months or something like that. It
was like trying to stick a penny in the tread of your tire, but it was just it still just says Ivory.
Yeah, that was
Ivory
the most
soap.
disturbing
Yeah.
part. And then you explained to us how you bathed in the lake and all this other stuff.
Yeah.
So I was like, okay, all right.
Boys.
Boys.
All boys camp. I mean,
Yes.
Yeah. Oh
what
God.
do you need a shower for?
Just the smell.
What do you need soap for?
Yeah, what do you need soap for? Jump in the water.
Yeah, but it was fun. Good memories.
Yeah.
Good memories.
Well, that's good. How about you, Nikki? What'd you get up to last night?
Not a ton. Just like made dinner, hung out.
What'd you make?
Watch your Crime 101. That was good.
It was good, wasn't it?
Movie with,
it was a good movie.
Chris Helmsworth.
Yeah, Chris Helmsworth, I believe.
Yeah.
Hemsworth. Oh my God, Hemsworth.
Hemsworth, all right.
Halle Berry as well.
Oh, nice.
Good.
Usually she's
called?
not in good movies.
53. Woo, boy.
What's it called?
She's older than 53.
Yeah, she is. I think she,
No Holly slander.
that was her.
I didn't slander her. I didn't slander
I'm talking about
her.
Tony.
Yeah.
No, me?
No slander.
Put some respect on Miss Berry's
No,
name.
I just know because my wife and I work together. She's older than 53. That's all. That's all I'm saying. My wife's 57, I believe. I believe
What is the movie called?
Crime 101.
Oh, it's just called Crime 101.
Yeah.
Oh,
Yeah,
okay.
it's really good.
Okay.
It's really good.
What's it on? Like
Crime.
Oh, it's on Prime.
Yeah.
Okay.
Yes, yeah. It's good. Got some good twists to it though. The ending is good. It's
Yeah, it was good.
good.
Okay.
Good.
It was
yeah.
good.
Yeah. Very nice. Yeah. I'm
Check it out.
taking
Check
my
it out this
movie
weekend.
recommendation.
What did you cook last night? Is it something from Trader Joe's? Nothing good.
We're on a little healthy kick. It
That's
Are
okay.
you?
wasn't the best
Are you?
performance from either side. Unfortunately. But we're working on it. We're working on it.
Nice. Very nice. Okay.
I have to look at Skinny Bat over here all day long. So, now I'm feeling like a little pressure.
Well, he gets to go home at 11 in the middle of the day, and,
And I work
use
out
his
all day
gym.
long.
Yeah.
Yeah. Do all
But
kinds
you and
of
I, Nikki, we're here on the
cryotherapy.
grind.
Yeah.
Yeah,
We
you
just
guys
don't
are grinding.
have
You
that
guys are
time.
grinding.
Grind.
Yeah, grinding.
45-minute
That
best
hustle
over there.
culture.
Yeah.
Gotta get in. Gotta get into it.
We're gonna put a tracker on you.
Okay. I was at Costco last night.
Yeah, I'm getting Crime 101. Surprisingly good movie. Yes.
Here's the thing: you got to go long Costco now because I did not have one. Because again, I'm like you, Nikki, like trying to be healthy. But new entry in the Costco food court, their frozen yogurt parfaits.
Ooh.
There is now a caramel churro one,
Wow.
and it's $2.99.
Wow.
Wow.
It's gonna be 70 degrees today. I might have to pull the trigger.
I thought you were going to go with the, I don't know what they call it, but like the elite status Costco card where you get 2% cash back. I can't walk by Mikey Butler without.
Oh, I have that. The executive
telling me about,
membership.
yeah, this 2%. It's 2%. It's cash back. It's amazing.
And you get the special shopping hours.
Yes, you get.
Yes.
You get the.
You get to go like a
elite-
half hour or an hour
It's
earlier.
an introvert paradise. I love it.
Yes. So that's what I've been hearing about
When are you going to get a Costco membership?
soon.
Okay.
So
You have
Really? This is very adulting of you. I don't have one.
well, that's because
I'm not allowed to have one.
So can I say, when I use the app for my membership, it's super easy. You can unlock with your face, but your card is just like on my phone.
Yeah.
And so when I opened it the other day, it said I'd been a Costco member 19 years.
Damn.
Wow.
Yeah.
How were you?
That's like your longest.
How were you remembering?
When I was 15.
Yeah. How were you 6 when you were?
But no, 19 years. I love you, Costco. Anyway, hey, we got a great show for you today. A lot of news headed your way, and we're getting PCE. Yeah, you know me. At 7:30. So, that's exciting.
Okay.
Get into it. But on this thrilling Thursday here at Tasty Live, a lot of great content headed your way. At the top of the 8 o'clock hour, fan favorite treats from the research team live. The world's greatest financial think tank's going to present their trade ideas and kind of just stunning up move in the markets yesterday. Kind of a small, teeny bit down this morning, but the research team has trade ideas for the bats. Then at 8:40, we got Johnny Trades, Nikki himself in the hot seat with a bearish, bullish, and neutral position. What sector are you maybe thinking about today?
We're going to have to see where the market opens. The beauty.
Subject to change all the time these days, right?
Every day is a different day. So
That is
we're
true.
going to take a look, but we have a number of positions on, so it's been a good couple weeks here for the Johnny portfolio.
Okay.
Yeah, it has been.
And then 9 o'clock in our market measures, market just crashed. Time to sell strangles.
Yeah, this is a fun one. It's a look at like the last 5 years, different entry points for strangles. So like on an average day, on a small down move, on a relatively big down move, on a huge down move, what those P&Ls look like, on those specific days.
Okay.
It's hard to do that in real time, but it just, everybody gets scared to do anything when you have a big move.
Sure.
It's kind of like, hey, you're getting paid for the risk.
Okay.
It's a good one.
You really liked it. I know you did.
Yeah.
Then we have a live from the trade desk. It just says TBD and Glenn. I don't.
Yeah, I think
maybe a little Marty Supreme.
I think Quentin's out, so
I gotcha.
It might be a Tasty Trade desk parade of sorts.
Oh, a cavalcade of star. Yes.
Yeah.
Bring in a little clink.
Yeah.
Yes.
Fresh meat.
Yes. Maybe Grover comes in.
You get to pick like one of 3.
Yes.
Kind of thing.
Yeah.
Yes. Maybe Terry.
Yeah.
Okay. All right.
So who knows?
We will see.
Yep.
All right, that is our run-up show for today. Programming note, if you have a trade idea for us, we would love to hear from you. Tomorrow is Fast Market, #Fan Friday, and we need viewer-submitted trades, a 1, a 2, a you know what to do. Where can they submit their trades, Nikki?
tastylive.com/fastmarket.
Fast Market, there you go. Love it.
Yeah.
Lock it in. In the meantime and in between time, you guys want your daily dose?
Sure.
Here's my theme music. Let's go.
Our leading story, breaking news,
Today's
across the wire. Our leading story, top story, just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It's April the 9th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
First, headed your way today, Fed Minutes show growing openness to rate hikes. From the March Fed meetings, a growing group of Fed Reserve policymakers felt last month that interest rate hikes might be needed to counter inflation that continues to exceed the central bank's 2% target, particularly given the inflationary impact of the war in Iran. We are going to get PCE in about 15 minutes today. Let's talk about bonds. Let's talk about what they did yesterday and what they might do today.
Bonds had a big move yesterday. We got into
With the market, everything had a big move yesterday, right?
But they closed basically unchanged. So they got up to right around 115. They're
right.
at 114.
I think they
ticks
ticked
right now.
115 as a high.
Yeah. Yeah. So there was it was going contrary to what this is saying. I don't know. This did come out middle of the day. I don't know if they sold off right around then, but they were weaker into the close.
They were.
So, bonds have not looked great. I know Ryan was talking about, being long rates themselves, not short the bonds, but that same sort of trade. But it doesn't look like we're getting any rate cuts. That's for sure. But I don't know if I don't think they're going to do any more hikes.
Okay.
Too far on the. I don't know.
What are you seeing in like the dollar, pound, yen currencies, euro?
So the euro was really strong yesterday, at least in the morning session. We closed out of some of the FX positions. I wish I had kept on that euro strangle that I had, but TP brought to my attention Japanese yen, which I've sworn off, but I am now back in, and the Aussie dollar, which I've lost considerable amounts of money on. I'm now back into that. I'm short the Aussie dollar, long the Japanese yen. Both of them are wrong today.
Okay.
So it gives you an idea of my trading prowess in the currencies.
How about you, Bat? How are you positioning things? PCE coming out in 14 minutes.
I took a lot of positions, and you took a lot of positions off.
My delta is basically zero right now.
Yeah, reducing a little bit of delta, reducing a little bit of short premium, but everything moved exponentially the way you would expect, meaning market went higher, oil went lower with the news and everything that was out yesterday, and maybe even the dead cat bounce if you want to play the other side of the coin, except volatility. Volatility stayed elevated, and it's still elevated this morning. I mentioned it, and I'll just mention it for the last time. 2 days ago, with the market down 50 handles, even the S&Ps were up around 6 or 7%. We went unchanged. They were still up like 4%. And yesterday, with the huge move to the upside, volatility only contracted by 8%. So a little bit less, actually. And now it's up 1% already today. So volatility is the only thing that really hasn't contracted. You got plenty of days to put on positions, 35 days, and the options that we would look at. So the world is your oyster here.
Yeah.
Getting to the big story this morning, oil prices resume their gains after Iran accuses the U.S. of breaching a ceasefire deal. Iran wants Lebanon to be included. They're like, hey, you can't be bombing Lebanon. But of course, Israel was like, no, we're going to bomb the crap out of Lebanon. And then so it's just very shaky ceasefire. So then Iran, of course, retaliated, striking areas in Saudi Arabia and Qatar. And so now they're hoping for more talks this weekend with Pakistan being the intermediary. But the end result of all of this, Iran being mad that Lebanon was hit, they shut down the Strait of Hormuz. So even though we had the big headline that, we have a 2-week ceasefire, the strait's going to be open, only like 5 ships went through yesterday, which is half the number that had gone through the day before when there was no ceasefire. So
yeah, I got to appreciate my Taiwanese sources, Peter and others who wrote into me very early, like around 1 o'clock or something like that, maybe even before most of the news broke, saying that it was closed again. So they got their ear to the ground, these people. They know. It's
that Citrini analyst.
Boots on the ground there, yeah.
Oil 99 and change in the front month, up 5%. That's $4.75. This is about a $5,000 move. Big move.
Yeah, I think, and we've been talking about it too, the curve in oil is projecting that we're going to have higher prices. They're not going to be astronomically high, but they're going to be higher prices. And that, kind of puts credence to the fact that there's going to be a lot of back and forth with it. This isn't like over in a day.
Yeah.
This doesn't just like, oh yeah, we're buddy and the strait's open and the oil, flows. It's going to be back and forth, and there's supply imbalances, obviously, that are still working their way. I mean, this is going to be a problem. So I expect this to be flip floppy like everything else. I mean, that's just how markets have been.
Yep.
I just know that a lot of people were hoping that some of the choppiness in the markets was going to go away, but I don't see that happening.
You don't want it to go away because those aren't fun markets. I mean, the world we live in of financial markets, this is beautiful.
Yeah.
I mean,
yeah,
volatility, big moves,
two-sided action. Bulls, bears can make money. Everybody has an opportunity. You can move to different products. There's liquidity everywhere.
Yeah.
Anything of note in a XOM or USO, if you're not, got it like that, and you're not trading crude oil futures like you, Nikki.
Yeah, those stocks have come off the highs. I mean, they closed near the highs yesterday, but XOM is down, 10% from its high. I don't know if I'm looking to be long or short them, but short volatility I think is an interesting play there. XOM, CVX, if you look at like an XLE, XOP, OIH, all have very high implied volatility. So if you're looking for, something oil related with volatility, these products got it.
And a news story that was supposed to send shockwaves through the crypto world kind of just was met with a meh response yesterday. The New York Times says that they have uncovered the infamous Satoshi Nakamoto, and it's this British cryptographer, Adam Back. He denies it, but the mystery is still alive for many. But Bitcoin recapturing kind of that 73,000 level. This guy does not look like he invented Bitcoin. This guy looks like he has a blog about IPAs. But whatever, you do you.
Yeah.
Right?
I mean, we talked about this with Ryan too. It feels like deja vu, like every year or couple years you get this. Like,
somebody,
Yeah, it's a salacious headline. I don't think this guy is it. I've seen interviews with him, and there's all sorts of discord around him not being the one.
Right.
Like, certainly not the one. So I think ultimately it's one of the bigger mysteries of the last 10 years.
Because I asked Ryan about it. I was like, do you think Nakamoto is dead? And Ryan was like, yes. And I was like, oh, interesting.
I mean, listen, nothing has happened in that wallet for many, many years, and it's a enormous sum of money.
Sure.
So,
I'm going to date myself here, but it reminds me of the old Spartacus movie with Kirk Douglas. I'm Spartacus.
And I'm Spartacus. Well, no one wants this smoke, so everyone keeps denying it. So, but something we can that is actionable, what's Bitcoin doing?
You said, and accurately so, it got up to around 73, which is a huge move over the last week, 10 days, from around 65, 66 or so on the lows to 73. Sitting at 71 in change right now. Pretty, about $1,000 move last night.
Yeah.
Pretty consistent.
It was strong yesterday with everything else, but it's just been, and we
been
talked
a
about
non-event.
Ryan, it's a non-event.
Volatility contracting, as we saw. Ryan brought in a nice little graph there yesterday.
There's just no, there's it's just not like moving. It's not moving like other markets are moving.
Sure.
There's no attention.
It's a dead one.
It's kind of dead right now. So,
Because in the whole like massive up move yesterday, like I don't even think we even talked about Bitcoin. I mean, I know Ryan came in later, but it's like
it was up a couple percent, which which is great, but it's gone nowhere.
What about Coinbase?
I have not been trading Coinbase. It's at 175. I think it was in the 200 handle about a month ago. Yeah.
But
it's another one that's kind of just been dead money. Coinbase, Robinhood, MicroStrategy, they've gone basically nowhere.
In an earnings announcement from yesterday, Constellation Brands, the U.S. maker of Modelo and Corona, withdrew their previously issued fiscal 2028 outlook on Wednesday and reported subdued demand across categories. The company still beat Wall Street estimates, mainly to the strength of their Mexican beer brands. But Constellation Brands is expecting its new CEO, Nicholas Fink, to assume the role early next week. How dire of a situation are we in America when an alcohol company is like, look, we got to pull our fork out. Like, no one is drinking anymore.
Yeah, the kids don't drink. It's wild.
Yeah.
They do other things like vaping and stuff, which is very, very bad for you.
Yeah.
Sure. But STZ, I don't know if you guys traded
STD.
it. STZ.
Oh, sorry.
Constellation.
Yeah. Did you have a flashback to the penicillin shots that you did back in the day?
This is a trigger.
They have a a person that came in like kind of weekly at the floor that would like.
They should have just been spraying that place.
Like a concierge, like, okay, like who had a fun weekend, who needs a penicillin shot.
Oh, gross.
Yeah. I mean, like you could cure just about everything with a shot in the arse. I mean, it was pretty good time back then.
You nasty.
But this stock is a trigger stock for me.
Why?
I've never really traded it.
Okay.
But I was on a plane with a guy who was like CEO or something. I'm going back 15 years,
you got
maybe.
A bunch of these plane stories.
I spent a lot of time on planes building businesses, although now I don't do anything. And he told me it was around a $30-something stock, and he's like, "You got to buy my company. It's a great company, blah, blah, blah." And by the time I really looked at the stock. I went from 30 to 35, 37 to about 42. And I'm like, I missed the move on this stock. And it worked its way up to 200. And
you sure did.
Yeah.
Yeah, right.
So I kind of
Swing and a miss.
That was my college fund.
Hey, the AI.
But you listen, full ride to Oakton Community College.
Oh, yes. So only the summer classes, the rest of them I was on the hook for.
The AI gold rush is accelerating so quickly that even bullish analysts are struggling to keep up with their forecasts. And a new note to clients, Bank of America issued a massive upgrade to the firm's global semiconductor outlook, hiking its 2026 revenue target to $1.3 trillion, a $300 billion leap from the estimate the bank provided just 4 months ago. NVIDIA and Broadcom continue to power those AI ambitions, but you could throw in Micron and all the other Marvel, AMD, AMAT. Valid, or let's not get over our skis?
They all caught a bid yesterday, but the market caught a bid. But everything is, and I'm just broad base here, AVGO, NVIDIA, I didn't look at Marvell and AMD, but just those two, and the market is right in the middle of its most recent range. I mean, that's...
Semiconductors as a whole were very, very strong yesterday.
Yep.
So like SMH, I think made new highs or close to it into the move yesterday. So the semi stocks have been the strongest of the group here, despite NVIDIA kind of being... Yeah,
Marvell's on its highs.
NVIDIA and AVGO like really haven't been the story. It's been like that second and third tier when you talk about like the memory stocks, the optical...
The soon-to-be NVIDIAs of yesterday.
Yeah, like AAOI, that stock that you mentioned all the time.
AAOI?
Yeah, because my buddy Peter is always talking about it.
But like Lumentum, some of the like... GLW,
which by the way is up $2 today, making new highs. AAOI.
So those stocks have kind of taken the baton here to move everything higher. What I like about this headline is that it's actually a time frame that makes sense. 2026.
Yeah, you hate that 2028, 2029, 2030. You can take
this in a couple months and be like, oh, they're on track. They're maybe a little bit under, a little bit over, and you can actually take something out of this. Whereas projecting out to 2035, we have no freaking clue what's going to be going on at that point.
Real fast before the number comes out, Meta debuted a new AI model yesterday, Muse Spark. It is spearheaded by their chief AI officer, who they just backed a Brinks truck up to this guy's house, Alexander Wang, not to be confused with the fashion designer. But the company is desperate to regain momentum in the fiercely competitive AI market following the disappointing debut of its previous flagship Llama 4 family of AI models. Meta up a strong $13 or again this morning.
Yeah, Meta was, we were getting long and into the lows, which worked very well, but Meta was one that had no love. And I feel like this is another stock that gets discounted, kind of like what we have with Google, but we've had these huge moves in Meta where everybody discounts it as like the loser of the group, and then it face rips. Like it just balloons higher. And
it pulls a Sandy in Greece. Tell me about it, stud.
Yeah. So I am still bullish here, so I still have some long delta there. I will say, none of them, you look at like a Microsoft and Meta and Apple and NVIDIA, none of them closed at highs. They all had really big opens when the market was like relatively lower than where we closed at, because we closed basically at highs. And then closed kind of in the lower end of the range. So it's kind of like it didn't make you feel great. Like I talked about this with Vecchio, like Microsoft on a day where the market is up 3% and like the war's over and everything's amazing, market sentiment wise, Microsoft, a stock that's down 50% from highs, was down on the day at the close. Like that is,
weird.
I would have thought Microsoft would have been up 20%.
Sure.
Maybe not that much, but
20%
a lot
more than it was. Yeah,
more than the market itself, because it's been just murder over the last year. So it didn't give you a good feeling. Same thing with Meta. It was like Meta was strong, but it was like we're not even back to like last month's prices.
Yeah.
I don't want to interrupt, but I think your number's out.
Yes. Yeah, it just came out. Nothing's really moved as of yet, but I'll let you know as I go through my little talk here on Microsoft. Microsoft, one of my trades from option trades today, which I do every day now. You can watch it on our site or YouTube, wherever you like to do that. But anyway, it was one of those stocks that gave me a lot of troubles. About $4, $5, $6 loser on the trade. Had a roll, needed a little bit of a rally. Finally got the rally yesterday, and was so glad to be out of it. Option markets in Microsoft are not the best. You really have to have.
Why do you think that is? Like, I don't understand.
I don't know. I would, normally say, $380 stock or $370 stock, whatever it's sitting at right now. It's going to have wide markets, but every stock is $300 now and shouldn't have wide markets. I don't know. Microsoft just doesn't have the love from the option gods. As a matter of fact, just to quote you, since the number came out, even the S&Ps really haven't moved. Maybe they moved 3-4 handles to the downside. They're down 21, where they've been sitting for most of the morning. Volatility still bid up almost 40 cents, but
none of this stuff matters.
Bonds are unchanged. It's
I just don't think anybody really cares. Everybody knows.
You got to trade price these days. Is what I think is what it's really coming down to.
Yeah. They've already put the bar high. They 1%, increase in inflation. They've already. I think we're
used to 10%.
We all know. We all know the inflation rate is probably going up.
Yes.
It's not a shock.
Yeah.
So.
Yeah.
Well, speaking of Microsoft, OpenAI will reserve a portion of its IPO shares for retail investors. The AI startup is laying the groundwork for an IPO that could value it at up to $1 trillion and may file with securities regulators as soon as the second half of 2026. OpenAI follows in the heels of SpaceX, which also says that they will set aside an allotment of their IPO for retail investors. OpenAI has raised over $3 billion from individual investors in its latest funding round. Where do we go from here?
Where do we go from here? I don't know what makes you.
No, wait, what is that? I would sing with you. I just don't know what that song is.
I don't know. I'm probably butchering it.
Oh, yeah. I was like, I would. Okay.
Yeah,
it was a vibe.
It was bad.
But I shouldn't know what song it was.
I sound bad in the shower.
Wow. On to the next.
Compose yourself.
Yeah. What do we do from here?
Yeah.
I'm a little hesitant.
With all these $1 trillion IPOs now?
I talked about it with the interview I did with Amit, and it was like, you have this black hole of capital that needs to fill it, right? So you have $3 trillion in the next 6 to 8 to 1 year. We'll just call it a year. That money has to come from somewhere. It's either new money, a portion new money coming out of other things. I don't know if they're, it's a big black hole.
Yeah.
Filled. I'm a little hesitant. I think even to go back to kind of the talk of Microsoft and Meta yesterday, Tesla was up, and we've talked about Tesla, maybe some of the love is getting pulled out of Tesla in anticipation
of the SpaceX.
Tesla was up $10 or $15 in the start of the session. It closed
down on the day.
It closed down $4.
Yeah. Oh, that's wild.
Yeah.
I only saw it up. I didn't know that it closed down.
I feel you can kind of see a little bit of that. I think some of the move in Microsoft is part of this.
Oh, okay. Yeah.
You have kind of a
competition coming into the space, just maybe innovation.
If you're looking at if you've been an investor for X amount of years, and you have let's say you got $100,000, and you got it spread across Microsoft, Tesla, Apple, Nvidia, all these stocks, and you're like, I want to spread some into these stocks that are coming.
More speculation.
Yeah, you want to take 10% of your allocation or 20% into OpenAI and SpaceX and whatever, and spread it across. Where are you going to take that from? You're probably going to take it out of the ones that you are less bullish on of the Mag 7, and that's been Microsoft, Tesla, and Meta. I mean, Google has stayed up. NVIDIA has been strong relative. Apple has been strong relative. So it's it feels like you're kind of, I don't know if I'm making this up.
No, it's got to come from somewhere. No, you're right.
It does kind of feel like that. So I don't know. That's just kind of
and they've underperformed the market, the Mag 7.
Yeah.
As of late.
Yeah.
Walt Disney is planning to cut as many as 1,000 positions in the coming weeks, many of which will be made at the company's marketing department. That's according to the Wall Street Journal. The journal said the plans for the coming job cuts began before CEO Josh D'Amaro assumed his new role as Disney's CEO in March. What are you doing in the House of the Mouse?
So the company's saying it's not his fault, the new guy is what.
Boom.
That's that whole thing here. The losing of the jobs is irrelevant. It's not the present CEO's fault. It was the old guy fault. Anyway, $98 and change. Off of its lows are around 92. Off of its highs for the year, around 110 or so. Yeah. Sitting right around 98 or so. I think Disney, although it has a good IB rank of 45, is a dead product.
Yeah, we did a trade yesterday from...
I think Liz and Jenny like it.
What's your assumption?
Mm-hmm.
Short the 90 put, the 100, 105 call ratio spread.
Okay.
Yeah. Mm-hmm. And just one more point on the last thing about the SpaceX stuff. Because if they get fast-tracked, too, this is another point.
To the NASDAQ?
To the NASDAQ and the S&P 500. Because if the NASDAQ does it, the S&P 500 is going to...
Sure.
That's going to change,
right?
Well, yeah, but that's going to change the weightings. And these are going to instantly be a top 5 weighting. Mm-hmm. So you're going to have more come out of Apple, NVIDIA, Microsoft, the top of the chain, because it has to... they have to maintain that sort of weighting. And so that's another, piece of the puzzle.
It'll be interesting because it's really sort of unprecedented, not only to get one IPO of this scale, but to have like multiples like already lined up in succession and figuring out, okay, where is all of the money going to come from and where is it going to go?
Yeah.
Just as a statement, I hate private equity. And I mean, I don't know who is pro private equity. I mean, I guess if you work in private equity, yeah. But private equity, they ruined one of my favorite spots. They ruined a bunch of things, but they ruined Panera, and then just private equity insanity. Panera is launching its new salad stuffers, and they're calling it a bread bowl for your salad. Bitch, be so for real. This is just a sandwich.
Yeah.
I hate this so much. They're like, no, we've optimized it for maximum efficiency. It's a bread bowl for your salad. Synergy. No, it's a sandwich. It's a sandwich.
But
it's a sandwich, and it's going to be like $15, and it's going to be so mid.
I will say about a year or two ago, there was, at least in my algorithm, what Meta and to a smaller extent TikTok, I don't really watch TikTok, but Instagram, what they designed for me to be my future was to take all of the ingredients and do like a
the chop. Yeah. I like those chop videos.
That's what this is.
Yeah, basically.
Take it all, you put it on a cutting board, you chop it all together so it's all like equal bits, and then you put it in the sandwich. You can pile a lot in there, and you get a little bit of everything in each bite.
Do you need somebody to serve it to you too? I mean.
Yes, I'm with Vanessa.
It's a freaking sandwich.
It's a sandwich. I know.
I'm sorry.
Private equity.
I'm sorry. You can chop it up, do whatever you want. This is not Taco Bell. It's still just a taco.
It is
still
quite nice.
A sandwich.
I will say the best part is the dressing / like condiments that you put on it. It gets equally dressed.
So the two flavors, there's going to be a steakhouse salad stuffer with romaine, arugula, sliced steak, applewood smoked bacon, and gorgonzola, and a Santa Fe salad stuffer with romaine, grilled chicken, taco seasoning, corn, feta, peppers, onions, and the like.
I agree with you. Private equity ruined the best of the worst fast foodie.
Yeah, they got into Jersey Mike's too, and that's
Jersey Mike's is another one.
Panera, and like it's a whole bunch of things.
I agree with you.
Get out of here. Hey, this is something that is cool, though. Bat, I pulled this for you. I think you would like this. The Utah Mammoth hockey team has a new Zamboni, and it is the most amazing thing I've ever seen, called the Zamoth. Behold.
Freaking love it.
Look at it.
Yeah.
Look at his eyes.
Oh, yeah.
I want to go to the Boy Aquarium.
Shoot those T-shirts. Love it.
Yeah, that's pretty awesome.
That was easy.
Who is that man? Add to cart.
I like this.
I think this is cool.
Yeah.
I want a Zamoth T-shirt.
Yeah. Very nice.
Good job. The Utah Mammoth. I didn't know that they were the Mammoth. I just was calling them still the Utah Hockey Club.
I like the wheels on it too. They even got like good wheels on it too.
The thing could go off road. I don't know.
That's right. Go off ice.
Yeah, there you go. Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live. We'll take a little bit of a look back at yesterday, and then we'll do a little confirm and send. We got a whole lot of stuff. We trace from the research team, as Vanetta said. We'll be back in 90 seconds with Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with a little look back at yesterday. Let's do it.
Let's do it. Yesterday
yeah, I think they have this labeled as like an extreme up move yesterday. I mean 2.5%, 3%. You can't say anything else but extreme move. Right?
How would you
First slide, please.
A one word to describe yesterday's price action or yesterday's just your feeling for your portfolio and such? How would you describe it?
I'm going to answer this the same way I answered emails, 72 hours or longer in the past. I thought we were a little overdone to the downside. I had no way thought we were going to have a 3% move to the upside. I mean, outside the expected move would have been fine. 2 times or more outside the expected move was not what I was anticipating. But you had it unless you were really stuck from old trades, you really had a lot of wiggle room on that up move. And I think it was easier to buy depressed stocks because everything was getting hammered.
Over the last month?
Yeah, than it was to kind of, I mean, I don't sell into weakness like that, so it's not my game. So two-sided action is good. like I said, now I'm sitting with basically a Johnny-sized position. When I was on the show with Liz and even Vecchio after that, and even with you on the show, I said, we had such downward pressure. I was just getting too big, too short oil, too big in the market. Like at that kind of max size, anything more to the downside would have really started to sting. Yeah. It was stinging a little bit as it was. So this was, I think, a decent sized move. It was, when you have long delta and it goes up 3%, you look like, you to yourself look like a genius, but I was not a genius.
You got bailed out on a lot of stuff.
Got bailed out on
anybody that was trading.
The worst thing that can happen now is a rocket ship to the upside because I'm not set up for that.
Yeah. I would agree with that.
Okay, I'm not, I don't have that anymore.
But yesterday, you had to have something working. Like, there wasn't a way that you didn't have a pocket of your portfolio that was greatly outperforming any, even if you were short into it, there was a huge vol crush. I mean, there's no way you were, if you're short markets, you could be long oil too, but that would be kind of the same sort of thing.
And we closed near the highs with that late day kind of stair step rally higher. But prices that I can see weren't met from the opening. I closed and moved, and you were doing a lot of trades. I mean, you did 50 trades in the first 15 minutes.
I think I did 70 trades yesterday.
For the day, but you did like 50 in the first 15 minutes. I mean, it was, so we both were kind of doing things right at opening prices. And when I looked back at some of my fills, most of my fills were better than where the market closed, and we closed near highs and a day went by, and that's just showing you that volatility was bid all day long.
Yeah.
So I don't know.
Let's do it.
I don't need a big move today. I actually would like to see a little bit of weakness. I mean, I don't have an oil.
I know. Vecchio asked me this because we were talking.
I want to see two-sided action.
4,800 is right back in the middle, and was
4,800, 6,800.
6,800.
Yes.
6,800 is right back in the middle of that range. We played,
6,850 was that stop number, the floor when we were higher.
7,000 was like the spot. Mm-hmm. And he was like,
I asked you this question too. Go ahead.
Yeah. What do you think the next 100 points is from here?
I'm hoping downside. I would like to start accumulating.
Yeah, I said the same thing.
I'm hoping downside. I have no idea. Obviously, like everybody else, nobody has idea.
I think that's sort of consensus.
Yeah, I know that. That's what always scares me, though. I hate to be public.
I will say I don't think it was consensus to be long. I think there was way more fear. And you saw it in
150 oil, 200 oil. We were 110.
And you saw it in the skew in downside puts. And the market
is down at 90 something, the low 90s, I believe.
So I don't think, not just into the Trump whatever thing the other day, yesterday, or Monday.
Who cares the why?
I'm not talking about that point, but I think even the week prior, where we had that big Monday and we rallied basically through the whole week, I think people were leaning into that as like a short, like I think that was kind of the fuel to the fire. I think I think we got a little greedy at that point because you rode the month down. You get this face ripper of an upside. You have Trump's the Trump deal, whatever on the table, civilization getting wiped out, whatever his rhetoric is. You have that coming. I think people got a little.
I mean, it took us, I just counted, I didn't realize this before, but it took us 9 days once we broke pretty much the 6,850, 6,800 area. It took us 9 days to get to the lows. It took us 6 days to get back to the 6,850. Bulls and bears had an opportunity to make money in all of this. Greed could have gotten killed one way or the other. Greed could have benefited exponentially from these moves.
And I don't think it's out of the realm of possibilities to get back to those lows. I just think the pricing of markets over the last 2 months was we're going down 10% and it's happening in the next week. You know what I mean? Like you had volatility at 30, oil going nuts, you had skew off the chains.
And you got oil going nuts this morning up 4%.
Yeah, but if we go down 10% from here over the next month in a choppy fashion, you get vaporized if you played for that 10% move, other than if you're statically short delta.
Right.
Like if you are buying puts and you're buying these downside hedges and you're doing this, with any sort of duration and it doesn't play out like in the short term, you're screwed, even if you play for it. And so I think that's what's continuing to happen here.
Yep. Totally agree.
Anyway, let's recap what happened yesterday. Extreme up moves across the board. We ended near the highs of the session here. Everything up between 2.5% and 3% here. It was just a face ripper of a day. But I will say it did not, with the stuff that I focus on, which is mostly like, mega caps and tech, it didn't end at the highs.
No.
We talked about Microsoft, Tesla.
Palantir had a horrible day.
Palantir looked awful. Even Meta, that was up, 50 at one point, 55 was, only up like 25 or 30. It didn't seem like there was like oh shoot, I'm going to miss the boat here move at the end of the day.
Yep.
So
totally agree.
When we talk about the Mag 7, Meta, biggest mover of the group, outperforming the rest. You got Google, Amazon in there as well. Amazon was up like $8, $9 for most of the session. Apple has been relatively strong. And then you got Tesla, which is just, I feel like once these IPOs come around, it's going to be an interesting discussion if they are, where they IPO or even higher, which one of these get taken out, or if we expand the basket. I think they'd probably make it like a Mag 5 or something like that. I don't know. It'll be interesting to see.
Or maybe they'll make it a Mag 14. They'll double it. Just put
Mag
some
10.
more. Put it all in there. Well, I got that index that's a Mag 10. I don't think it's very tradable these days, but they have it.
Yeah. On the sector level, semiconductors, as we mentioned this morning, outperformer of the group. I think they hit a new high into the move yesterday. They've been relatively strong. Some of the stocks underneath the surface, your Microns, your Lights, your AAOI, as you like to trade over there, SanDisk.
No, I don't like to trade it. It has horrible option markets, but it's a mover.
Yeah, those are movers. You also had some of the materials and mining stocks moving, so you had a good day in both gold and silver, which both kind of closed at the lows of the trading session, which was another kind of like, and that was on the backs of a move lower in bonds too, which was also another like kind of sign that those like it wasn't a real,
Yeah, gold flirted with 4,900. It's 4,760 right now. I mean,
Tech in general, very, very strong. You had some of the financial stocks get bid. I took off some Delta and AXP and Citigroup. I had the XLF covered call, which I took off. Those were great. It was across the board a good day. Energy being the weakest of the group, and XOM, CVX, stuff like that, down like 10%-ish from highs. So a nice little breather in the energy sector. I mean, this basically tells you all you need to know. If you were kind of long stocks in general and short volatility or short delta in oil, kind of playing these price extremes, yesterday was euphoric for your positions.
Yeah.
And that's what it was.
Yeah. It was a reset day for you. You at least could look at your positions and say, okay, I want to sit with them. I think there's going to be continuation, blah, blah, blah. I got them. Or you could neutralize your delta and try to play the moves. It gave you options. It gave you things to do. Stair-stepping one. I don't like a stair-step higher market, and I don't like a stair-step lower market over a long period of time. Like that 5, 7, 9 days, like I said, to make the lows, that's 5 days too much.
Yeah.
You know what I mean? And the 6 days up is probably 3 days, 4 days too much. You know what I mean? I like a little bit, buy them low, sell them high. Sell them high, buy them low,
Yeah. I agree. Biggest movers of the group here to the upside, it's all tech stocks, or at least mostly there. You got Teradyne in there. Intel was a huge mover. It's been super, super strong here. I mentioned some of these
new highs in there, right?
In Intel, something like that.
Yeah, 58 and change,
Yeah, they had a partnership
almost 59
with Tesla / SpaceX / one of the other companies that he has. And then you got kind of the second and third tier semiconductor stuff. Corning is in there, Coherence and Ciena, which just got added to the S&P 500. Monolithic Power is kind of in that group. You have like Lam Research, which is on the memory / production side of the semiconductors. SanDisk and Light are kind of the newer memory optical stuff that go into the semiconductor products. So that's been where you're seeing this huge choppy volatility really in those.
Ciena's another stock, it gets added, you would hope that the markets on the option side would be better. They're a couple of dollars
How
wide.
are you going to price an option on a stock that moves 10 to 20% a day?
Yeah.
What are you going to do? These markets will get better. Right now, there's just the news headlines, the kind of fervor that you have in pockets of markets. I mean, my options in SanDisk would be $10 wide if I was a market maker. We're lucky to have them $5 wide. They wouldn't be $5 wide if you were making markets. If you were making markets, they'd be $25 wide.
It depends on what the guy next to me's markets were.
That's true. And
if his were $20 wide, mine would be $19 wide.
Yeah.
Okay. If his were $15 wide, mine would be $14 wide. That's how it worked. It's all about competition.
Yeah. Of course.
Excellent, please.
On the downside, it was a lot of the stuff that has been flying to the upside. You have energy stocks in there. You have some of the material stocks like CF is in there. You had Palantir, which was very weak from the tech perspective.
Down about
I guess that's kind of
about
tied
6%.
It's got like an air of like a long war story to it.
Palantir?
Yeah.
Yeah, and I think there was an article about Michael Berry.
But that's been.
Yeah, it's dead. I mean, I know.
I don't even think he's even in those. Yeah.
But it went lower by 6% on an extremely strong day in the market.
It looked like duty.
Yeah.
And then when we look at the heat map, just the market as a whole here, it was a nice day.
Yeah.
A lot of
nice day for the bulls
across the board. But you see there are some glaring spots here. Tesla, Palantir, IBM, CRM, ServiceNow, like that service stock story has not gone away. APP is in there. Obviously the energy stocks are moving lower with the move in oil, but they've
had an exponential run to the upside. I mean,
but you didn't have a reversal in the story is really what I was kind of getting at.
Yes.
You still have really a lot of weakness and uncertainty in the service sector, Oracle basically unchanged, and, everything else kind of momentum moving, semis being the strongest of the group.
Very good, sir. You know what? Let's take a quick 90-second break. You want to?
Sure.
We'll take a quick 90-second break. We'll come back. We've got Confirm and Send right after this. We're back in 90 seconds. Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with Confirm and Send, Thursday, April 9th. Go. First slide, please.
Do it.
Are there any advantages or disadvantages in trading one GC contract versus 10/MGC contracts?
I mean, they're the same notional size.
10 versus 1. Or 1
10 versus 1. I mean, some people say commissions and fees will add up more on the MGC contracts. I think at this size, you're not really worried about, the $10 in commissions. These are going to move, one GC contract is what, $100 a point? So,
it's like 100 shares of stock versus 1,000 shares of stock. 10 of them would be 1,000 shares. I mean,
gold on a $10 move today is a $1,000 move. You're not worried about $10 in commissions. It's just not what you're thinking about. I will say one of the benefits, the advantages of the 10 contracts of MGC, and I've been doing this a lot with like NASDAQ and the Russell and the E-minis. If you're in kind of a mid-sized account, which I'll say is like, let's say the 100 to 200-ish.
You fancy.
You
a fancy hoe. Go ahead.
Sized account. 10 contracts of the MGC allows you to be a little bit more dynamic with your positioning. You can take, 2 contracts off.
You can ladder in. You can
ladder in, ladder out. If your max is one or the other, you're kind of stuck with one MGC. I mean, you could put on a short or with one GC contract. You put on a short MGC contract to scalp around that GC contract, but it's not as
you can still do it /MGC. Like if you did 2 or 3 /MGC contracts against a 10 delta option. You can make it a lot smaller. You can make it delta neutral, delta a little bit longer.
But I'm saying you can't do that. If
you can't. No, I trade /MGC over GC.
Yeah. So I think that's a huge advantage.
Yep. Yeah, and you don't have to go in one at a time. If you are a /GC type risk account, you can do 3, 4, 5 at one time. Give them 2 more, give them 2 more kind of thing. I don't know. I like to do it that way personally.
Is it possible to only sell premium and be profitable over the long term, or do you need to own stocks?
I don't think you need to own. I don't know. You know what I mean? Like you can do it any way you want. I mean, owning stocks takes a lot of buying power, and you just talked about $100,000 account. How much GLD can you buy in a stock in a $100,000 account? How much NVIDIA can you buy in a $100,000 account to make any significant difference to NVIDIA moving and stuff? So for me, I think you need to, and you don't have to just sell premium. You can buy premium if you like. I just think options provide leverage, and I think for most people that learn and embrace the leverage that options can give you and keep your size in check, it makes a $100,000 account, act like a $500,000 $1 million account, depending on the type of volatility you want in the account. And I think that's what you need to be successful. Buy premium, sell premium, get convexity, whatever you like.
Yeah.
A lot easier than just trying to pick a stock going higher or pick a stock that's going lower, just trading stock.
Yeah. I think it's silly to just kind of to only look at, I'm only going to do this. It's like saying, I'm only going to shoot 3-pointers. Like, but why? Like, why do you, what?
Especially if you see the lane open for your basketball analogy and you see something there that you could take advantage of.
Yeah, it just like,
shorter term.
I think everybody's trying to look for like the easy free money. Like, I'm just going to do this and.
News bulletin, there is none.
Yeah,
there is no income trade. There is no free money trade. There are strategies that could take advantage of a shorter time frame and a longer time frame, but there are no free money. There is no free money trade.
If you're in the large size accounts, like we had Rob and Maria on, where you have a lot more flexibility and the returns relative to the capital that you have are going to be, it's a big number. It's a lower percentage, obviously, because that scales to everybody.
Yeah, everything's relative.
The numbers get bigger with more capital. And I think that allows you more of an opportunity to do this, like I'm just going to sell ES puts, or I'm just going to sell SPX wide put spreads or whatever. And just that's going to be just it.
Yep.
But for the 99% that are in kind of the middle of that range, I think you have to have a wider toolbox than just like one thing.
Agree. If markets had a 50% chance of going higher or lower on any given day, what role does velocity of risk play?
So the skew just kind of tells you where markets are pricing the most risk. So the skew is the side where it's more expensive to both speculate or hedge on that directional move. And so it doesn't necessarily mean it's going to go that way. I mean, over time, when you look at markets, they have a positive drift. It's 53 to 47%, I think, is the historical like drift. So that is there, but I don't think anybody trades on a 15-year time frame. I think in general, just skew and the velocity of risk kind of tells you where market participants are pricing in the move.
Perfect. Totally agree with you. Next one, please.
What are the pros and cons between a jade lizard and a naked putty?
I'll go with the naked put first. Completely one directional, bullish, because you're selling the put. If you were buying the put, it would be bearish, but we're selling the put here. So a naked put. So completely bullish, directionally sensitive, volatility sensitive. If volatility is high on entry, you're going to get a better price at. Skew sensitive. If you have skew to the downside, like an SPY or Qs or something like that, you're going to further out of the money puts are going to be a higher price than further out of the money calls. So you've got that advantage. That's really, and capital, it's a trade that takes a lot of capital typically, even in a margin account. So those are the kind of the pros and cons of a naked put. Jade lizard, very similar trade. Let's just assume that you're doing it from the long side to match the put. You're selling a naked put, so it's exactly the same there for a moment, and then you're selling a call spread either at or just outside or just at or above the market. And you're collecting, if it's a $5 wide call spread, you're collecting over $5 or thereabout, $4.50, $5, something like that. And if it's a wider spread, $10 wide, you're selling a put that's a little bit closer. It typically has a higher probability of success because you have no risk to the upside, just like the naked put. If you're doing it for more than the call spread, the width of the call spread, it gives you a little bit more omnidirectional delta. You can it won't move as fast as the naked put. So naked put's going to have more instant gratification, instant pain. I kind of prefer the jade lizard over the naked put on a standalone trade, especially in individual stocks. I kind of like a naked put in like an SPY or Qs over a jade lizard. So it really kind of depends on what you like. But they both are very similar trades. Both are high probability trades if you put them on the way we do, around the 30-ish delta.
Very good.
Let's take a quick 90-second break and come back. Even the S&Ps have really had about a 4-5 handle move all morning since we've been on the show. We'll be back in 90 seconds. We're sitting down 17 right now. We've got trades from the research team next. We're back in 90 seconds.
Beautiful.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with trades from the research team.
Bring them on.
Who's our first researcher? You're a little premature with your fin.
Oh, he was enjoying
the music.
He was enjoying some nice acapella.
Yeah. I was just trying to pump up the vibe. You know?
I got it. Yeah, nice. What's up, Shark? How are you?
Is this how it happens? The criticism.
Is this how it happens?
Father to son criticism. It happens to me
Is
as well.
that what happens?
Yeah. Just making sure it happens to other people.
You see, I'm a little older, and he's a little older, so I can kind of, when you're younger, your dad's still, kind of.
We do this segment
You
just
still have some. You think he's like no mistakes? The guy.
Yeah, no mistakes, and they're just like they're in better shape physically and mentally. They can hear and see and stuff. Like he can't intimidate him. He can't even freaking hear. Okay. If I don't show him my the way my lips are moving, he can't see. He's like.
What'd you say?
So it's not it's not as scary when they're blind and deaf and fat.
I see. Okay.
I'm just kidding.
That's okay. It's all right. I can take it. I can take it. I've been all of those things at one time. We only do this show for one reason.
Yeah.
Proof of life for your father to see you. Because you don't call him enough, you don't write him enough. Now, your mom you do. Your mom you do. No,
you gotta make sure you call him on the down days. That's when he's really.
You ever heard the saying? If you
put him into Palantir, he's really.
Your dad, if you kind of don't call, whatever, disappoint your dad, it's whatever. Your mom, on the other hand, now that's kind of bad. Okay.
Yeah,
that's really bad.
What do you got for us? I'm just gonna
Indian
go there.
mom and Italian mom, they're on the same,
All moms are the same.
They're up on the hierarchy a little bit.
Yeah, for sure. I would do exactly what you're doing, but I'm not in your shoes, so I can make fun of you.
Yeah.
Makes for a great show.
I call dad if I need help.
Right.
It's good.
He
used to tell me. Go
ahead.
The first call, always to him.
Yeah.
First call.
But you didn't do it.
A lot of the times.
A lot of the times? Not all
a lot
the
of the
time.
times. I mean, there were multiple times I was in precarious situations in my life, so.
Go ahead. What do you got for us, Hill? We don't want to talk about his precarious situation. Coin.
Well, they got expunged. I'm a good boy.
That's a story.
Come on. I did my community service. It's all right.
Paid your dues.
Yeah, I paid my dues.
Everything has earnings. You're going to run into earnings here, too. Coin, May 14th.
Right. I went on the watch list and I tried to see what does not have earnings. So when does this have earnings?
What are you trying to look for?
Coinbase.
Earnings of May 14th.
And this is May 15th. Oh, Tony's going to make it on one day. He's
right. These are earnings on the 15th.
Yeah.
I mean, the expiration on the 15th. Good job. Yeah, I would agree with you.
Okay.
I like
Coinbase. Yeah, no, I know he's right. I was struggling to find. So
yeah, I hear you. I don't.
So because the call side are only $10 strikes on the 36 days out, that's $10 wide. So I went $10 wide on the puts as well for an Iron Condor. They're expanding into Australia. They got some Australia licensure done. That's where their stock has been pretty volatile over the past few days.
Okay.
It's neutral. I don't think it's up only a little bit pre-market. So nice Iron Condor, 343 credit. Nice and simple neutral trade. See what happens.
I like it. And to the point of earnings obviously will keep volatility bid, but it doesn't mean that extrinsic value doesn't decay. You're hopefully going to be out of this trade at 25 or 50% of the max profit in the next 20-ish days. When you get to that,
Or hopefully you can take it earlier. I mean, you don't have to take the 50%. You can take the 25%. Yeah, sure. Totally agree with you.
So, I like it.
I'll take it off earlier. My risk profile has been going down a little bit.
Oh no, you've been tainted. But this is a down move. Yeah. Markets go down, okay?
I know they go down.
They go down. We've been blessed, but they go down, and this is opportunity.
Hashtag blessed.
Blessed. Yeah.
Yeah. Who's our next researcher?
That was good. Where did you learn that?
I gave you the hashtag.
Where did you learn that? That was good. Oh my god.
Somebody else is good. That's right, my man. What's going on with you, Gad?
Everything's good.
Everything is good, isn't it? You always got a smile on your face, man.
Always have a smile.
Good for you.
Yeah.
Good for you. That's right.
Always
Karate man bleed on the inside.
We're going to see if he has that smile in 10 years like the rest of us. We're going to see. We're going to come back. We're going to put this up. We're going to be like, Dad, look at you. Look at how
before and after.
Yeah. And you get like this.
Yeah, you get gray. Yeah.
But he looks good. Oh my God. He looks so good, man.
You know.
Always I ask myself, what?
See, I should start doing a show with Gad.
Brown.
What's your secrets of looking good?
Genetics, man. You can't do it. I mean, it really has nothing to do with you. It really
I asked the same question to Kai because, like, when you look into the video 10 years ago,
he's the same.
It's the same.
Yeah.
It's like he didn't gain weight.
No,
he's
been consistent.
I was like,
right. Well, he's a kept man, so he has to stay in good shape and look good. Otherwise, the wife will get rid of him. That's what it comes down to. Yeah.
I see.
Yeah.
Okay.
Yeah. All right, what do you got for us, Gad?
I got oil.
Oof. USO. Go.
USO.
Okay.
So this is a simple trade. So I'm saying the price will go below 123, or we stay between 123 to 118 in 36 days. So, and during these geopolitical intentions, I think it's a good trade. That's my explanations.
What options are you using here? The May 15th options?
Yeah,
May
15th.
May 15th.
May 15th.
That's just a typo. I just want to make sure that everybody else knows.
That's typo, sorry.
Yeah, that's okay. And USO is up around $3 here. Did you adjust your pricing?
Yeah.
You did? Okay, yeah, because the 1823 right now would be all in the money.
Yeah.
Okay, so I understand.
It was an at-the-money call spread yesterday.
Yes. Okay, so you have to move up the strikes a little bit.
Yeah. And I believe a lot of it. You go down. That's my in 36 days between this range of price.
I don't hate this, and I actually did. I went on a little rant about USO yesterday.
Okay.
The basket of USO. So USO, it's a ETF that tracks the futures, but it's not just the front futures. So if you saw yesterday, USO was down like 10 or 12%. Oil futures, the front contract was down like 17, 18, 19%.
Yeah.
And that's because of the basket that's made of. So you're long, a combination of front and back month futures. And so when that rolls, it actually kind of keeps a bid on USO. So I think this is an interesting trade.
It keeps a bid when we have this kind of vol curve that we have.
Yes. When you're in backwardation because you're selling
99, you're selling 100 and you're buying 90, just for argument's sakes.
Yeah.
For the future when you roll
it. It's an 8-point backwardation. So I like it.
Yeah.
All right. Good job. Good job, Eddie, my friend. Nice work. Who is our next researcher? The fountain of youth himself. My man Kai.
What's up?
What's up? How are you?
I'm doing great. How are you?
Kai's going back to videos from 10 years ago. Maybe they can find it. Can you still do that kick that you did early on?
Oh, yeah. I remember that.
Remember that? We did a video where you were modeling some clothes or something like that. It was one of the darker moments at Tasty Live history here, but you were modeling some clothes and you did a nice leg kick. You still got that?
Nothing was darker than the Dark Side of the Moon picture that floats around. I forget the anniversary of that.
I think it just passed.
Did it just pass?
I think so.
There are so many fake videos like generated by AI showing things moving. On the surface.
Yeah. I get fooled by those videos.
Oh no, I wasn't thinking about that moon. I was thinking about when he mooned the camera.
I mooned the market. Yes, and was the camera.
Yeah. Why did you do that? Was that like a big?
We were extremely short, and markets were making all-time highs and stuff like that. So I was just trying to do something.
How is that?
Spook the market.
How is that different than the other 10 years?
No different. But my partner was laying it out there pretty good.
Ooh.
Yeah.
Probably a different product.
Yeah.
Yes.
Years ago.
Oh, I thought Josh was about to pull it up on the screen.
No. We don't want to pull it up or down.
Yeah.
What do you got for us, Kai? XLE?
Yeah, it's energy. It's a little bit better for XLE right now.
Yeah.
Better bid and ask spread, better IV. People are trading energy right now. So I'm not bullish or bearish. Probably slightly bullish, but I want to stay neutral. Who knows? Good IV, decent premium. I just want to take it off as soon as possible, probably in 2 weeks.
Yeah. Hopefully at a profit, hopefully 25 to 50% or something like that. This is the kind of trade I did on option trades yesterday, although I did an SPY and I did it with an iron condor, but I just went to the old highs, to the old lows. I called it like a breather trade. I've taken a lot of positions off, but let me just put this on and see if the market can beat me, because XLE over the last month is in a very wide range, but it really is in the middle of its most recent wide range for the last 2 months, if you're looking at that kind of thing.
Right.
So I get it. 54 would bring you back to, April-ish, March, April numbers, and then if you get all the way up to 63 or so, it'd be like near new highs.
Yeah.
So you're at the old highs and lows. I like it. I like it. Good IV rank.
A little bit less risky than the individual stock XOM or.
It's just such a crappy credit. You know what I mean? It's hard for.
It's an ETF.
Yeah. So I might want to pull it in a couple of strikes to get a little bit more, but I don't know.
Oh, okay.
I get you.
We'll take a look.
All right. Cool. Good job. Right?
Yeah, good job, Bose.
All right. Our next research.
What do you want me to say? Bad job?
No, I don't want you to say anything like that. I got to put my ear in. I forgot. I'm so sorry.
So behind.
What's up, young lady? How are you?
Oh, amazing. How are you guys?
Doing well. Thank you for asking.
Amazing.
Appreciate it.
Amazing.
What do you got for us today?
Okay, well, we can hop right in. So today I'm looking at
I wanted to hear
CrowdStrike.
what you were going to ask.
Oh yeah, what were we going to ask? I'm sorry.
Well, I had a question. Okay, because I got radiated because my partner got a radium clock that turned out to be radioactive, and we tested it with a Geiger counter, and I'm like, okay, we should probably figure out how to store this thing. But the clock was from 1979. And I'm like, I probably know people who might have had this just growing up with it next to their bedstand or whatever.
Yeah, you see, you got to understand something. In 79, we were playing with molten lava as games for kids that were 10, 12 years old.
Lawn darts.
I mean, where we would throw them up in the air and actually try
My dad would
to
play
hit
with
people.
asbestos.
Yeah.
That was a fun thing. His dad would come home with he was a machinist, so he'd come home with asbestos and they'd like play with it. And I'm like, I don't know how anyone's alive, but
we would break open thermometers and play with the mercury. I mean, it was a different time.
That's why they're all messed up right now.
Yeah.
They're all,
And look at us. We're
brain
still
damaged.
alive, running the world, that kind of thing.
I think the most important part of that story was the fact that you had the tester for the radiation.
Yes.
I don't
know if I can find my Geiger counter in the garage right now.
Get your Geiger counter. It's like next to the spatula, or
we have the Geiger counter. Well, we have uranium glass, and that was fine. And then we got the radium clock, and we're like, all right, we should probably see if this is radioactive. And I was on a call with the Deer research team, and I put it right on the clock, and it started going crazy. And we're like, okay, we should probably figure out where to.
So
put this
did
in
you
a
take
case
it
or
apart?
something. That is the one thing you do not do that, because the face of the clock, the radium's in the paint, right? They use it for the dials and for the numbers. And the face of the clock keeps all that radioactive dust in. So if you take the face off, then it's a problem. So do not take it apart.
What do you do with said product? Do you keep it?
You put it under blacklight and it glows, and then you try really, really hard not to drop it.
Fair enough.
Okay, perfect.
That's from 79.
Can you
I
bring that in and
people.
test this space? There's a lot of things. Now that I'm looking at it.
Yeah, can you bring the Geiger counter?
Yeah,
in?
there's
I would
a lot
like
of
to see it.
Yeah, that could be
stuff in here.
fun. You'd be amazed at what's radioactive.
Yeah, I'll use that as my workers' comp when it gives me brain damage from this place.
There we go. Before we
I'll bring it right in. You got it.
Before we run out of time, what do you got for us?
I got CrowdStrike. So kind of, I'm looking at this again. I think I would actually pull it out a strike. So I might adjust this from where it's at, because it's been very, very choppy the last couple of days, and it's had a pretty significant run up, especially in April. But I was looking at CrowdStrike, IV rank of 44. This is the one other single stock in the lineup. So this one, I mean, the IV index is like 47 in the 36-day contract. So it seems pretty juicy. Didn't really have a strong directional assumption here. I feel like a lot of, equities have been very choppy. So that's kind of what I've been kind of, positioning around. However, with this one, the 17 strikes and the 16 strikes kind of closer to the expected range are also quite juicy. This is actually the 20 delta strikes. It's down like maybe $2 this morning. So this is with the 20 delta strikes. I like the credit to buying power ratio, but I like the pops of the further out a little bit more. I feel like you could do either one, but this one is the 380-40 short strikes, $10 wide, collects $375 in credit for $625 in buying power, pulling the strikes out one, and then going $10 wide bumps the pop to 67%. Thinking about it a little more, that's probably what I would do with this, just because again, it has been a lot of price volatility the past couple days, but I feel like you could do either one.
I agree with you. It's been, it was attacked by the Anthropic new update, and then now it's back in play because we need it to police the AI as well. So I like this story. I will give you, before we go, D-Mart in the chat is saying, as a radiation safety tech for 13 years, he is telling you the clock is harmless.
Oh, beautiful.
Thank God.
So I'm just telling my peeps. My peeps are here.
We did a little chat GPT and came to find that out because the Geiger counter, of course, that we got is for like environmental radiation, which is different than like a radioactive object. So we're learning a lot about detectors in the Spina household.
Okay.
It's been fun, yeah.
You can learn a lot with a black light too. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell.
Oh, man.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20, because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Nicky, we are back, son. We got about a minute before the market opens here. All quiet right now. Even the S&P's down 12. That's about as high as they've been since we've been on the show. NASDAQ down 3. You could see the high-low for the overnight session muted from what we've been used to. Volatility hanging in there, up 21 cents to 22.12 in the middle of its range right now. But I think it's staying bid. At least that's what it feels like. Bonds are in by 4 ticks. Bitcoin 71 and change hasn't moved. Oil 99. You can see it touched 100 just a moment ago, down to about 96, but it's been sitting right around here for most of the morning. Gold basically unchanged. You got pretty much an unchanged market. If you didn't like what you had on yesterday, you got another reset day today. You can do what you want. You know what I mean? If you missed something that you didn't take advantage of, it's probably right there from the close yesterday. If you have too much risk on something, you can take a look at that now. So hopefully you did your homework last night, took a look at your positions and kind of like what you have and can go from there. or don't like what you have.
Yeah, I have a feeling today is going to be a lot less active than yesterday for me.
Okay, all right.
Just because,
well, it's going to be a lot less active right on the opening. I mean, you did a plethora of trades. I mean, almost 40, 50 trades right on the opening yesterday. Interesting little opening here, basically unchanged.
Yes.
We'll take a look at some of these markets that are opening in just a minute. Give it some time to open here. We'll see what's happening around the world. Let's take a look at even the S&Ps. They really haven't moved. Let's go to some individual stocks and see what's happening. We'll go to
Amazon up $2 and change.
What is?
Amazon.
Okay.
It's had a huge move. I mean, it's up like $7, $8 yesterday.
Your SanDisk that you talked about is up $40. That's your big mover, a 5% move. Your Light, which you mentioned too, is up $32. Unfortunately, both of these don't have great option markets. Your Meta that you mentioned up 14, STX up 7, MU up 6. I mean, you hear these numbers, you think the market would be up huge here. There's got to be something on the other side. Marvell up 4, Amazon up 3. Oil-related stocks are up. AMD up $2 or so. Let's see what the downside is. Carvana down 8, Lilly down 7, Microsoft, what a pig, down 3, but I'm out there. Palantir continues its move. It was down big yesterday. You can see volatility upticking here, 7.5% over the last 5 days with Palantir going lower. Google down 2, ARM down around 1.5 or so. You did a CL trade earlier this morning, and now you just did your Delta Airlines, which had
that
earnings,
was
right?
We did a call ratio, and then I put a strangle on top.
Basically unchanged.
We did
on
into
Delta
earnings. It was a good trade. It took a couple bucks out of it. But just the stock was up. It was another one of the stocks where it was up like $6 or $7 at the start of the session and closed up 2. Like it was like it felt like it was a selling opportunity,
right?
Which a lot of stocks kind of felt that way.
You're talking about yesterday's move, right?
From yesterday's move, yeah. I think I'm gonna sell some putties in Palantir.
$15 wide iron condor in SPX, which was trading around $4.75 yesterday, is trading around $3.75 today. Just showing you how much volatility has moved here. I think you have to go in a strike to the 68 even. Sorry, you got $10 wide. Be careful at over 68.10. You got $10 wide strikes here, so you're not able to go $15 wide. You'd have to go $20 wide if you were looking to do that, and then you'd have to adjust your downside too. Trading for around $5 and change. Do you interested in doing something there?
I don't think so. I mean, we got so spoiled with the
large implied volatility.
You just outlined it. I mean, do you want to sell it $1 lower than what we've been selling it every time for the last couple months? Scalping out those hoodie puts.
Oh, look.
Calls, I'm sorry.
Yes,
I'm long the stock. I sold the calls at $297 yesterday and bought them at $169 today. I think it's just more of the same. Like you're
hood down $1, so you're really just taking the profits on the side that you didn't want to take the profits on, right? You'd like to
you hope the stock goes up, but
So now you're just leaning long stock.
Yeah.
Gotcha. Taking a little delta risk there, right?
Yeah.
Okay.
And this Meta move.
Surprising, at least for me. Meta
I had the 600 strike puts, and I was like, when the stock was up like $20, I sold the 675 calls, turned it into a strangle. I thought I was a genius, and then the stock rallied $30 more. If you remember, I don't know if I did it with you, but we bought a Meta Leap.
I'm not sure.
I might have done it. Maybe I did it with Mike while you were out or something like that. But I bought the 750 call in January of next year.
Okay.
200 days out in time. I think we had a discussion about a leveraged way to get long some of these stocks. Into that up move, I sold the 800 strike call against it. So I bought the call at $36, which is $3,600. I sold the 800 against it for 34 and change. So I basically have a 50-point wide call spread a year out in time for $1, $2.
Okay.
A cheapie. It's
a cheapie.
Yeah, but that call moved. The trade's up $1,000.
Yeah, no.
The trade is up. The 750 is marked at $46.
Perfect. Yeah, no, nothing wrong with that. I mean, intelligent trade.
But now you just got to sit.
Yeah,
that's a lottery.
It's definitely a long-term trade.
Yeah, it's a lottery ticket.
It's a lottery.
It's an interesting way to kind of play the short-term moves. Like you get a big move in Meta, and you want to be long, and you don't want to buy 5 shares of stock. Buying that option, there's a lot more risk to it because if it expires out of the money, you lose that full notional value. But on a $20 move, instead of making $100, you're making $1,000.
Yeah.
Like if you're trying to play for that kind of bounce back and the duration that you have on it and your vol exposure is relatively low, because you're not really buying volatility because it's 200 days out in time.
Mm-hmm.
It's an interesting way to look at markets. You can do it, it's capital intensive, obviously, but.
So let's talk markets for a quick second. You've got you've got oil up around $5, up around 5% after a big move lower yesterday. Has oil kind of lost some of its pressure on the market itself? You mean the S&P is basically unchanged after a big move to the upside. I mean, if I told you that if we closed and I said oil was going to be up $5 tomorrow, you probably have a lot more short delta than you had right now in the market.
Yes, but I think we've kind of digested it. Like we're
anesthetized to it. I hope that's not.
No, I just think that the market is saying oil's going to be high. It's not going to be. It's going to be uncomfortable. It's not going to be like doomsday high. I think is what the market is saying.
I remember when 100 was doomsday.
Inflation adjusted, it's like 75.
Inflation adjusted, it's like free.
Yeah, I mean it's a discount.
You can't play that game. Come on, you know that.
Joking.
That's a hard one to do. Yes, no, I know. No, you're joking.
Do I step in front of the Tesla train?
I don't think you'd be the first one. Tesla basically unchanged here, but as you could see on its lows when the market was rebounding and collecting about half of its move, making up for half of its move lower, that would put Tesla closer to 380 than 340 where it sits right now. IV rank of 18 is meh, as you could say, mid. April 22nd is earnings. I don't hate the play.
Do you do a put or do you do a diagonal spread?
I mean, diagonal would be fine. Your only problem is where you're going to go, May, June?
Yeah. I was thinking like the 350, 375, that's $16.
Sure, there's no vol differential between the two. Slightly higher in May, not really. I mean, with the markets being a little bit wider, you're probably going to give that up. I just think you can't. I don't think you should be going May, April. That's all I would say. So.
Yeah. All right.
So you did that $16 and change. You did. Let's put it up there on the board while we have a minute here. Is the market really not moving that much? You went in June. You bought the 350 calls at the money, although just outside the money. You notice that the delta is basically 50 with call skew there. So let's call it at the money. You're buying the 350 with 70 days to go, and you're in May, and you're selling the 320s. Now I'm sorry.
The 350, 375.
I was looking at your TSM trade. I apologize.
I just rolled up puts there.
Yeah, I'll get to that. I'm so sorry. So you did this right here for around $6.50 some odd.
$16.
What'd I say?
6.
Okay, I'm gonna do it in English this time. I'll start all over again. You're buying the June with 70 days to go. You're selling the May. You're doing this $25 wide spread for around $16.50. I think you did $16.55. So defined risk trade. It has 20 deltas to it. So it does have delta risk to it. It does have positive theta decay, which is part of our mechanics that we like to have. So you've got delta risk, positive theta decay. There's no pop on this trade because there's no way of telling what volatility is going to do in each one of these months. But I can tell you that it's about a 60-ish probability of success just off the top of my head.
Yeah, 50, 60, because you have a little bit of time decay on your side here.
And what'd you do in TSM? It looks like
I just rolled up puts. I mean, that stock has moved $35, it feels like.
TSM has been a mover to the upside, closer to its highs than its lows for sure.
Yeah.
Even the S&P is down 7, volatility up 15 cents.
What else here? Anything we can put on new position wise? Let's see what's on the downside here.
Well, I like to take a look at what's volatility has expanded over the last 5 days, and that would be your ETFs would be one of those. Any one of the ETFs, SPYs, Qs, SPX, anything like that. You can do a 5-day change and click on it and get from high to low, and take a look at some of the stocks that you trade on the left-hand side. Maybe a firm, AFRM, if you're interested in that. IV rank of 51. Stock is actually down $1 right now, kind of on its butt. Hasn't really had any movement. Be something we can look at.
I was looking at kind of gross, but
kind of gross, did you say?
Yeah, because I traded AXP, which got caught up in the Anthropic AI.
Not the greatest markets in a firm. Sorry, go ahead.
So I was looking at MasterCard, which is,
MasterCard.
Similar. Yeah, but the markets stink there. I was just going through, so I was looking at the.
I just did the same thing in a firm.
I was looking at the S&P 100 list. It's stuff that's moving to the downside, and it's one of the biggest movers to the downside. Like IBM is in there, but IBM markets have not been great.
They have not been great, and sometimes I'll get an email from people asking, "What do I mean by not that great markets?" Yeah. Well, you could take a look at here. You can go to open interest, and you'll see a couple of hundred or thousands on some lines. You might say, "Okay, there's something to do here." And what we mean by the market stinking here is just the option markets, because that's where we're going. Yeah. If you're trading stock is even wide relative for a $240 stock. You would think it would have, 2-3 cent wide markets, and it has 20 cent wide markets. But these options with a 20 cent, remember, options are just priced off of stock. So if there's a 20 cent market on the stock, maybe there's a 30 cent. You would expect a 30 cent wide market on the options, 40 cent wide option on the market. Well, you've got almost dollar plus wide markets on the options here. That's what we mean when markets are just stinky or crappy on the option side.
Yeah.
Basically unchanged across the board here. Bitcoin 7,100, Ethereum 21 and change, Ethereum down 2%, Bitcoin down around 0.5%. Oil up $5, 99 and change. Gold up 21, basically unchanged. Silver doing the opposite, down 10 cents. Nat gas continues to go lower. Corn, wheat, and soybeans have all caught a small little bid. The yen, as you would expect, is down small again.
Why do you say that? Because I'm long it?
Yeah, just because it goes down all the time.
Because it goes down every single day.
Right. It's an untradeable product in my mind. Taking a look at some of the other futures across the board, it really is a reset day. There's really nothing going on. Pound catching a little bit of a bid. I would expect the euro to be up too. It is. That means the dollar would be a little bit weaker. Just like yesterday, Nasdaq just caught a bid. It's up 24. You ready to take a quick 90-second break?
Yeah, I'm gonna try and put on a strangle in Apple.
Oh, that was easy.
Yeah, I don't have a position on in there. I'm just trying to find stuff that I don't have a position on in, that I didn't recently close something in, that has some high volatility. And that's just, I was like, same thing with Palantir.
Yep. Totally agree. NASDAQ up 27, even the S&P's unchanged. Russell up 40 cents, Dow down $1, volatility up 11, oil up $5, and nobody cares. We're going to take a quick 90-second break. We're going to come back. We've got more trades. This time we're going to try to find 3 of them, bullish, bearish, and a neutral for Johnny trades. That's the people that, what did you say a small account was? 100,000 to 200,000?
Oh, I said mid-size.
I'm just kidding you. Small accounts.
Mid to large.
Under $25,000. Looking for those people who have patent day trading issues. Look at those people who don't want to put a lot of capital at work. Maybe under $1,000 in capital. At least we'll try that kind of window. We'll be back with that in 90 seconds. It's Tasty Live. This next segment is for you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back back, son, and you know what that means. Time for a little bit more Tasty Live with, well, you heard the music, Johnny
Trades.
Before we do, let's just take a quick look at the market, okay? Sure. We haven't had too much movement as basically the EMEA S&Ps, the NASDAQ, the Russell, and the Dow are all unchanged. Volatility has been sitting up 15 cents, and bonds have been down 4, sitting right around here, relative tight range all day long. Bitcoin hasn't moved. Ethereum hasn't moved off of its recent prices for the opening for the last 20 minutes or so. Oil's been your mover, and it's been your mover to the upside, up 560. It was closer to, when I woke up, it was closer to 97, 98, worked its way to 99, now over 100 for the first time, as you can see here recently. Gold up $16, hasn't moved too much, although we've had almost a $100 move here, top to bottom from last night. I'm talking about just since we've been on the show. So we've had a pretty much unchanged market with oil catching a bid. I'm impressed by the market's resilience.
Yeah.
But I'm not buying into it at this minute.
Yeah, I agree with that.
Which means we're going to have a face ripper. I'm just kidding. I have no idea.
Good.
You cost me money by not putting on the SPX trade, but that doesn't mean anything because that's not this trade right now. Right now, we're looking at Johnny trades. Where are you going to go for bullish, bearish, neutral trade in accounts under $25,000? At least we're specializing that for you. Go.
We have a pretty mixed day here in the Johnny portfolio. So we've got a couple positions working. We bought the dip in Apple yesterday. What was the 7th? 2 days ago. So that was a nice one. We've got some short premium in GM, got some long delta in gold. We're wrapped around a DraftKings covered call that we have. We've rolled this call a number of times, so that's been a nice little trade. We have MOS, which is another stock where we sold a put with the potential to wheel into stock. We're like right at the money here. It's actually a small winner despite being in the money. You got some short delta in Intel. We got some long delta in Nike, some neutral delta in Netflix. The Qs, we have a put butterfly that we legged into, a quote-unquote risk-free butterfly. We've got some neutral delta in SPY, a little bit of short delta in USO. So we're kind of like all over the place here, which is good. Some things working, some things not. We took off some positions the other day, so we're pretty freed up here. I was thinking one that kind of stuck out to me was Amazon. So Amazon, we've had a nice move. We're back to kind of the middle of where it's been trading. It's gone pretty much nowhere for about a year. We're right in the middle of the range. What do you think about like just a delta neutral iron condor here, maybe $10 wide? It does have earnings coming up in May, just like everything else. But I think with volatility here, got a 58 IV rank. I think it warrants something.
It fits to what I said yesterday and feel today too. Volatility's bid, although it's only up 19 cents right now. Everything's a stock like Amazon, right in the middle of its most expected move. I don't have a directional bias one way or the other. Doing both sides and having the stock kind of beat me keeps me engaged. I probably would look to reduce my size. I know we're doing this for Johnny trades. So, you know, you're a one lot trader. You got to put just one contract on. I'm with you.
Yeah.
I'm with you.
So I like to go around the 20 delta here. So I'm going to go to the 205, 195 on the downside. So it's $10 wide, 250, 260 on the upside, $10 wide there. So you got a net credit of $3.20. When we look at the analysis mode here, you can change this to the at expiration because this is just a binary trade. So
how'd you do that? You went real quick for everybody. How'd you do that? What'd you click on?
The analysis mode. So you go to curve. Click the curve, you go to analysis, and then you can go to at expiration. This is your Theo chart. So, so here, hold on.
Sorry to make you do this. I apologize. You weren't ready for it.
It's okay. So we have the analysis mode here. One of the things that you can do here with the Theo clicked here, which is this button on the zones. So you can adjust time. So this kind of gives you an idea of like passage of time, how much that's going to affect your position. If you do get a little bit of a vol contraction, you can see all those things kind of changing dynamically throughout the trade. Basically tells you, what this position might look like from a P&L standpoint based on a number of different factors here. And so you can change all those metrics as you go by. But with an iron condor, it's kind of self-explanatory. If you stay in this range, you're in a good spot here over the next 30 some odd days. So What say you?
I'm in. I agree with you.
All right. So we're going to try and get filled here.
Keeping your buying power in check. This is a trade that really doesn't have any delta to it one way or the other, right?
Yep. So we're in. We did that at 318.
Awesome. If you push that through, I'll send it through to the world.
So we got that position on Amazon. The other stock I was thinking about from a short position.
That's a classic iron condor, by the way, collecting 1/3 the width of the strikes, $3, $10 wide. You got collected
pop.
318.
Your pop is going to be somewhere between 60 and 70%, depending on the credit that you get. It's very cookie cutter. We get that question all the time. Like, where do you find this $3, this magical 1/3 the width? It's pretty much, if you go to the 20 to 25 delta for the short option in a $200 stock or a $100 stock, and you go, $5 or $10 wide, it's basically across the board. If you go to those deltas, it's going to be 1/3 the width of the strikes. And a lower volatility underlying, you're going to be much closer at the money. On a higher volatility underlying, you're going to be further out of the money. That's basically it.
That's it. That's it in a nutshell.
Yep. So from a short position, I kind of like Ryan's perspective yesterday, and I kind of hold the same belief of rates kind of staying where they are, if not maybe going a little bit higher. But I think the move in bonds was a little too quick.
Okay.
I think IWM as a short position traditionally is more affected by changes in rates. If rates stay high or go higher, you typically see small caps kind of weaker relative. So I'm thinking about some short delta in IWM. Would you go with a short call spread, or would you do a diagonal spread? What's your perspective here?
I think in a smaller size account, you need the convexity of a diagonal spread. You just put on a trade that has no convexity to it. You're just trying to take advantage of no movement or both-sided movement kind of thing. So I think that's the way you should play it. That would be my suggestion.
I agree with you. So I'm going to go with a put diagonal spread. I'm going to do this with a little added duration here. So I'm going to go June, buy my 40 delta option. So we'll call it the 255.
Okay.
And then we'll go in May and sell the 20 delta, 242. So you have a 13-point wide diagonal spread here that'll trade around $5.63. So it's a high potential upside trade here. So again, with the analysis mode, so this is a trade where you do have a variance here, and it's via the different expirations that you have. So there's a lot that can happen with this trade, but just to kind of show the risk profile here, it starts as a roughly 50-50 shot. I had it pushed out in time. We'll give this here. So this is our risk profile at the moment. As we push out in time here, you can see how your risk changes, and you'll see the P&L values on the upside and downside will change. And this is basically based on these little quadrants that you have. So from 167-ish to 267-ish to 280-ish, you got about $170 loss. If you get that same sort of downside, you have a $270 profit. It kind of tells you about the risk profile of this trade, because you're selling premium here that's decaying. This value is going to hold its value a little bit more. If you do have changes in volatility, that will affect some of this position. So you can see if you get a little bit of a vol crush in the back, maybe you get 1 or 2 points in the front or in the further out option, a couple more points in the closer expiration. This would kind of synthetically be an upside move. You expect like vol to contract with an upside move. You can see you get a little bit of a buffer. So even if you get a couple points to the upside, you could still be a scratch or maybe small profit on this trade. But you can see the convexity or asymmetry of the risk profile here. It's to the downside. You have more on a $10 move to the upside, you lose less than the $10 move to the downside that you make.
Perfect.
So that's why I kind of like these trades. I think it sets up well here. So we're going to try and get filled here. 560.
There you go.
562.
Perfect.
We're in.
I like it. And I like your story too.
Yes. So we got a little short delta in IWM, neutral in Amazon. I think an interesting spot we can go to is Palantir for this. bullish trade. We just did one on the opening bell here, but Palantir down near the lows.
Down $9 to $9.50 right now. You're catching a falling knife here.
Yes. Mm-hmm. I think an interesting way to do this.
Push that IWM trade through, please.
Oh, yes.
No worries. Interesting. Oil just made new highs, 170 and change, 160 right now. Even the S&Ps haven't moved. They're down 7.
So PLTR, I'm thinking May. I think we go with a broken wing butterfly, but I think we do a little bit more aggressive. And this kind of goes to the discussion we had on ratio spreads the other day, where we talked about the further out of the money ratio spread that you do for a very small credit is much more omnidirectional than the closer at the money ratio spread that you do for $1 or $2 in credit, depending on what your width is. It becomes more directional as your credit gets higher because you have more value to capture if the stock goes away from your spread. Whereas the cheapy broken wing butterfly, like I did in the Qs, where I did it at a 20-cent credit, you really want kind of a slow move towards your short strike. If I was to do that for $2, I kind of want the stock to just go away from my spread. It's more of like kind of a directional, omnidirectional trade, whereas the further out of the money options ratio is more of an omnidirectional / against you position. So I think here we kind of buy the dip, but in kind of a not too much buy the dip.
Okay, only the tip of the dip.
Yeah, thank you.
Is that what we're doing?
A couple of Omahas from
Okay.
So broken wing butterfly, I want to use about $1,000 up to $1,000. So I think you got to go $5 wide.
Yeah, I agree with you.
So you could see like this from a ratios perspective, and we can even show this like on the analysis mode. So this trade is more directional, right? You have a high profit potential to the upside. I know that the way we have this, $300 to the upside. If you were to move this to the 100, 105 and do this for $1 or which is actually a high credit. I mean, this is there's a lot of skew to the downside. It's much less, it's more omnidirectional, much less bullish of a trade. You can even see it in the delta. This has 7 deltas. You move this further up and you've got 25 deltas. So it tells you all you need to know about the trade. I'm thinking we go right at the expected move. We do our ratio, and then we just buy a wing here at the 105. Even if we move it to like the 100 strike.
Certainly not chasing it to the upside. Down $10 can't seem to catch itself a bid as the market basically is unchanged, hasn't moved.
I'm going to move this to the 100 strike. It's going to be about a 7 long delta position. Use about $800 in buying power. We got a juicy credit for a Johnny Trader account. Uses about $800 in buying power with $1.40 in credit. If you can capture, 70 or 80 cents out of that, it's a 10% return on capital just from capital outlay here. You got a little bit of a kicker into lows.
Yeah, I like it. Makes totally good sense. Now you just need the stock to cooperate with you eventually.
Let's see if we can get filled above the mid price here. I don't think so, but. Wanted that 145.
Pregnant pause here.
It's bouncing a little bit.
It's bouncing. Palantir down 960. Market P's down 8 and change. Palantir's markets are a little bit wide, not the.
Yeah, you got 20-cent wide markets. I mean, you could see it in the bid-ask spread here. It's 60, 70 cents wide here. We'll go to 135 and try and get filled. Come on. Torturing me.
That's okay. It's allowed.
I mean, the stock keeps going up. This way, now you want the penny and you miss the dime.
Yeah, I mean, it is moving by, there you go.
130. I got price improved. The GFY to you, market maker.
Push that through and I'll put it through. As we take a look at the market here.
So that one's going to be a 5 by $15 wide. The reason you're using $800 in buying power is because you have 15 points wide, you have a $5 wide put spread, so that reduces your risk to 1,000 minus the credit, which was $1.31.
Well said. 77% pop, high probability trade with a little bit of delta to it, as you were explaining just a moment ago. Even the S&P is down 5 or 6. I think it's a resilient market here. I would have expected to be down 25 or 26 with oil catching a bid at 175. So volatility, which was up 25 cents, is only up 15 cents right now. So volatility is not catching a bid. Bitcoin, NASDAQ down 33, even with something like Palantir down $10. Very resilient market right now. I think surprising if I told you oil was going to be flirting with 101. Maybe it's a little bit of a delayed reaction with the overall market. So keep everything going. Keep an eye on volatility. Volatility is actually only up 10 cents now. It's actually going down as oil goes a little bit higher. Market going a little bit lower. Really interesting market here right now. You're not in any way missing volatility with volatility at 22.
Not to cut you off, but I'm going to close out of this USO position. We put this on the 2nd. I think I did this with Mike.
Mm-hmm. Sure. Any good trade you did with Mike. Go ahead.
So it was a put diagonal spread. We bought the 130 in May and sold the 120 in the April expiration. Just to look at the market snapshots here. So if you right click on it and you go to the view market snapshots, it gives you this nice little pop out here. So we did this. Oil obviously has sold off and USO has sold off with it. So you're trading at, you've gotten about $6 or $7 of a downside move here. Volatility, when you look at IV rank, you've had a little bit of a contraction in volatility. So you got a IV rank of 62 versus 73-ish when we put the trade on. The actual implied volatility here went from 98 to 84. And this is a sort of long volatility trade. Your short front volatility, which has contracted significantly, and your long back month volatility, which has also come in a little bit. So it offsets some of the vol that you've benefited from in the short term. But you kind of hit all the things you needed. You needed a downside move. You need a vol contraction, or at least the combination of the two, which you would expect in something like oil, and you get it pretty quick. So we're going to take this off.
Very nice. You ready to take a quick 90-second break?
Let me fill this. See where I get.
You can fill it.
All right, 11.
Look at you filling things like cray.
Yeah, so that's what 223.
Beautiful.
For a Johnny.
Beautiful. Good job out of you.
Now, do it in $9 and make 223. In 7 days.
From your mouth to whoever's listening, right?
Yeah.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up?
Got a market measure. Good.
Very nice market measure, by the way. One you were quite impressed with. We'll be back in 90 seconds. It's Tasty Live.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with a market measure sponsored by our friends at the SIBO.
Yeah, there's some things moving. I see some people, because we were looking at ServiceNow.
We were looking at ServiceNow for the smaller size account.
Yeah.
You went into Palantir,
I went into Palantir instead.
Yeah. ServiceNow down $5.
At lows. But so yesterday, I had a put ratio spread on, and I did a lot of trades yesterday. I don't think I had time to comment on all of them. I'll try and go back and do that today.
Mm-hmm.
Long day, busy man, okay? Man of the people, busy man. But I bought the 80 strike puts against the put ratio. So I have the 190-80 butterfly on basically for free. Free butterfly right at the money. But I got some people saying they bought some puts yesterday. You bought those puts, good job out of you. If you didn't have a position on, you probably take that money and run. What do you do now, though?
Earnings April 22nd. ServiceNow has been a nice mover here. I personally would probably be playing it to the long side. I like your put ratio spread on. If you took it off yesterday,
I have it on, so I have it 30 days out. What do you do now?
36 days out?
Yeah.
Yeah. Which put spread do you have on? Let's take a look at it.
I'm long the 190-80 butterfly. It's done. It's over.
It's done.
You just got to hold it. I'm saying, what do you do now? Do you do a call ratio spread? Do you do a short put?
A call ratio spread?
Or a call diagonal spread, short put? I mean, you could sell the 75 puts at $1.80.
I'll give you this. We just did a ratio, a diagonal spread that had no volatility component to it. Here in May, you've got a 67% monthly implied volatility versus 60 in June. It certainly makes for a much better vol trade. Now, you do have earnings coming April 22nd, and that's probably why there's a little bit more volatility in May, but that's a lot of volatility, 7 handles. So if you want to take advantage of it that way and go with your long spread, you might.
I went into, because you have earnings.
You went shorter dated.
So I bought the May and sold the April 24th 15-day. So into earnings, diagonal spread.
So
$5, spent $5 on it.
Yeah, 508 is where you got filled. So let's look at the mechanics from the last trade he did. Basically the same 50-ish delta. I think it was 51 on the last trade you did. It's 49, exactly the same. Now you're doing a different time frame. You did 70 days before. You're going 36. There's going to be a lot more sensitivity to delta movement. This delta is going to grow a lot faster on any kind of move. So you bought the May 95 and you sold the 05 in the weekly options, correct? With 15 days to go.
So it's 10 points wide.
Got it. Okay, definitely a delta trade, positive theta decay, same probably a profit issue. You don't know what volatility to do. You're doing a 77 versus 60, but you're inside the earnings time frame now. We're just right there at the 24th, but the earnings coming at the 22nd.
I'm doing the same thing in Palantir.
You're probably going to hold this into earnings.
For sure, 100%.
Being equal.
Yeah.
$5 worth of risk.
And if we go lower at $5 in risk, I would not be opposed to selling the 70 strike puts or 60 strike puts or something like this. Like this trade over the next 3 weeks, if we go lower, you probably lose $50 to $100 on this position. Maybe.
That's right.
If we go higher, you have $150 to $200 in value
That's
that you
correct.
can make on this trade. It's exactly like what we looked at with the Johnny trade in IWM. You're buying the dip, but if we go $10 lower, you don't even think about this position because you're not out $5.
That is correct.
That is $3, $2.
That is correct. Good job out of you.
Okay.
Even the S&P is down 13. Oil off of its highs of $100.90, 134. Volatility up 14 cents. It's about as low as even the S&Ps have been since we've been on the show. And they're not, I mean, they're really, call this an inside day?
Yeah.
Can't call it anything else, right? At this point?
Yeah. Do we do anything in so Julia was looking at CrowdStrike.
CRWD, yes.
Stocks reversed the entire move it had yesterday.
Yeah, Crowd down 20. Doesn't tell you the whole story here. Crowd traded up to 427. It opened at 426. It's 405, down 21. Crowd not getting the love at all here. Volatility is real good at 55. IV rank, it's been expanding over the last couple of days. Earnings aren't until June 2nd. May options are a little bit wide. You got some trade here, but markets are a little bit wide. So you really got to be selective with your pricing if you're going to do something in Crowd.
Thinking I might get myself in some trouble.
I actually like your Service Now trade better than this one, but yeah, I agree with you. You should get yourself in trouble.
You could do the diagonal spread. You could do that.
Mm-hmm.
I think that's probably this. I was going to do a 1/3 put ratio spread.
1/3. So you're going to try to go delta.
Make it 2. You'd be delta neutral.
Yeah, you're trying to go delta neutral with it, selling a little bit more premium. It has high implied volatility. It's got earnings. You could do this in May with 36 days.
I was going to do it in May.
I don't mind it.
Really?
I mean, it is a $400 stock. It's gonna take a little bit of buying power. That's the big drawback.
Yeah, I was going to do 370, 340.
Okay.
For like $3.
Okay. Yeah.
Like it?
I don't hate it.
Let's see where I go.
Watch your pricing. So I'm going a little bit higher. You got that extra unit. Stock's going down. It's down 21. It was just down 20 a minute ago. So, once you put an order in, you'll notice the mid price will change pretty drastically sometimes because they'll tighten up the markets in those options. It's just an algorithm.
Yeah.
Even the S&P is down 16. Oil catching a bid 101.
All right. There we go.
Oh, beautiful. Good job out of you.
I did that 1/3. And the way I'll show this in a second here.
Okay. The mid price is prices are $1 wide there basically, and you got filled right at mid price.
So this is
mid price.
Exactly like a ratio spread, a typical ratio spread, but you're selling an extra unit. You're going further out of the money. You have more risk on the downside. You could see
because you have unit risk, right?
Yeah, you have unit risk, and that's why your risk profile, like your break-even point, is not equal to where you're with a normal ratio or butterfly. It's equal, right? So if you're $10 wide, you're going to have $10 of buffer. Here, you only have one option that's protecting the 2 naked units that you have here. So it's half the distance there in terms of your risk profile. But you get a juicier credit to the upside.
Perfect. Good job.
Okay. Cool.
All right. Awesome.
Yeah.
Awesome.
Sweet. Do I buy? I'm a
volatility up 20 cents as even the S&P's down 17.
I don't like it, but I bought a little NASDAQ. I scalped out of some of my position. I've been scalping around. So I sold the call spread and then we colored the position. I scalped out of some of them 100 points higher yesterday. So I'm buying back a little bit here. I have the short MES, which I had a fat finger mistake, which cost me
good chunk of change.
A third or half of my day yesterday, which was a euphoric
That's on you,
day.
boo.
That was on me. That was
That's
on me.
you
But
and your buddy Mikey, right? Was it Mikey with you? Is at the end of the day?
Yes.
Buddy Mikey, why don't you give? He didn't catch it for you. I would have caught it for you. I would have said you sold him instead of bought him.
So I'm shorty minis and Russell long the NASDAQ here. But that E-mini mistake, I was pissed.
You were. You even.
I texted you and I was like, dude.
I just
there's got to be something.
Rookie move.
It was a rookie move. It was a fat finger mistake, but you live and you learn. Yeah.
And you pay the price.
Yeah, you pay the price.
You know what? It could have worked out anyway. You just ran into the buzzsaw of a huge move. If it's a regular move, 20, 30 handle, you're like, all right, I screwed this up. I'm going to sell some puts against it, or I'm just going to buy them back and take my lumps. It's, equal to what I usually make or lose on a trade, that kind of thing. But you got a, what do we call it? An extreme move yesterday?
Yes, it was.
Yeah. We're not getting an extreme move today. And I got to give you some credit for buying those NASDAQ futures. And they're up right now, up around $15 or $20. I think that was a pretty hard buy with oil going to 101.
Today or in the last week?
Hey, right now, just at that moment. Because we're in no man's land right now. I mean, if I'm adjusting delta here and I usually trade, let's say 5 contracts, I'm doing 1s and 2s right now because I don't have any feel for anything. I don't know what the hell's going on. Yesterday, when I was closing positions or adjusting delta on positions, I was doing 5s and 10s. I had some conviction to it. I got the move that I needed for my position. I wasn't screwing around. Now, kind of screwing around. Don't know. I'm like, and you can get impatient. You can start pushing things like you need to do something. Believe me, we're gonna have a lot of movement in the market.
And it's a lot easier to get. The NASDAQ position, if the NASDAQ goes down, that buy stinks.
Mm-hmm.
But I do not, my delta relative to what I had in the middle of last week, it's probably in by 80%.
Yeah.
I mean,
I can see that.
I have basically no delta right now. And so I'm not really worried about it.
Okay.
Yes.
Beautiful.
All right.
You're not worried.
We have wasted a lot of time. So sorry. Markets just crashed.
We didn't waste a lot of time. We were talking about what's going on in the market, feeling, people want to hear. I'm surprised by the market's resilience. I am not buying into it.
Yeah. The move. What do you do in oil? Do you add? I'm already locked and loaded.
I haven't done anything in oil. I'm going to, I had basically, I didn't want oil under 85 last night. 2 nights ago, it got down to around 90 and change. Under 85, I actually got long oil because the position I had on was basically longish at the money option, short multiple out of the money options. It was a very capital intensive trade. Finally got paid on it. Took a week or more. It was not a pleasant position to have on. I would like to be short puts in oil on a down move as opposed to selling the upside like I did last time. So I haven't done anything as of yet. I have a very small position in oil, basically neutral.
Markets just crashed. Time to sell strangles? Question. Do you think so?
Yeah, that's what I've been pointing to. I said iron condors for those with smaller accounts.
And we're not saying the move we've had is a crash. We're just
no.
That's
but
we had of the into a big down move.
Yeah, we had a big move down. We've rallied back. What do you do now?
But this is more of just a general look. Big move down. Is it time to deploy some capital?
Okay.
When the market sells off, many people may be hesitant to sell strangles because of the risk of getting whipsawed at the upside or the continuation of a rapid down move. So even in the chat today, people are like, I'm trying to get some long delta to neutralize, my positions here, but I'm not bullish. And, a lot of market psychology comes into play in general in trading.
Yeah, for sure.
So can we profit from market panics? We're going to explore the hypothesis and see how we performed when we have sell-offs of varying magnitudes. And so we're going to be looking at strangles after certain moves in the market. So the study that we're doing is SPY from 2020, and we're starting after the big part of the COVID move. So we're trying to kind of isolate not extreme moves, but
2 or 3% down moves, which are big moves. They're not like crashes, so to speak. And so we got a handful of years here of data. We sold the 16 Delta Strangle 45 days to expiration. And the way these go, you might think that the study might have not a lot of occurrences, but we do these essentially every day or every time we can hit a 45-day expiration. So 0 day or with SPY options, you get a number of them every single week. It's not just like using the monthly expirations. There's not 10 occurrences or 12 occurrences each year. There's like 200, or 100 and something, because you're doing these at each increment so that you get a data set, a bigger data set. It's the same thing with any other study we do, because you want more occurrences to smooth out how those react. And so we're going to manage these at 21 days. Again, that management is going to just depend on each single trade. Compare the average P&L, the premium, the win rate, the ROI of the trades when the trade was initiated on a day where the market sold off, and we're bucketing these into 4 categories. So we're doing any day, just generally speaking. Mm-hmm. We're going to talk about down days of up to 1%, down days of 2%, and then down days of 3 or more percent there. So you'll see how these look.
These are extreme moves that you're looking at, which we've had.
Extreme moves, but not like limit crash,
right?
Craziness like Trump tariff overnight moves where you're getting 7, 10, 15%. So as the market sells off more, both profits and returns increase, showing strong performance during larger down moves. And so these are trades where you're selling the strangle into these certain moves. So all of the trades bucketed together in the 6-year, $105 average P&L from the entry to the close. Mm-hmm. As you get further down the move in terms of volatility of the move, these get bigger, right? So you're talking about, and from any down day to down 2%, which in the last 6 years has kind of been where volatility has been projected, right? So you've had a high volatility. The 1% move in either direction is roughly 16 to 18 VIX, and we've had much higher than that. So it's been, that's kind of inside. That's at the expected move. You can see all those perform slightly better just by doing it into a down move, but you get even better results by deploying capital into those big down moves. So 3% down moves, that has been significantly better. Those occurrences are much more fewer and far between, but it has been better. And you can see that in the down 3%, your average P&L per those entry points is more than double when you just take the basket of occurrences.
Correct.
And you can see that from a return on capital standpoint. This is the other part of the coin. Volatility is lower, capital requirement is higher. So you're getting paid less and using more capital. When you have a big move in the market and volatility expands, you're getting paid more and putting up less capital. And so your return on capital actually increases when volatility increases and you have this fear in the market. So that even further, not only are you making more per trade, but you're making more as a percentage of the capital you're outlaying for that trade. So it's double. I mean, you could see it here, 1% versus almost 3%. 2.5% is a huge...
The numbers work in your favor.
Yeah,
that's a
huge swing. It's a huge swing.
Most definitely.
So when it's scary, you got to kind of lay some risk out. Doesn't mean you go
watch your size. Yeah, right.
Yeah, you watch your size.
Yep.
So even win rates stay the same or stay relatively stable even as sell-offs get larger with only a modest decline overall. So, obviously when volatility expands and when you're having big moves, you're going to be susceptible to bigger losing trades potential, right? And you can see here your win rate goes down, but the average P&L of those trades goes up. So you have more risk, more reward, more opportunity on those trades. Your reward as relative to your risk is a lot higher. So you might get 5 of these or 10 of these in this data set. I don't know how many 3% moves. We've probably had a lot actually in the last 6 years, probably more than normal.
Yes.
If you just took a 6-year snapshot.
Correct.
Of the last 50 years, probably
Correct.
more. But that said, is your win rate does go down, but the actual amount that you're winning on your trades can be a lot higher.
Good job. Well said.
So why do we see greater expected profits from strangles when the market sells off, even though prices move? The price moves tend to be large. So the question is like, you're short vol into a vol spike. Why are you making more money? And it's because volatility tracks.
Yeah, over time or possibly faster than price is going to move in the direction that you need. That's where it really comes down to. Now, if you put it on prior to volatility expansion, you get the worst of both moves, though, right? You've got the delta move. You're going to get longer as it goes down. You're going to get shorter as it goes higher. And you got the volatility expansion. It's not a very good feeling.
No, it is not.
No.
But deeper sell-offs drive higher premium collection and smaller relative drawdowns, meaning increased volatility not only pays more, but also has cushions for premium sellers. So when volatility expands, you're way further out of the money relative to when volatility is low. And so you can see here with the average premium relative to the buying power of the trade, on a big down move, you're getting paid about 8% relative to the buying power, whereas with lesser moves or just in general, it's usually about the premium is 5% relative to the buying power. So if you use $1,000 in buying power, it's usually about $50 in premium, like 5% of that. And so when you get to higher volatility, that moves to like 80 cents versus $1,000 in buying power. And I'm just using
using numbers, yeah.
It's higher than that. Your largest loss as a percentage of that buying power also decreases. So you're using less buying power and the losses are actually coming in lesser than that. So it's the best of both worlds.
Correct.
Couple takeaways for you. So single down days or short-term sell-offs provide excellent opportunities to sell strangles due to the higher P&L and premium you collect. That said, there's a lot of times where those sell-offs continue. So you can't be gung-ho with these positions. And a lot of times you get that move and you sell that strangle, and the next day you could take that money and run.
That's correct.
I've been doing that all year.
Yes.
Generally,
that's what we talk about, being nimble, right? That's what we've been talking about.
Yes. No piggies here. Generally, selling strangles after down days saw an increase in average P&Ls for the strangles because you typically see volatility contraction after the increase that you see into the down move. So sometimes selling into heightened volatility can be risky if the markets continue to move against you and in a strong way. That's obviously going to be a risk. And down days can sometimes be the beginning of larger moves, which we've seen, which is further a reason why you need to just keep size in check.
Good job out of the team. That was a very nice market measure there on talking about strangles and sell-off in the market. EME S&P is down around 21. That's about as low as they've been. I'm surprised that volatility is only up 15 cents. It was 20-ish cents higher than that with EME S&Ps right around here earlier this morning. NASDAQ down 100. Russell down 13. It's about a 0.5% move in the NASDAQ and the Russell. Dow down 150. Bonds down 11. Oil up $7.50. It has not really had a downtick, flirting with 102. It's up $1,000 since you were doing that market measure. You think because the Masters is on right now, why the market's so slow? Is that what you think? Most of the oil traders and
so we've gotten past Passover and Easter, so now it's Masters.
I'm just asking a question.
I actually do. Let's see who. Patrick Reed. Ooh, he's top of the leader, but we just started.
All right. Well, maybe that's why. Maybe we'll have a little bit.
Oh, he had an eagle. Wow. Went birdie eagle.
Oof, good start.
Damn.
Better than the market start right now. I've got more news for you. We got royalty coming in to the studio today. We got Tasty Trade royalty. My man Jason, head of everything,
is the man
over there on the trade desk. We're going to bring him in And probably that other guy, Glenn. We'll be back in 90 seconds.
Yeah.
This is Tasty Live.
Glenn.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nikki, we are back, son. Before we bring in our first guest, let's take a look at the market here. Even the S&Ps are down around 20-ish handles, 19 right now. NASDAQ down 100 and change. NASDAQ and the Russell are your 2 big movers to the downside relative, about 0.5% or less. NASDAQ actually catches a small little bit.
Yeah,
right
the
now.
Johnny's top ticked it in the Russell. Just saying.
Good job out of you.
Just saying.
Volatility, as bid as it's been as of late, and it looks here as how it's come down quite nicely from highs of around 26 down to around 22. Volatility was higher this morning than it is right now with even the S&Ps, pretty much exactly where they are right now. Bonds are down 13. Bitcoin hasn't moved, 71,000, just rounding up. Big mover today, it's all about oil.
This is a huge move. I mean, we're back to 100.
Back to 102 in the front month, 92 in the futures that will be most active, quite free here in about a couple of days. So they're going to roll Thursday or so tomorrow, today on the platform. So yes, a lot of front month volatility in oil. All right, without further ado, we have Tasty Trade royalty, ladies and gentlemen. Usually I have to give up my seat for this man to come in, but he was gracious enough to stand where everybody else does. Sending out the bat signal. We've got Jason Chow in a room here, head of Tasty Trade, Grand Poobah of Tasty Trade.
I noticed some hesitancy with the last name. I know it's a little bit, look, my parents paid a little bit extra for the 3 extra vowels at the end. Cho, Chow.
Which way is Cho? Sorry,
whatever.
Did
It doesn't matter. Yeah, Batista. Anyways, it works.
Bautista? You can go Bautista. I won't mind.
That's right. Well, besides that, I mean, just curious. If this came on Daily Dose, sorry, can't watch it because I'm busy working.
You know what? You've corrected me every time you've come in the room. You know what I mean? Which just means that people aren't correcting me a lot more because I make the same mistakes probably every day.
It's okay. As your Taiwanese source, I must come in and correct as
That's what
needed.
you do with dementia patients, though. You know, like you don't tell them that they're wrong. You just say, "Oh yeah, Dad, it's okay, it's okay."
Look, that's right. But random question: if this came up on Daily Dose, then tell me. But did you guys see that? It's a couple days old already. That Cubs game at Tampa Bay with that foul ball that went on the top of the ninth.
No,
the guy that
his pants fell off. Right?
I'm worried about that with him. I'm worried. That's usually like
I'm a belt guy. I've always been
a belt guy.
I know, but that's like naturally what happens as you get older. Like your
ass just gets flatter.
Yeah, you got like.
I've never had that problem. I think I'm going to be all right.
Yeah, okay.
That's one thing I don't think you have to worry about.
No, yeah. I mean, look, I wear a drawstring too, so I got to be careful when I stand up way too quickly. If there's anything that clip alone has served as a reminder, maybe I should not dress like a schlub at the office. Whatever.
You know, you look good, you feel good, you dress
exactly.
good.
That's all I'm asking for.
Your day goes good.
He's changed his ways. I mean, he came in.
I even tucked in my shirt.
I thought
today.
you had a job interview today. I mean, you came in, you had your shirt tucked in. You like, this has been a change.
Raymond James interview. Anyway, so the reason I bring that up is because I don't really usually watch sports because only time I'm really doing is I'm betting on it. So that's the only reason why I caught
anything
it.
For Masters?
No,
not a golfer.
Not much of a golfer, but once I put some money on it, maybe I'll start to care. But
isn't that always how it is? I mean, it's the same thing about trading. We talk about that. Like you can watch what's going on in the market. You could talk about what's going on in the market. If you don't have any skin in the game in the market, you really don't know what's going on in the market.
Yeah, it was like Q. I'm going to pick on Q here. He said, I told you SPOOs were going to rally 140 handles, after. I said, did you put anything on?
Right.
Talk is cheap, right?
That's right.
Talk is cheap.
But yeah, so I wanted to segue
Unless you're an online option educator, then you can talk and not do anything all the time. It's not cheap. It usually pays very well.
It does. Hey, look, that's the reason why I know what I know is because of y'all.
No, if you don't do anything, if you don't like
oh yeah,
talk
you're
about
not
trades,
sitting here slinging.
put it on.
I got 3 freaking I got positions. I don't even know some of these.
But you can go to services where they just paper trade or they talk about it the next day.
Don't do that.
Yep.
It's hard. It's hard.
Don't do that.
But anyways, just curious with that. Do you guys? I've noticed with myself when sports betting. Do you guys bet any similarities with your betting and your trading? Do you see any similarities with there?
I'm going to answer for him.
No. I will answer for him.
Yeah.
There's certainly a similarity. Most of the time, it's me doing all the work, making the money, and then I give him just a piece of it.
Okay.
So what I do is like with this account where I pretty much do everything, and then I give him a portion of the credit.
Yeah.
Just as like a skim off the top. It's like a shakedown almost. Like those restaurants and such in Brooklyn where you got to pay for protection.
Yeah.
It's basically what I do here.
Well, you're just paying it back. I did it for you for 21 years. And now you've been doing it for me for the last 11 or so. You got 10 more to go.
Yeah.
Hopefully I'm around for it and to collect. And you've been doing a good job. You've been doing an excellent job, as I did with you. You are doing an excellent job. You are keeping me in the lifestyle I've become accustomed to.
Yeah.
So I thank you.
Yeah, I have to go make our pickup.
You're a good earner, as they would say in the street.
Pickup,
Yeah, you're a little late with that pickup, by the way.
Yeah, my peeps are a little slow.
We want a square pool.
Yeah.
All right. Well, because on the desk, we started this thing called the Otani Opportunity Fund, or OOF for short.
Ooh,
you like that? Yeah.
Ooh, okay. So what?
It was a $100 buy-in, and what we did is that we're going to bet on Otani every game that he hits a home run.
Okay.
Yeah. So far, we're outpacing the S&P year to date.
That's good.
So is this a rolling? So what do you? So how much you put?
So one unit is $20. So we're just putting in 20 because me and my colleague Anthony.
Okay.
We've always talked about this.
You must be getting odds for it per game, right?
It's probably not even money.
No, for Otani, I've seen everything as high as 220, to like
plus 220,
plus 220, 136,
Okay,
something like that. Sometimes DraftKings will kick me a 50% kicker.
Oh yeah, there you go.
Yeah,
Yeah,
dangle the cherry in front of me and like, yeah, okay, we'll do it.
No pun intended.
Yeah, exactly.
So if you hit one, do you martingale? Do you like go up into the
No, we just keep it at a strict 1 unit. And then we'll just see. Exactly. So, like I said, we're outpacing the S&P, even though we just started about a week ago.
Okay,
so you have to take the convexity trade, meaning you have to be able to pay more to even have a chance of being
and to make
fees and everything else.
Exactly, and because of the 50-cent tax here that we have, that is the robbery.
I blame.
Yeah,
that is robbery. You know that? You know about that? There's I think it's
a city thing, isn't it? Is it a city of Chicago thing?
I think it's
in the state of Illinois.
State of Illinois.
Yeah.
Sorry.
Yeah.
But doesn't it go up to $1?
Oh, I don't know.
They just started not too long ago, right? Like a month or two ago.
Yeah. But they basically on any bet, regardless of size. So if you bet $10 on something, you have to pay 50 cents in juice.
Yes.
Just to the state. State takes no risk.
Yeah.
GFY.
Wow.
Anyways,
some
more tax.
Little angry man.
Yeah, I don't like it.
Don't bet. Bet with a friend.
Right.
You're making me go to the.
We'll let you know about next year's
Batistas and take my bets.
We'll let you know about next year's OOF. Autonomy Opportunity Fund. All right, cool. Want to do some business, guys?
Yeah, sure.
All right, let's do this.
What do you got for us?
All right. Top 20 symbols entering through our system today so far.
Got 30 handles in NASDAQ. I don't know. Maybe. Oh, you
high
need
fives.
it against.
What do you want? Here.
Gentlemen, man.
Sorry, Jason.
At 20, Goog L at 54. 19, IBIT, 31. TQQQ at 52. BE 63. What's BE, by the way? Anyone?
Bloom Energy.
Oh,
yeah. We trade. It's a mover.
It is a mover. It's up $11.
All right. Oracle at 49. Crowd at 57. SLV at 46. Apple at 40. GLD at 54. NVIDIA at 6. SanDisk at 74. AMD at 55. USO at 63. MU at 68. Microsoft at 92. Intel at 97. Last 4. Meta at 65, Amazon at 57, Tesla at 20, and last but not least, Palantir at 47.
Good job out of you, my
Intel
friend.
At 60 now.
Say again?
Intel is at 60.
Yeah, I remember when it was back at 20 almost last year. It was kind of crazy. Now it's,
I remember when it didn't move.
Oh yeah, that too.
5 years
now it's
prior
up
to
3% now at new highs. Yeah. I mean, it was 42 at the end of March, and I'm talking about the last day of March. Yeah. It's now 60. 61.
Beautiful.
What a move. Okay.
America. All right. Good job out of you, Jason. I'm not going to say your last name. I do appreciate it. We've got more Tasty Live with this man.
Oh. This guy.
Glenn, how are you, my friend?
I'm doing fantastic. T-Mac let me wear his watch again.
Ooh.
Say it again. What's this? Oh, beautiful. Damn. Good job out of you.
My confidence is through the roof. But
Awesome.
I'd like to get in on some of the protection you're offering for.
You don't want
just for small
kickback,
small kickback.
If you're taking new entrants,
let's walk offline.
Yeah.
For sure.
That's how you stay in business. You got to take.
You need the annuity. That's called the income trade right there.
Yeah, that's the income trade. You scalp a couple bucks.
Raise a degenerate. And then take only the winners.
Hey, I learned from the best of them.
I understand.
So,
I understand.
And you.
I understand. What's that?
From him too.
And yes, that was good. Thank you, Glenn.
Yeah, I don't bet like
you missed that one. You missed that. That was witty.
I did miss it.
I said I learned from the best of them, and he said,
gave me a compliment.
And you.
Yeah.
So the best was Tom. That's what he's saying.
Oh.
We all know that one.
He was the best grifter by far. I did not learn good enough.
He took some of your March Madness winnings too, right?
No, he actually.
We got him.
We got him.
We got him to pay.
It cost me about $2,000 of my own money, but I got to get $2,000 in a Venmo from him.
That feels good.
Really, I was like, I wanted it if it was in cash, like cold hard cash. I think I would have framed it.
Yeah, that's
I think
pretty
I would
good.
have put it on my wall.
But the real winner, the state of Illinois.
Yeah.
Gotcha.
Yes.
Winner
and
always.
DraftKings, that's
10% of that is their take.
Fair enough.
Oh, there's a little Intel trade.
Yeah, get a little short delta there. But I
60,
sold
too much?
a call and I did a put ratio spread. But I'm short.
Sold a
3
call
calls to
and did a
1
put ratio spread. You didn't do like a reverse Jade Lizard. You
I could have
did.
done that. I should have done that.
That's okay. That's okay. That's okay.
All right, let's selling some premium here. Volatility's off.
Yeah, about 26 short deltas of trades you've been putting on that have been directional, been somewhere between 20 and 25-ish deltas. This is in line with the rest of your
What about maybe like a little strangle?
I mean, here you are putting on, you just put on, I think you put 2 longer delta trades. Now you're putting on a short delta trade.
Yeah.
Net, your overall position is basically delta neutral, but you certainly have directional trades on. Even though you're,
and I'm short vol.
Right.
Yeah.
Yeah. All right, good job.
Excuse me.
Sorry, Glenn.
Glenn. What are you looking at?
That's okay.
I have 0. I will say, hey, because I've poo-pooed you sometimes.
Sometimes.
Today, carrot, cha-ching. Reward, cha-ching.
What, that Kiwi? New Zealand dollar?
New Zealand dollar.
Booyah.
And
Did you put that on Monday?
Yeah.
Oh, yeah.
Caught that one.
Yeah.
100 bones, baby.
Woo! Bones. Good job.
Very nice. But yeah, I mean, story of the week, like everything else, moving the most on Tuesday. Today we're getting some consolidation for the US dollar, but definitely lower on the week. But what's interesting now, I think, is to see how different dollar markets are reacting, and kind of where they are compared to the start of March. One pair that's not playing along, your favorite, US dollar, Japanese yen, dollar up today on
TP. That,
yeah.
He's good, but
not that time.
The Japanese yen, dude, it just gets me.
Dollar versus the yen is up, but the dollar's unchanged, down slightly against
Just
the
the yen
pound
is-
and the yen.
Correct.
Yeah.
So
a pound in the euro. Sorry.
Exactly. So maybe on, bonds are down today, so yields ticking
I mean, it's
higher a
more
little
the
bit.
yen sucking it than the
Correct.
than the dollar.
You're
Was
absolutely
that
right.
a scientific phrase?
Yeah.
Yes, that took all of my PS 278
You were like, let me
James
dig-
Madison
let me dig
High
real
School
deep
in
in
Brooklyn,
that
New York
brain.
education to come
Suck
up
it.
with that. Yeah.
No, but your thesis is absolutely correct. And
There you go.
it can be validated by looking at the yen crosses. We've got dollar yen up about 0.4% on the day, but we've got euro yen and pound yen both up over 0.5%. So that's how you could tell very easily that it is more widespread yen weakness than necessarily dollar
When
strength.
you put on a Paris trade, you don't care where it comes from. I mean, left hand,
Exactly
right hand,
right.
you don't care where the money comes from.
But
You
it's
just want the
important
money
to
to
know.
come.
Yeah. Spoken like a true shakedown. That was a
There's
shakedown.
a lot of shade
phrase.
today. The market must not be doing anything.
That was
Yeah.
a shakedown phrase. Yeah, it doesn't matter. You put it in my left and my right hand. Go get my money. That's what
Pay
he
me.
said. Yeah.
Amy.
But no, on the for the event risk for the rest of the week, we do have CPI tomorrow morning, which is inclusive, is on March figures. So that one should be pretty reactive. Priced in almost a full percent raise in the year over year. But now that maybe this conflict is nearing an end, that is.
I don't know. Pictures from there don't seem like it's nearing
Yeah,
an
it
end. I'm
doesn't
not
look
gonna.
like-
Nobody
with the
told
oil.
Israel.
I wish it
turns out.
was. I mean,
Yeah, it doesn't
they
look.
say it is, but
But important mover of the week, not U.S. dollar, is actually with Tasty FX. You can trade dollar Israeli shekel. And that's been not as interesting a trade because honestly, I couldn't tell you why it's moving, which direction, when. But we are seeing this week.
What's the ticker? Because you don't give me a description, so I don't know any of the things. So what is it?
Thank you.
Yeah, we've been working on that for 6 months, right?
I think a year now.
Maybe one day. I don't know. If
I-
you wanted to trade anything, you just got to tell me what it is.
And that's why I'm here.
Thank you. Which one is it?
USD ILS in emerging USD. We've got ILS Israeli shekel up 2.5% since Tuesday. So USD ILS down 2.5%. And we're really in some interesting price territory now. if you're looking at, that chart, the daily chart, we haven't been below where we're at since TastyFX IG Markets started quoting this in 2012. So we bounced from here this year 1, 2, 3 times pretty starkly from the end of January. But a huge move lower here. Maybe it'll hold this time, but if mean reversion is any indicator over the long term, this is rarefied air for the Israeli currency. Of course, much less liquid pair. So there's definitely some spread costs associated, but an interesting way to get direct Israel exposure.
I got long that, so I'm long the dollar there. I got long the dollar against the Swiss franc.
Nice.
That one's another move. What about the Canadian dollar?
Canadian dollar has been pretty removed from this whole ordeal, but it's firming up a pretty nice range year to date. I mean, we got all the way up above 139. I'm just looking at, we got there at the beginning of January, dropped all the way down below 136. Then recently got back above 139. Now we're sitting at around 138. Yeah, there you go. If you zoom in a little bit, tighten it up.
This is how you guys trade. You want here. Look.
Yep.
Yeah, tell me where you go. I'm just kidding.
But if you are respecting this range, we're still at the upper end of it in 2026. With if U.S. dollar continues to get weaker, even though it's not the biggest mover, Canadian dollar could benefit there. But another interesting one to look at, I called out your favorite, Japanese yen. If you're a little bit more wary of getting long the yen against the U.S. dollar, looking at those euro yen and pound yen, those charts are a little bit cleaner where we're at those levels that we've been rejected from numerous times this year. Whereas, so we're right up there at 30-year highs, I believe, against the euro. So still some room to run. We're not at highs if you look at the dollar market, but here a little bit cleaner of a chart if that's the mean.
We'll just add a little bit more long yen.
Woohoo!
Woohoo! Yay!
Hey, but this one, very small trades.
Very small. Very small. Very small. Trade small.
And zero commission.
Yes.
Good job. Kind of complacent job all around, right? Even the no with the market, not you.
Certainly
Come
not.
on, you.
No, you're absolutely right.
You come to shine.
But we'll see tomorrow. More talks. So.
Okay.
Right.
Should I?
There's your cut.
Did I?
There's your cut for the day.
He took off his NASDAQ futures that he scalped. Good job out of you.
40, 50 points.
Actually, 10 handles higher than I was suggesting.
There's your cut. That's it. Not till tomorrow. You don't get any more.
And look, you actually sold them because you wanted to sell them and not buy them, or vice versa. You actually did the trade that you wanted to do, unlike when I'm not here. And that guy Mikey cost you money. We're going to take a quick 90-second break and come back. We got more, because I have to check your work. I had to do it when you were younger, and now I have to do it now. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. No. Liz and Jenny coming up next.
Yes.
Peace.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Golf putt, normal distribution. Reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
everybody, and welcome to the Liz and Shelly show. So, Shelly, I'm so excited to have you today. This is a tasty mashup, if you will. So, my name is Liz Dierking. That beautiful blonde next to me, I always say brunette, is Shelly, and I don't want to butcher this, Van Witzenberg.
Perfect. It's
really?
Phonetically friendly. You just sound it out. So, yeah.
How many letters are in your last name?
13, I believe.
I'd love to see a name tag. You know, that my daughter her name's Annabelle, and she just got a job, so she got her first name tag, and I thought hers was long. This is definitely longer.
Yeah, it's a mouthful. I just usually go by Shelly Van, but
I like it. Yeah. Well, you are a crowd favorite. I will tell you that. When I said I was going to have you on the show as a little bit of a mashup, I did get lots of people saying, "Ooh, I love Shelly Van," and I said, "Can I just call her Shelly Van instead of Van Wurtzenberg?" Okay, good.
Yes. Absolutely.
Okay, so how long we are going to, this is your first time on the Liz and Jenny show. So I want to tell the viewers, we have, we do a show, I'm turning my phone off right now because people are trying to get in. We do a show about options trading, but we trade and talk a lot about crypto ETFs. On our show, we don't actually buy or sell crypto in here only because it's attached to Social Security number and things of that nature. So we don't, but we look at it a lot. So I know a lot of our viewers are interested in it, but keep it on a high level. Now, you are high level meaning simplistic when I say that, because you are very vast and very informed in everything crypto. We are not. So we're going to take it from a very, very, very basic level and kind of dip a toe in the water and a little bit of the crypto stuff that you guys are doing. Okay?
Love it.
Can we please jump into Shelly's bio real quick? You can find this on the website, and I had no idea. They'll pull this up in a second. They're just going to zoom in on my platform. I had no idea that you were producing 1,000 live concerts.
Yeah, I'm like reading what that says. I haven't read it in a while.
1,000 live concerts in Decentraland?
Decentraland, yes.
Thriving community in the Metaverse? You are above our pay grade, Shelly. Well above our pay grade.
It sounds so much fancier than it really is. Like if you think about just a regular video game or like Roblox, it's just that, but there's an on-chain layer underneath it all to make it more into crypto. But really, it's just more of the same with different plumbing underneath. But yeah, I have been loosely following crypto since like 2016, and then found myself working in the Metaverse and had more fun than I've ever had in life. I was working with musicians from all over the globe. And during the pandemic, when we were all on lockdowns, musicians lost their primary source of income. You know, if they were touring and doing shows in real life, they had to learn how to stream from their houses. So I was teaching them how to do that. And in Decentraland, it became, there was a way to monetize those shows using crypto. So it just...
That's what I'm saying. It's all kind of layered on top of each other. Is that kind of what brought you to knowing everything there is to know about crypto, or was it crypto first and then the Metaverse?
Kind of both at the same time. I'm very narrative driven. Like even when I'm trading other things, like I want to know the story more than the charts and everything like that. Like what's going on? What's the tea? So I fell into like the cultural part of it and people, you know?
I love it. So how long have you been with Tasty?
Maybe a year and a half, October of 24.
Okay, so you're relatively new to a year and a half is a long time, but relatively new to the Tasty team. But you've already brought a lot of stuff to this. And what drew me to you, well, number one, I think you're fun, and I see you all the time when we're at the Tasty Studios. But what drew me to you was a lot of the stuff that you've been doing on the YouTube clips, because you're really breaking it down. And I think that's a lot of our viewers. I did a little bit of research into crypto, so you're going to correct me if I'm wrong. But crypto lends towards younger men is the demographic for it, right? Mostly, what I read was 33 to 50-year-old men hold most of the crypto in the world.
I think so. But I think it's interesting that, over 51 million Americans hold crypto. 51 million Americans. So like my dad holds crypto. Maybe that's my fault. But
I was like, all my family trades options, but that's my fault.
Yeah. But I mean, okay, I'll go back to Decentraland for a minute, which is a metaverse platform built on crypto rails. That had a demographic global, but we're talking ages ranging from like maybe 20s to 70s.
Wow.
I was always blown away. I'm like, whoa, old people in the metaverse. This is amazing. And so I think crypto gets a bad rap, and I see people in chat like, I hate crypto. I want to know why. Like, I'm not like offended or upset about that. I'm curious, like, what is the block, or like why don't I like it?
You know what? I kind of agree with you, but I know I've seen our chat. We know our viewers, and a lot of people want nothing to do with crypto. And I do think sometimes I think it gets a little bit of a bad rap in the fact of, I think options get a little bit of a bad rap. That's why I'm kind of trying to tie them together in the fact that I think the verbiage, the language is the barrier to entry. That's it. I think that, and when I'm trading options, people are like, oh, it's too risky, it's too scary. It's the language is the barrier to entry. And everybody always thinks that it is a scam and that there is gaming of the system in the options market, or that it's too risky. And that's not necessarily the case if you break it down. So I would like to learn a little bit more about crypto, but you've done a great job with the videos.
Oh, thank you. And I was just going to say, I don't know options. So I feel the same way. I'm very intimidated by like strangles and iron condors and all these words. And I'm like, wait, what does it all mean? So coming from the crypto space where it's, all these other vocabulary words that are confusing, I'm like, hey, I would like to learn yours and I'll teach you mine.
Because we are forever constantly learning and growing, especially in this space. And I think there is going to be a place and time for both. So it's kind of fun. All right. Because you are my guest and because I do a market mover segment, we have to start the show with this. Let me keep an eye on the time. It is now 10:13. And we are going to play, this is the market mover segment. My name is Liz Deerking. This is Shelly Van from Tasty Crypto. And we are going to break down something. I'm actually going to read the exact name. Do you remember the name of the segment we're going to play? Breaking down how Wall Street took away crypto's biggest asset. Okay? So let's roll the video and we will riff from there.
Most people buy Bitcoin because they think it protects them when the stock market crashes. That used to be true. It isn't anymore. In 2021, Bitcoin's correlation to the S&P 500 was 0.15, basically independent. Today, it's sitting at 0.75, nearly in lockstep. And its volatility now tracks the VIX at 0.88. That's the highest reading ever recorded. This didn't happen because Bitcoin changed. It happened because institutional money arrived. When BlackRock and Fidelity run risk off, their algorithms sell Bitcoin the same way they sell the NASDAQ. The asset doesn't matter, the risk model does. So right now, you don't own a hedge. You own a high beta equity bet with crypto level volatility. When the market drops 10%, Bitcoin isn't your parachute. It might be the thing falling faster. Does that make Bitcoin less valuable long term? Not necessarily, but it should completely change how you size it, when you buy it, and what you think you're actually holding.
I thought that was a great video. Now, I did tweet two that were leading up to this. What is Bitcoin and what its advantages are. So if anybody wants to jump over to Twitter, it's got the hashtag LIZJNY. Shelly's been great breaking these down in quick little bits. And I believe it's a series. How many are you going to put together?
It should be around 15. We'll see if it becomes more or less. I'm actually recording the last group today. And also feedback, like, hey, if you want more, if you're like, this is terrible, also open to all feedback. So I would love to hear from the viewers, like, okay, this makes sense, but I want to know more about this or whatever, like here to answer questions. And I'm looking at the chat right now and I see Matt, Brolin, end of the day, crypto is just ones and zeros that has no value to me. I love that. Like, please keep that coming because I actually break that down in one of these videos, like why that makes it valuable.
Perfect. I love it. Okay, but I want to springboard off something in this video that I saw. It was that the heavy correlation to the VIX, and it hadn't been like that before, right? So correlated to the VIX, when you're looking at something like that, if it is correlated to the VIX, we all know, well, the S&P and the volatility have an inverse relationship, right? When the S&P goes up, the volatility comes down, and when volatility goes up, S&P goes down. So with it being correlated to the VIX, what was the biggest shifter when BlackRock and everybody, when that mandate went through that people could just start buying it and selling it? So when everything goes down and they need to sell their assets, they're selling that at the same rate that they're selling everything else.
Exactly. It's basically the risk model. Like if risk is off, they're going to dump. And so those institutional moves make it correlated to everything else because it just got lumped in. Whereas before institutional money came in, it was just the private sector, you know, doing its own thing. And that was more narrative driven. And, you know, sorry, I lost my thought.
That's okay.
But yeah, so when institutional money comes in, those big moves happen in lockstep with everything else.
And feel free to say that you don't know, or you can get back to me on things like this. But how does it correlate? Because the other thing that Bitcoin gets is that it's digital gold, right? That it is digital gold. And in my mind, in my small, limited mind, keep in mind that I've been known on this show to do this, and it's ingrained from my dad. I'm a gold bull. I'm not aggressive gold bull, but any stretch of the imagination. But I was trained from a very young age. You just keep putting little bits of gold into your account. There's a finite number of gold. There's a finite number of things out there, and that's kind of how I've done it. So is that how it correlates to being digital gold? Because there's only, in one of your videos, you said there's only 21 million Bitcoin out there, correct?
Correct.
So is that what makes it digital gold? Is the finiteness of it?
Yes, there will only ever be 21 million, and it's less than that because some of it is permanently lost. So that number's more close to like 19 million.
Permanently lost.
Permanently lost.
Wow.
And we can get into that, and I do explain it in those videos as well. But so with that said, this finite amount makes it valuable because just like gold, there's only so much. If you can carve off your little bit and the value is going to increase, there you have it. So it makes sense to, I'm a Bitcoin bull, and I just dollar cost average all the time. Like, I just want to hoard it. I have this goal, like, okay, I want 7 Bitcoin, one for me, one for my partner, and then one for each kid. Like, that's my legacy. That's what I want to have in the bank at someday. And just, you can take loans out on it now. You can use it as collateral to buy a house. So like gold, I just want that in my safe, like you would gold bars.
You are going to be the best in the entire world, and you get a Bitcoin, and you get a Bitcoin,
right?
You get a Bitcoin. Yeah. That's amazing. All right. So I do thoroughly enjoy kind of looking at the correlation to the VIX and gold. And if you want more videos like this, please give us a thumbs up, or you can jump into the tastylive YouTube chat to keep an eye on things. Jump over to the live show, but you will be seeing more of Shelly Van, and jump into YouTube and look at the video shorts. She breaks it down, and there's going to be a series of 15 coming out that might actually demystify a little bit of trading Bitcoin. So thank you very much.
Mm-hmm.
Okay, so that's our market mover segment. We try to do that every day with someone that's on the show with us. But I did want to talk about this. So if you're dollar cost averaging, this is not part of it. We can keep moving forward. We can keep talking about it. If you're dollar cost averaging, what is Shelly buying? Are you sticking with the big 3? Is it the Ethereum, Bitcoin, and Doge? Is it Solana? Is it XRP? What are you buying?
I am big on Uniswap. I love just that you can get, it's a lower price, so you can just get more of it. And so when it moves, it's more fun. But I dollar cost average Bitcoin and Ethereum, a little bit of Solana. I'm kind of all over the place. And then off of Tasty Trade and in my other accounts, Hyperliquid. That's like one of the up and coming biggest exchanges. And some of like real deep in the weeds trenches coins that are very low market cap.
While you're talking, only because I like to give visuals, I want to continue this. Can we jump into the platform? I just kind of want to show a little bit of what Shelly is talking about, because on this show, these are the only ones that I'm kind of handcuffed to, because I'm a tasty addict, and I stick with this platform. So is Link what you were talking about when you said hyperlink? Is it LINK?
No. Hyperliquid we don't have available on the platform yet.
Okay. But on this platform, you would be mostly dollar cost averaging your Bitcoin, your Ethereum, and Solana, you said as well, right?
Solana and Uniswap. So Uni. Right.
Uni. Oh, that's one I don't have. So I'm, like I said, I'm an old school trader, and I put little bits of everything in there just so I know what price it's trading. Because if I don't have it in, I don't know what price it's trading. And I have never looked at Uniswap. So this is $3.
Mm-hmm.
That's pretty cheap.
That's very low for Uniswap. And Uniswap, if you don't know what it is, See,
I'm writing it down.
I'm actually curious as to how people think about crypto. Like, do they think about it like they do Tesla stock? And like, we know what Tesla is, right? It's this company, we know what it does. Do people think about crypto the same way? Because I do. I'm like, what is Uniswap? What's it doing? It's one of the original exchanges where you could go swap from one token to another, like a currency exchange.
Oh.
Like if I'm traveling from the US to France and I need my USD into francs, euros, let's go that way. Sorry. I will have to go to an exchange and swap those out. Uniswap was doing that since the beginning for crypto, one crypto to another.
Oh. And so 3 is pretty low for Uniswap?
Yeah, and we'll look at expected moves later, but I think it could go lower, just with all the volatility happening in the markets right now. But I mean, I'm in there at so many different price ranges, but I was in when it was $12.
Oh, wow.
So big moves.
So this has a high volatility because if you're going to be moving from $12 to $3, now Bitcoin notoriously had a higher volatility than what would be the rest of the market. And I don't know if you're looking at this, but we just turned green. But the S&Ps just turned green. And I got a phone call from Jenny. She's on her cruise. Everything's all right. But she called me this morning and she's like, make sure you ask Shelly. And she wrote down, she's like, what else to buy besides Bitcoin and Ethereum? And I just wrote down Uni. Of this list, like I said, keep it in something that we can do on here of this list. So, and I know we're kind of going off the rails of the crazy train. So Bitcoin, Ethereum, Solano, and Uni. Anything else that you would look at? I think I've told you this before. I let the cat out of the bag. My brother is a crazy XRP fan. And he's got all of his neighbors. I call him the XRP army. And I almost feel like it's a self-fulfilling prophecy because they believe so much in it that I don't want to cross them.
They can be very aggressive and like passionate. They're passionate. My sister was an XRP army. I say was because she's kind of like just taking a little break from everything, but
she's reformed.
Yeah, I think XRP is one to watch closely. End of April. I might have the dates wrong, but we're waiting on the Clarity Act.
Okay.
If that Clarity Act goes through, XRP is going to be permanently established as a commodity, which will be huge. So
is it just XRP or does anything else fall along with it?
Oh, several of them do. I'd have to pull it up and find the list, but several of them have been listed as these will be qualified as commodities, which will be huge.
And that's the end of April?
I believe so. I had this pulled up. Let me...
No, it's okay. Like I said, if we can circle back and we can do it again. I can let people know on the live show or via Twitter if we're putting you on the spot. But that's impressive.
Mm-hmm. Late April. So yes, end of this month.
End of this month. And that could be pushed as well, right? So if they're saying late April, but has it been pushed or is that pretty much a line in the...
If it stalls past May, it'll be shelved for the rest of 2026. So that's kind of like, ooh, we're all a little nervous and just waiting and watching. But
well, now that we're friends, I'm going to need you to text me immediately.
Yeah.
Okay, perfect. Now, can I ask about one, and I don't expect you to know, I remember I asked Ryan about this. I'm just going to kind of go into something else that's stock traded. Let me go to positions. So this is XXI. Do you know anything about this? Is this crypto related?
I am not familiar with that at all. Is that one of the ETFs?
I remember asking Ryan, and the only reason I'm saying this is because keep in mind, I'm in my brother's garage, and the XRP army came at me and said, do you know that this is going to start trading in XXI? It's on the real stock market. I was like, oh, yeah, great, thanks. It's 20, and I didn't mean to put you on the spot. I just know that this was something the XRP army was discussing.
Oh, okay. So it's basically a Bitcoin ETF.
Yeah.
But do they also hold XRP?
I'm going to assume so if the army wanted it. So the other ETFs that we trade all the time in here, and we have what we'll trade very actively would be IBIT and ETHA, because I actually took, I was trying to acquire some Bitcoins. I like what you were talking about. But Bitcoin it held up. It was cash secured, meaning there's no margin on it. So you put, $1,000 in Bitcoin, which isn't a full Bitcoin, it's holding up $1,000. And then I realized that IBIT was tracking Bitcoin. So I used the option knowledge to create a synthetic stock position, which held up a fraction of what I wanted, what I had in my Bitcoin, and then it could be used in margin. So this really, I think, was a game changer for me when I realized that you can use the options on the ETF of these cryptocurrencies. So it's a derivative of a derivative of a derivative, and you can trade these very similarly. Is there any downfall to the ETFs?
From a crypto perspective, you don't hold the underlying asset, obviously. So but you have all these other tools to use. Like you can trade options on these ETFs, so there's more fun in that. ETH B, you mentioned ETH A.
Oh.
ETH B is very interesting. It was just launched last month, I believe, and that pays.
Going back to my writing down, ETHB.
We can call it dividends, but it's a little more sophisticated than that. But that is staking the ETH that it holds.
Is it automatically doing it for you? So if you buy ETHB, is it automatically staking it for you?
Yes. So they're taking their ETH holdings and staking them, and then passing that through to the stockholder or the ETHB holders as a dividend payment.
Okay, now you're talking my language because they're going to do it for us. So we had Dan Cecile on a while back. He would come on our show and he would talk about staking and dividends, and we lost 90% of our viewers because it's above, they're on, you guys are on such a higher level. We need to be on step 1 and step 2. But if this is something where it's almost like they're taking the dividends, it's almost like a dividend reinvestment program for ETH A.
Not for ETH A. ETH A is its own ETF. ETH B, it's same concept, right? They're buying ETH, and that's the business model. They're just going to keep accumulating. The difference with ETH B is they're going to take that ETH, stake it, which just makes it's being used on the network itself.
Like you're renting it out, like you're letting somebody use it.
I mean, it's the same concept. When you put money into a bank, into a savings, they're paying you interest, right? Because they're taking what you just gave them and using it.
Okay, so same concept.
Same concept. They're going to take that ETH, stake it, which secures the network, but because you've staked it, it's earning fees because you're helping keep the network secure. So you're earning on that ETH. So whoever's holding the ETH and has it staked is going to earn yield, right?
Yeah.
This ETHB is taking that yield and then distributing it to the holders.
And so ETHB is relatively new, if I'm looking at this correctly. Did it just launch in March?
Yes.
Wonderful. Okay, this is brand new. And I'm going to assume they don't have options yet. Let me just take a look real quick. Oh, no, they do.
Yes, they do.
No, they're very, 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 very wide. So they do have options. They're not traded. You can see the volume right here. They're very wide, but that doesn't necessarily mean that it won't come. When things are new, sometimes it takes a little bit for it to come out that way. But I am going for sure to take a look at ETHB. So this is doing the staking for you.
Mm-hmm.
That's wonderful. So how often do new products come out? They're coming out every day, aren't they?
Oh gosh, yeah. I don't even know how anybody keeps up. It's very difficult.
So it is your full-time job looking at all this stuff.
Oh yeah, totally. No sleep.
Now, so when you are on the Tasty Crypto team, I know you guys put lots of stuff out. You do it on Twitter. I'm going to pop over there real quick just so we can show this. I'm going to go to Twitter. So we take live tweets. We put the hashtag LIZJNY. Mm-hmm. And so this morning I was tweeting some of these and I was asking Shelly, I believe this is number 1. What is crypto? Yes. And then number 2 is, does Bitcoin have value if you can't touch it? I would encourage everyone to kind of go back and look at these. I thought they were pretty good, and especially this very simplistic method that you break it down. But my real question to you right now is, why is your handle Teeny Bod? Because this is you.
we can blame my mom. So I'm going to age myself, because back when AOL was in its beta phase. Okay.
I love this. I love the AOL.
And you got to pick your screen name or your AIM handle.
Yes.
I was probably 12, 13. And my mom picked my handle, Teeny Bod, because she thought it was cute because I was a teenager. And this was before everything was creepy on the internet, So here I am, Teeny Bod on AOL. And it stuck. I have Teeny Bod everywhere. And it's clean, right? There's no numbers in it. It's short. But as an adult, I'm like, oh, mistakes were made.
No, this is fantastic. This is fantastic. You can never let it go. And you can never change it.
All right.
You can never change it.
I tried to get Shelly.
I got to give your mom a gold star the next time I see her for name.
Okay. Yep. That's fair. I'll let her know.
So we put these up here. And then the other place I was going to show you where you can find them is, and I'm not going to press play again because I don't want to throw them.
Here are 3 things that we're watching for this Friday.
Let me pause that. I'm going to go back. If you go to YouTube and then you go to Shorts, this is where, so you go to YouTube, tastylive, go to the Shorts, and this is where you can find a lot of these videos, just to kind of show where Tasty is really trying to put everything out there and break down and take away the fear of everything. Now, this is all of them, but you can look for Shelly. She's easy to pick out. And that's you could probably even sort by crypto or things that you're interested in.
This is going to be a playlist. It'll be crypto in 15 because it's going to be like 15 minutes, real basics, one short at a time. So they're just being trickled out right now, but come back soon and they will be a playlist.
And I actually love and appreciate that you guys are doing these in shorts. I like that it's a minute and a half. I'm going to send this to the University of Kentucky and my son and all of his friends because it is easier. I think the youngins, if you will. Now, Shelly, you're a lot younger than me, but the youngins, if you will, can digest things when they're in smaller pieces than if, I know our show is an hour. So a couple people are watching it, but an hour is a very long time to watch and regurgitate material. So, and I'll never forget, Tom taught me this. He's like, never have anything be more than 17 minutes. TED Talks are 17 minutes for a reaon because they've experimented and done things like this. But if you can break it down to even, you're going to do it in 15 in little bits. It's going to be mind blowing.
Love that. Thank you.
So it'll be here under this playlist column is what you're saying.
Yes.
Okay, perfect. Okay, now, Shelly, I know that Ryan comes on the live show. Have you ever been on the live show with the Bat Brothers?
I have not.
You haven't?
No.
They're a lot of fun. I've been working with Tony Tony and I are cut of the same cloth. We were on the trading floor together years before this. So I've been working with Tony for about 30 years, which is insane. And Nikki's done such a good job learning and coming up. So those guys are my favorite network. But Ryan Grace comes on their show, I think, a couple times a week, right?
Typically Mondays and Wednesdays, depending on schedules.
And I've had Ryan on before too, and I love him. He's very calm. Ryan is a very calm human.
Very, but also really big brain.
Yeah.
Like, I say that with so much love and respect, but sometimes he'll be explaining something to me and I was like, whoa, Ryan, not everybody's brain is as big as yours. Bring it down. So yeah, we
tried to sit with him one time, Jenny and I. Jenny was like, I'm gonna learn how to, I forget what she was trying to learn how to do, but Ryan sat with us for like 30 minutes. And then when he got up, she goes, I didn't understand a word he just said.
Yeah.
But it's the verbiage. I think if we put a little bit of knowledge into it, we could have come up with it as well. But I'm going to go to something that Ryan brings on. I can't believe Spoos are up 14 right now. But I'm going to go to something that Ryan brings on, and we're going to talk a little bit about, Uni's on there. We pulled up the expected moves. So he comes on probably once a week and talks about the volatility of these and the expected move. And it's funny because these, I'm so happy to see Uni on there. I think of these as the big ones. Everybody's always talking about Solana, Ethereum, Bitcoin. And here's your XRP. Did you put this on there for me?
I did not, but maybe he did.
But maybe he did, because I talked to him about the XRP army before, and then here is Uni. So taking a look at these, which has the highest implied volatility? You can see that Ethereum is more volatile than Bitcoin right now.
Yeah.
Solana, Uni, or XRP, are they more volatile or less volatile?
Altcoins are typically more volatile, just because, again, with that institutional money coming in, everything's tracking more with regular everything. But
so does that brought the volatility of Bitcoin down, right? When the institutional money came in, because Bitcoin used to have a very high implied volatility, and then it actually kind of normalized, in my opinion. Is that?
Yeah, everything got a little stickier, I think.
Yeah.
So all the altcoins are typically more volatile. ETH has been getting a little more correlated, which is great to see. But yeah, I look at these weekly expected moves and I plan my DCA moves accordingly. I will, put in my limit orders on the low end.
What does DCA mean?
Oh, sorry, dollar cost averaging.
Okay, there you go. Okay.
A lot of my, again, I'm not an options trader yet, So
I like it, Shelly.
I'm like a buy and a hold, or just sell buy the dip, sell the rip type trader. And so this helps me frame like, I'll just set in a little mid order towards that low end, hope for the best and see what happens. And we do not need to go into this, but liquidity pools is a great way to make money when the market is just choppy sideways, because you're providing liquidity within a range. And these are great ranges to look at when you're setting your ranges. And then you're earning fees as it's all trading within that range.
I'm going to put a little asterisk under what you just said, that if you want to hear more about liquidity pools, tune into Shelly later, because you guys do take a deep dive into things like liquidity pools, right?
Yes, on the Tasty Crypto YouTube channel.
Yeah, I'll go back to that so we can show that as well on the Tasty Crypto. So there are lots of different layers of everything that you can do. But on a more simplistic level, you'll look at these ranges, and this is where you'll kind of and you'll make the market come to you. So if you're DCA, dollar cost averaging, I'm going to take ETH. You'll say, I'm going to put in a bid of 1965 and just kind of let the market come to you with these ranges.
Absolutely.
Is there any one of just these, I'm not going to put anything else on there, that you put more credence in? Do you lean heavily towards Bitcoin because it is the biggest?
My biggest bag is probably an ETH. I want more Bitcoin, but I feel like there's more of an opportunity in ETH. And so, one day I will have that 7 Bitcoin.
Oh yeah.
But to get there,
it's easier to have 7 ETH.
That's true. And I just think that there's more room to run with ETH right now. ETH's doing some really, really cool stuff. Like, Wall Street is putting all the repo plumbing rails, if you will, on the Ethereum blockchain. So real world assets are moving on chain, and they've chosen Ethereum to be that chain. So that's okay,
I'm gonna need this to be said again. So they're putting, what kind of real world assets are going on the Ethereum blockchain?
So I guess
an example.
Excuse me, I think I'm saying this maybe wrong. And hi, Grumpy Mike. I see he was like, Shelly Rand's here. So I guess let's back it up for just a second, because if people aren't understanding crypto and it's all numbers to them, like zeros and ones.
Yeah.
I look at blockchain, which is what's underneath all crypto. That's what Bitcoin, exposed, was this blockchain idea. Okay, like a chain of numbers that creates this unbreakable block of information. Think of that as the next wave of the internet as we know it. Okay, I remember when the internet became a thing, right? And it was like dial up.
We talked about your AOL. You were probably about 12 or 13. Yeah.
Right. So look how far we've come in terms of how connected we are with the internet. But that's all these data centers that are very centralized. And, when people get hacked or when things go down, it's because there was one point of failure. This one thing got hacked and it cost the whole network. Blockchain solves for that in many ways, and that's what Bitcoin sort of ideated, and then Ethereum was born. And Ethereum is very much a solid network, but think of it like the internet. It's using this rail that is the internet to build things. So Wall Street is putting a ton on those rails, moving it off of the traditional Web 2, we could call it, onto more Web 3 blockchain rails. So again, you may think of it as these are just zeros and ones. Well, that's kind of what everything is if you break it down. We're sitting on a computer right now with this code that's, putting your face on screen and my face on screen. We don't know how it works. I don't want to know how it works. That's too complicated. I just want to know that it does work and it's safe. Everything is getting moved on chain because it's just this advancement, right? We innovated and it got better. There's always that jump when things get better that the kinks need to be ironed out. Nefarious activity happens and that's what gets everything a bad name.
Yeah.
And, and then it's now we have mass adoption and everybody's using it and they don't even know you're using it.
Yes, I see. I mean, and that's a very good explanation. But can I ask a question that popped up while you were talking about this? So Bitcoin and Ethereum, they're almost different. They're not two versions of the same thing. You're not looking at Tesla versus Rivian. They're both they're different. They're not both car makers.
No, not at all. Bitcoin, the narrative
get lumped together. They get kind of lumped together in the whole crypto realm.
Yeah, because I mean, when we say crypto, people use Bitcoin and crypto synonymously, and it's like, well, okay, Bitcoin was the first. Okay,
Yeah.
so
It's like Kleenex, right? Like everybody calls it Kleenex.
Well,
Even though-
Tide. Yeah, exactly. So, but Bitcoin is very much digital gold. Okay, it's so finite, it's clunky. You're not going to pay for anything with a bar of gold, right? It's heavy. It's not practical to carry that around in your purse.
Right.
Same thing with Bitcoin. If you try to use it like for payments, it's very slow, it's very clunky, and it's super secure and finite, but it's not efficient. Okay.
So its value is going to be derived, like you said, that's a good way. You can't bring around a bar of gold.
No, nobody's using that.
Bitcoin. Okay.
Exactly. So with Ethereum, that's like a completely different. Vitalik Buterin looked at Bitcoin and understood that, again, that blockchain technology of how the code is working and how it's super secure. And he was like, oh my gosh, okay, I'm going to add on to that and build the app layer. So now this is more of a network and you can build on it. And Ethereum can be used as a currency. You know, ETH.
Yes.
ETH is the currency. Ethereum is the network. So it's like network and token. They're named the same. So again, this all gets so confusing. But conceptually, like, there's now this whole network that we can use and we are using and Wall Street is using. So that's why I think from a trading perspective, this is like, hey, aren't we all seeking alpha? Don't we all want to get in early? Like, don't we all wish we bought Tesla when it was like brand new?
Correct.
So it's like, hey guys, this is brand new. Like, we're still early and it's all very exciting. And I think that, like, if you're reading headlines and they're negative, question that, because it's like, why are they negative? Well,
it's because they don't understand it. A lot of times they're negative when you don't understand something. Everybody's more afraid of things. It's kind of, it's true of everything.
Mm-hmm. Yep.
So then the altcoins are completely different, right? So Bitcoin is digital gold. Ethereum's got the network that Wall Street is now using. And then all the altcoins are just kind of out there peppering the infield. Is that correct? Those are just...
Well, I would think about them more like stocks in a company, right? Like Uniswap is this whole other thing that's
it does something different.
It does something different. So each one is unique. And a lot of, meme coins that are just, we call them shit coins.
Would Doge be still considered a meme coin?
Kind of. It was like the outlier meme coin that actually became a thing because Elon pumped it so much. And now you can actually use it as a currency, which is bananas to me. I was trading that when it was like 0.00005.
Yeah.
And I think that may have actually been the first cryptocurrency I was trading was Doge. Yeah, way back. And
it was everywhere. It was talked about so much.
Oh my gosh. But it was like, it was created as a joke. And then when it became like, the guy who created it was like, you're using this? Good grief, hold on, I gotta go fix it. I made this as a joke. So they actually went in and like reworked the code to make it more secure because, again, it was created as a joke. So it's just funny to see how things unfold. But meme coins give the whole crypto market a bad name because a lot of them are trash. But just like penny stocks, I mean, back in high school, I was like, I'm going to be a day trader. And with my dial-up modem, day trading. I remember finding Netflix and being like, who wants DVDs in the mail? Everyone, apparently. And now look where we are.
Or Amazon, which was a book company.
Exactly.
Mm-hmm.
So it's just, it's interesting. I like understanding what each of these tokens actually represent, like what if you want to call it, like what company is behind them. Like if you're looking at a stock ticker, what's the company?
That's pretty interesting that you broke it down like that. I'm glad that you made the correlation for me as an options trader to an individual stock. Each of these has its individuality, and I don't necessarily know that a lot of people realize that. So very similar to the stock market, if I can extrapolate a little bit, like you said, Apple in the beginning, or Netflix or Amazon that we're talking about. But there's millions of stock tickers out there that don't go anywhere, that remain penny stocks, or that have stayed under $2 for their entire lives,
or are scams.
Yeah. Yeah. So that is a very interesting correlation there, or kind of combination that you put together for me as a trader, because I do think sometimes they all get lumped into one. What cryptocurrency are you buying? That was kind of what Jenny asked today. What cryptocurrency is Shelly buying? But they're all different.
Totally.
And nobody really knows anything. It's kind of like which one's going to take off.
Right. And I think and again, same research you would do on a stock, like, well, what are they working on? What are they building?
Right.
What's the word on the street? So I look at a lot of those things, like, ETH being, it's kind of a sleeper. Like, people aren't really paying attention. Like, did you know the whole repo market is going to be on Ethereum? That's huge.
So here's my notes that I've just written down on the side, and then I'm going to pop in because I know we are. Oh my goodness, time is flying. I do want to show the Tasty Crypto. I want to show the Tasty Crypto Twitter handle. I want to show the Tasty Crypto Instagram, and anything else that you could come up with that will help people kind of understand it a little bit more. Because what I do love about what Tasty has done for options, you guys are doing for crypto, and the fact that this is out there. You shouldn't have to pay for this information. It is all out there. And I love what you said about the beginning of the internet, or even the beginning of like ChatGPT and AI. I'll never forget sitting with Dr. Data when he's like this, and he was talking about the AI revolution. He said, this is as exciting as when the internet started. And I sort of feel like crypto is the same way. It's those three kind of game changers that are going to change the framework of how we do business. So, but pretty interesting. I'm going to pop into, let's go this way. I can't believe. Let's pop in only because we do a show about trading. I got to do this real quick.
Absolutely.
Kelly, have you been watching the market the last couple of days?
A little bit.
We had a massive rally yesterday, so I figured we'd be down a little bit more. I'm sure there is something going on, and someone smarter than me. Oh, I'm filled in something. A TLT GTC, but somebody smarter than me will tell me. But I'm very surprised that we are rallying today. There's got to be some type of news, because we were down a little bit. I expected a little bit more of a follow through to the downside after our massive rally, but we are getting it's getting pumped up again. So I'll go through this. If anything gets if I trade anything today through the account, I will push it through so everybody can see it. So I don't know if you guys know that we do this, but Shelly, on the follow page, everything that we do, we trade live typically. When Jenny's out of town, I will manage the account separately, but I will push through anything that gets filled, GTCs that get filled, or any adjustments that I make, so people will see that they're not going to miss anything from the live show. Now on to, let's go to, I'm going to go to Twitter, and then I'm going to go to Tasty Crypto. Here we go.
Real quick, can I mention something that somebody said in chat?
Sure.
Shelley talking ETH network, Solana is actually faster and cheaper though. Yes, it is. Now, like everything, there's a give and a take.
There's
right?
a gotcha.
Exactly. So Solana is faster and cheaper, but it's a little less secure. So you trade off one for another. So ETH is a little slower and more expensive to use, but far more secure. So that's all I'll say, just to acknowledge.
So if it is faster and cheaper, I'm going to hold on one second. It doesn't necessarily matter if something, this is me, so just everybody send your hate mail to me. It doesn't matter if something is faster and cheaper if somebody picks the other one. So I grew up with video stores in the 80s. We had VHS and Beta. VHS took over the world. Beta was better quality. So just a little FYI, it didn't matter that Beta was better quality. It was everything about Beta was better. The Betamax machine was a better machine. VHS won. So it's kind of like with Ethereum and Solana, Wall Street picked Ethereum or ETH. Yep. So maybe one was, that's just my small brain talking here from like the past. It matters what people.
Adoption. Yep.
Adoption, yes. And thank you very much, Frank the Great, Netanyahu's talking with Lebanon. Not that matters, but that's why we're rallying, and I appreciate it. I've been wrapped up in crypto. But it is interesting that Wall Street has picked ETH.
Yeah. And, ETH does have layer 2s, which we don't have to get into, but there are solutions to making it more scalable and cheaper and faster. Okay. So there are, innovative things happening.
Now, not to put you on the spot again, is there a date with ETH? Like, I know Uni's the end of April. If not, it's going to be done not through 2026.
That was XRP. Well, that's for all of crypto, really, because we're all waiting for the Clarity Act.
Okay.
To just get the regulatory clarity on, like, what is happening. Can we understand with clarity what is a security, what is a commodity, because all of that matters. So end of April.
Do the people who are actually giving the clarity understand what they're clarifying?
One can only hope.
Yeah.
It's been frustrating. I mean, the previous administration was very just, ruling by enforcement. Like, we're not going to tell you what the rules are, but we're going to fine you when you break them. Like, well, what? So it'll be very nice to have, like, what can we do and what can we not do? Or, just make the rules clear.
Yeah. You're trying to follow the rules. You just got to make them clear.
Exactly.
I get it. And that's good. I'm glad you're keeping an eye on the chat. You're better than me. I can't. I try. It's hard. There's a lot of people in there. Okay. So now here's Tasty Crypto for those of you who want to join. Now, who is manning this Tasty Crypto? Everybody?
Mostly me.
Mostly you? Awesome. Mm-hmm. Did you want to? Now, Shelly, I know we had plans. We only have 2 minutes left.
Oh my goodness.
Yes, we have to end the show at 10:55. Did you want to discuss the quantum threat, or should I just let people know that it's right here? Because I know we had talked about this.
Yeah, I think it's really important that people understand, because I know that's in the headlines a lot. And I'll just do this as fast as possible.
Okay.
The quantum threat is real and it's legitimate. And quantum computing is getting faster and faster. And that is Bitcoin is so secure. Is it though? Because if quantum computing catches up, it can actually attack Bitcoin.
Ah.
Now, even the creator of Bitcoin, Satoshi Nakamoto, who we don't know who that is, but he knew that was going to be a thing in the future. Like, at some point, quantum computing is going to be a threat. Now, the thing that I want everybody to know is, if it's a threat to Bitcoin, it's a threat to everything. Your bank account, everything.
So because Bitcoin is more secure than your bank account, right?
Correct. Now, the difference, your bank can make a change really quickly. Like once the super brains figure out how to, create an update and fix or secure the networks or the code, the bank can just implement that. Bitcoin, because it's decentralized, no one person can make a change. You have to have consensus with the entire community to then implement that change. It's called a fork. They've done it before. That's why we have Bitcoin Cash. That's the result of a fork. And then you have actual Bitcoin. So it can be done. It's just, can it happen fast enough? Because consensus takes time in a decentralized environment. Now, ETH is actually ahead of this because the Ethereum Foundation has been super aware of this quantum threat and already working on it. And they're going to implement something very soon. So everybody's aware that this is a thing and they're working on it. It's just, how fast can a solution or a patch, if you will, be implemented? Bitcoin, it's going to take time. And so it's a race. But so that thread is really simple. You can whip through really quickly and just get your mind wrapped around it. And I think it's just interesting for everybody to know. But I think the biggest takeaway is this is a threat to everything. Like, crypto gets the bad rap, but it's like, if quantum computing can hack Bitcoin, it's going to be able to hack everything.
I think
medical
that's a very
records.
valid point that you just brought up, but it is there. It seems to be that they are focused on the crypto of it. But you're spot on accurate. Kind of reminds me of TP when we're selling really deep out of the money puts in SPX, and he's like, "Hey, if these things get tested, we're worried about shelter."
Right.
Yes.
Exactly.
Yeah, so there is the bigger ramifications. So this thread is on here. It's on Tasty Crypto. It's 1 of 7. You can kind of, to Shelly's point, you can kind of whip through it and go from that perspective, which is great. And there's lots of stuff out there. Everybody in the crypto team is accessible, just like everybody from Tasty as well. Mm-hmm. Here's also the Tasty Crypto Instagram.
Yes.
So here is all of these. And I think are these small nuggets too? Are these very similar to the shorts?
Yes, and some of them, I apologize to Ryan. I don't know how his face got cropped like that, but It's a sprinkling of...
No, you should see how Shelly, just buyer beware, because you don't know what we're gonna look like when they put the thumbnail up. You're just you're like, whoa, I don't even know my face made that face.
Right? Yeah. This is a sprinkling of like more advanced crypto knowledge with beginners content. So I encourage everybody to just follow and click through, because the carousels that I put together are meant to be like for anyone to understand. Because I like explain it like I'm 5. That's what I want to hear. It's just too much. My attention span, I'm such a squirrel. Like I need to know like the basics, high level, and then I'll dig deeper if I'm, activated. But otherwise it's like too much. There's a little bit of everything in there.
All right, Shelly, this was the fastest hour of the day. I can't believe I could have talked to you for hours and hours and hours. I feel like it went by way too fast. Thank you so much. I would love to have you on again if we can. Now, I know you've already said this, but you're accessible. And she said, keep the questions coming because it helps them with their content as well. And Shelly, I want to say thank you from the bottom of my heart for joining me. It's been a real joy.
Thank you so much for having me. And thank you to chat. Seriously, email me, tweet me, DM us on Instagram, yell at me.
Teeny bod.
Teeny bod.
All right, everybody out there, good luck today. And remember to trade small, trade often, laugh with us, learn with us, and watch the Liz and Shelly show. I'll see you tomorrow with TP.
Thank you.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade. Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
ain't that they wanna buy me, baby, I'm too pricey. La 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 la. Yeah, I'm cherry.
Nation, welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal, and it is a fantastic Masters Thursday if you're a golf fan. If you're not a golf fan and you're a fan of green, the markets are up. So everyone wins today. E-mini's up 40, Nasdaq's up 170, Bitcoin's up 1,000, and crude oil's up $4. Nothing to see here.
I don't even know what to make of anything anymore. Yeah, I mean, it just kind of started happening. Like, it's just been different little surges that we've seen, and markets have been pushing higher. So, I mean, it's still headline-driven market, man. But the headlines don't even make sense anymore. Like, some of the stuff I'm seeing seems pretty negative, but I think it would seem that it's hard to argue that there's been a bottoming process. It's hard to say that there has not been that. That's what's happened recently, and hey, it looks good. Looks good. Markets are looking good.
Yeah, I mean, yesterday we had the huge move in the equity space. We had the big crush in the near-term futures contract for crude oil. We saw the backwardation get zapped out of the futures curve. We saw the backwardation get zapped out of the vol futures curve. So I guess to your point, I mean, it doesn't. I guess it doesn't matter anymore that E-minis, Nasdaq are up, crude oil's up, silver's up, everything's up.
Yeah, I mean, I think oil is responding to the fact that we're going to be a higher range for some time now. I think, bonds being positive lets you know that things are all right. Even though we just had a PCE number this morning that's showing inflation is still remaining higher, but whatever. Yeah, it seems to be, again, it just seems like we've kind of bottomed and the market is just sort of pushing higher after sort of being a little bit oversold. Yeah, I mean, I always talk about these alerts that I keep putting on, and they keep getting hit more recently. Today, just hit 68.50. VIX is below 20 now, I think, and that doesn't say things have calmed down. I don't know what does. So, I don't know. I've seen rumors that there's supposed to be some discussion over the weekend. I don't even know what to believe, dude. Like, the amount of headlines that I'm getting right now is just absolutely nuts. Netanyahu says Israel will begin direct negotiations with Lebanon. I guess this is why we're moving higher.
Yeah, I mean, we went from a 1.5 of backwardation in the vol futures. We now have almost a point of contango in the VIX futures, which anytime you see that, a point or 2 points or 3 points of contango, the market's just up and to the right. So, I think you might be right about the bottom being in.
I mean, it's making me hesitate about this
the
super bear that I was thinking about putting on. I mean, whatever. I'm going to still put it on. I want $1 credit though. That's what I'm aiming for. I'm trying to get $1 credit, and I will get to that later. But yeah, I mean, I don't know what to believe as far as headlines, but the market that we look at every single day, a lot of things are starting to show that we're trying to push past this conflict. Like you said, you look at VIX, you look at the VIX vol futures, you look at markets hitting 6,800, 6,850. These were areas that we haven't been in several weeks. The only circle that I can't square is oil.
Yeah. And
100%. I mean,
it could just be a bid because of continuation of conflicts. The ceasefire lasts 2 weeks. If it gets extended, maybe you see oil's front month come down.
I mean, so do I get gas now or do I wait next week? Like I don't know how much longer I can wait. Actually,
if you get it at Costco, it doesn't matter.
That's true. Yeah, that's true. Actually, I know. I should. I don't do that enough.
Yeah, it's an embedded cost basis reduction. But yeah, I thought what was interesting yesterday was we saw the back contracts here in the crude oil futures out into the end of this year and into next year. These were at like 70. While the front month was crushing, but now we're seeing these get elevated a little bit. So not too much to make of that right now because that's a long ways away. But yeah, it's just really interesting to see crude oil up, Nasdaq, E-minis up, silver up, gold up. Everything's up. It's very, very odd. But what can you do other than trade it? If you are to believe that this is a bottom and we're going to surge higher over the next couple of weeks here, I mean, your classic V bottom here in the E-minis, not a red day in sight, from 6,400 up to 6,850 in a matter of a week and a half. And a few more days like this, and everything will have been forgotten. We'll be at all-time highs again. So I mean, it's just wild. But I think if you're trading this with SPX, which is always what we do here on the Cboe floor, one of the trades I actually closed. We placed this iron condor a long time ago. It was the super wide 6350, 6330, 7300, 7320. It was a 20-point wide iron condor. And I held that thing for a couple months. I held it through the turbulence. We got down closer to that 6350, and then through this rally and vol crush, it turned into
610.
Yeah, $6 or $7 on a $2,000 risk. So it was your classic 1/3 the width here, and into the rip, got it to a $340 winner. So I took that risk off, and now I think I'm ready to do a similar trade, probably in May. But I do think if you think we're going to get back to highs, calendar spreads are in play here. You could do Super Bowls. If you think we're fading this, if you think the ceasefire is not going to last and the markets are going to rip lower, Super Bear, you're getting lower prices now with vol collapsing, and you can take advantage of that put skew that still persists. I think that's the most thing if you're doing a Super Bear, is that you can sell a call spread and you can buy a really wide put spread for a small credit and emphasize that downside put skew. But yeah, I think for the May cycle, if we were to just enter into a new iron condor right near the expected move, you're looking at 65.50, 65.40, and then to the upside, you're looking at new highs, 7100, 7110, somewhere around there, and that would bring you above where we've traded and to the lows of where we hit during the mass conflict, just a few days of a blip below it. So I kind of like that idea for the next 35 days. If we rip through the upside call spread, I mean, so be it. I'll have so many other positions that offset it because I have a lot of bullish positions anyways.
Yes.
So I kind of like this setup as just a 10-point wide standard iron condor collecting 1/3 the width here.
Yeah, that's the only thing I can't decide. I do want to put on a Super Bear. I haven't, because I do have other bullish positions that I want to protect a little bit. And I just can't determine what expiration I want to put it in. I can do one, so I do want to play, basically I want to play around this area right here, 6,800.
Yeah.
And I can sell the April 30 right now. I just realized I could sell the 68.50, 68.60 call spread to buy the 6,800, 67.85 put spread. I can
For
do
$1.
that for $1.
Look at that.
And I think I want to do that. I still don't know where anything's going to be in 21 days.
I mean, yeah, but this is your nice risk reward shift here, where you're selling a 10-point wide call spread and you're buying a 15-point wide put spread for credit. And this really only happens when you have this dramatic put skew. And we can show this if we just look at, we're trading at 68.25, let's call it. If we go to 67.25 to the downside, and we go to 69.25 to the upside, you can clearly see you've got way more premium on the downside here, even though we're looking at equidistant strikes, $5,500 to the upside, almost $7,000 to the downside. So the extra premium, especially as you move out of the money, allows you to sell a more narrow call spread above the market and buy a wider put spread below the market and still collect a credit in that neutral range.
I got filled for $1.20.
There you go.
Yeah, let's. We're doing this.
Yeah, I'm going to join you on that
right now
because I think at this point in time, 68.50, 60.
I mean, honestly, I expect to be either really right or really wrong on this pretty soon.
Yeah.
Honestly. So it's whatever.
Yeah, and the nice thing about this is this trade is not about the credit really. The credit's just a nice thing if you do end up chopping in this range, which is a low probability. You have a 225-point range for the next 21 days, but look at this market. Straight up, we've gone up 10% in 5 trading sessions. It's insane.
The other funny thing we were talking about earlier is it looks like one theme is back, and that's the selling of the software names. ServiceNow, CRM, ServiceNow. Who else? There was Palantir obviously getting smoked today. I know there's some. I just can't swallow this reason of because Michael Berry said something about Palantir that it's down, but whatever. Nevertheless, you can see a lot of those names are getting hit once again. So I think we've wondered if that trend was going to come back, and I guess it has.
Yeah, and a lot of these names are, household tech names that are down 5-6% into a market that's up almost, 0.75% here. So, yeah, lots to consider. But just like we've said many times before, when the markets are crashing down 15-20%, if you're trying to layer into some bullish opportunities, that's usually a good level to do it, especially long term. When you look at long term historical price action for the S&P 500, the more down you go in a short period of time, when you look 3 months, 6 months, 9 months, a year out, the probabilities are higher and higher that you end up at a higher price. Same thing is true to the downside, though. We still have conflict. We have this 2-week ceasefire, but the market is pricing in basically that nothing's going to happen. But we know how this thing goes. Like this can change in an hour. So
quickly, yeah.
I like the idea of throwing on a downside super bear here, keeping risk defined, still really small, and in this 21-day cycle, still a lot of time for this to work out. Even if we go higher, 30, 40 points a day, you'll take some heat on this, but all you really need is one day where you're down 100 points, 150 points, and this long put spread will come into fruition, the call spread will lose value, and you'll be able to sell out of this. Even though you collected a credit here to start, you can sell out of this again for another credit for $200-300 on a one-day move. So I like it.
Yeah, it's it's just another part of being nimble in the market. Did a whole lot of adjusting yesterday, and this was something I did want to put on yesterday, but I wanted to see if there was going to be another surge and to be able to put it on into that really through 6,800. That's what I feel is an interesting area. So that's why I like it.
Yeah. Teetering here on this crude oil market, I've got the 98.99 call spread that I sold a month ago before all this really happened, or I guess into the rally to the upside. But
it really has pulled back crude, by the way.
Yeah. It was up like $6-7 earlier today. Market's rallying, crude's pulling back, so we'll call it a sell-off from highs. But yeah, 98.99. If we chop around here, I'll make $380 back in the next week, which would be nice. I assume this 79.80 is just going to expire in the money. It's trading for max loss almost, but no reason to close it. I have 40 cents, 30 cents left to lose, and $1,000 to make back if crude really gets crushed here. So we'll leave it on. We'll see what happens.
I got one of those as well, the 90.91.
Yep. So yeah, kind of an interesting day here. And again, I think the vol curve tells the story, at least right now. Point of contango now between the J and the K, and we're contango all the way through the rest of the year here, basically.
I really haven't seen any like news though. That's just a trip. I mean, I'm seeing news, but nothing nothing major.
Right.
It's just all more about Lebanon and Israel, honestly.
Yeah. What are you gonna do?
What are you gonna do? But again, we're seeing everything that you would expect. Equities are higher. Oil is retreating. Dollar is down. I mean, everything you would expect that says de-escalation.
Yeah. I did move, if you missed it, I moved my micro E-mini year-long strangle that was a straddle at 6,700. I rolled it out in time, and I moved the deltas all the way up. So, again, something that we don't talk about all too often, but certainly in the wheelhouse of trades and adjustments, you can move. You don't have to go inverted on a straddle or a strangle. If you want to have no upside risk, going inverted is going to still leave you with downside risk, and I didn't want that in this trade, so I literally just bought back the 6,700 middle of May, rolled it to the 7,100, so I basically shifted my downside in the money strikes to upside in the money strikes, rolled out a couple weeks, picked up 30 points, and now we're sitting right at the top here at 7,100 in the micro E-minis, right where I want to be, because I want to play for this to eventually be done and recover and go, back up to highs eventually. So that one's working out for now. But yeah, that's pretty much all I've done today.
I'm still in the. You did that today?
I did that yesterday. I made the SPX closing iron condor today.
I still have mine as a straddle in the May 29 cycle. 25,500. That's the strike that I've been on in a while.
Perfect.
For now it's fine. I mean, it's only a long 9 delta, so we keep churning higher, just like you. I don't want to be short delta in here, and so at some point, I will shift for sure. I suppose I'll shift further out to June. Not sure yet. We'll see.
I mean, if you go to this June 18th cycle, you'll still be in this current contract. The next one's 200 points higher, so if you're making an adjustment, if you're following along on these trades, you'd have to shift your strikes 200 points higher to make the delta adjustment. But we get this question all the time, like, what's the best way to adjust this? Where's the right place to go? And the answer is really just, wherever you want to go, wherever you want your risk to be. So it's as simple as debits versus credits. If you buy this back slightly in the money, basically right at the money for 1446, if you roll it out to the June cycle, all you're trying to do here is just replace your 1440 debit with a 1440 slightly more than that credit. So maybe it's the 25,000, 25,500, something like that, where you can turn the straddle into an upside skewing strangle. You can do whatever you want here, really.
Yeah,
that's the beauty of it.
I know. I've been playing around with different strikes and how I want to do it, but I won't do anything until it starts to get short delta. Honestly,
yeah.
Which could be soon. Which could be by the end of the day. I really don't know. I really don't know.
Yeah. But yeah, we're gonna pop over to the YouTube chat now. If you want to join us on the YouTube channel, we're streaming live there. Just head over to tastylive. You'll see this video, and you can throw in your trade ideas questions along the right-hand side chat.
Yeah.
What do the people have for us today?
Yeah, sorry for the echoes early in the show. I guess we were echoing for a little bit, but it fixed itself. But appreciate you guys letting us know. Let's see. Crude oil has low volume. I think the floor is 80, so translate to USO trade ideas? Thanks. USO trade ideas. All I've done in there is just iron condors.
Yeah. USO's been volatile.
Vol is coming in today, though.
USO
was earlier.
USO really benefited from the big backwardation because USO rebalances futures contracts, and if they're selling out of near term, buying longer term, or some kind of blend of that, you're selling out of the near term really expensive contract, buying lower price, getting more velocity exposure, we'll call it. So USO really benefited from that, and now you've seen the sell-off because of the front month contract in crude oil selling off. So USO's chopping around 125 here, and if you think the floor is 80, you can really structure this in a bunch of different ways, but ultimately USO is going to be subject to backwardation and contango in the crude oil markets.
Yep.
And if you want to stay defined risk here, if you wanted to do like a vertical spread or just even selling a put in USO, there's tons of premium here, even out in May. $3 for the 100 strike, $2 for the 100 strike. Jamal's been doing iron condors because of this high vol, 82%. You can get really far out of the money here.
Well, and it's pretty expensive to sell single leg options.
Yeah. Yeah.
Pretty up there.
So yeah, I think looking at this all together, like just a setup here that we can exemplify, 100, 150 gives you $150, risking 340. So your classic 1/3 the width here. But again, if you wanted to lean long, if you think USO is going to move higher, you could do diagonal spreads, calendar spreads. Anything is within the realm of possibility, especially with USO. But MCL is another option too. Micro crude, you could choose one cycle. You could go to the M contract and trade something there. Vertical put spread, something like that. Lots of opportunity here with the continued volatility in crude.
Question on the MES strangle. They have the 6100, 6700 strangle in May. And they're just wondering if they should manage. How would they play it going forward? Is it too soon to manage? I mean, it seems like that's a pretty good. Well, yeah, 6700. Never mind. Forgot. Yeah, you might want to manage that one.
Yeah, I mean, you're in the money completely. So
they collected $267. Incredible.
Okay. Yeah, so you're in May. You've got way more premium in your call versus the put. So yeah, I think if you are trying to manage this, you can buy this back and shift it up. Like that's really it. Especially if you want to keep neutral delta or get more bullish delta. The problem is you have a ton of value in this short call, So you'd have to really shift this up higher to like a 6,900 straddle, or even go in the money here, like this 6,950, like something like this. You're gonna have to pay a small debit, I would assume, just because you've let this go in the money by 160 points, which prevents you from moving this in the same cycle for credit. You could also buy this back and go to end of May or even June, and that would really help you out. If you're trying to alleviate upside risk, you could go to like 6,850 or 6,800, and now you have a lot of opportunity to do whatever you want. You could go to 6,800, 7,000, pick up a small credit, and shift your entire in-the-money trade to a neutral delta or a slightly bullish delta here. So
that's a good one.
This is the beauty of undefined risk in this sense, where again, it's as simple as debits versus credits. What is your buyback? You're looking at 273.50. So if you go out to June, 69 days out, you can do a lot of different things that give you that same credit or somewhere near it. But I would just emphasize, if you're in this trade for the long haul, we're not paying debits to make adjustments, because you want to pile on that credit received, because that really helps you in the long term. And my MES position, I've picked up 461 points, and I started this trade right at the beginning of the year. So 461 points beyond my straddle of 7,100. So I've got a break even of 6,650-ish and 7,500. So I got a huge range, and that's because I have not paid a debit. I will not pay a debit on any adjustment I make. I'm just piling on these credits. At the end of the year, I'll probably have 1,000 points plus, 1,200 points, 1,500 points beyond the strikes. And as long as the market, chops around, we'll be okay.
Someone's got a question about SLV 80 put. I assume maybe May. Let's just, for argument's sake, maybe May. Say they're still short that one. Questions about what they would do there. So to accept the loss, close it. What do you think? I mean, you still got a lot of value in that call, by the way.
Yeah, there's almost $2 of extrinsic value here in this 80 put. And in the money short put is just a covered call risk profile. So if I isolate just your trade, you can see here it's just a covered call. So if you wanted to roll out in time, silver's caught a nice bid. This will help your credit received. If you buy back 80 in May and you roll it to the 80 in June, just as an example, you're going to pick up $1.50. You could also consider selling a call and picking up a lot more premium, pick up $5. This leans you a little neutral-ish, but I have the same position. I've got the 87 straddle, and again, it's just a matter of picking up a ton of credit and you'll be fine. I've got $2,000 in credit in SLV. I've been in this trade probably longer than you have, but that's the name of the game with these type of trades, and it just gives you a lot of flexibility here. But I like the idea of going to a straddle. It's not going to hurt you if you get a rally to 80. You're still going to make back a lot more money on your short put. That's still trading for 3-4 times the amount as your short call.
What are we doing on the platform where it says fractional, undivided, beneficial, what? Is that something that SLV actually, I don't know what that means. What does that mean? I don't know. I don't get it.
It might be
probably something within the name.
Yeah, so if you're looking at a specific ticker symbol, right next to analysis, if there's like a non-standard expiration, it'll say like NS1 or NS2. That usually applies to splits. So if you have a stock that has a reverse split or a split and you go through it, you can view your pre-split strikes or your post-split strikes until they clear all of it out. But that might be what you're seeing.
Yeah, it's a trip. When rolling futures, which expiration do you target? For example, or if you roll your 98 short call in CLK, which expiration would you choose? I mean, one that probably involves June, first of all. So this thing is about to expire soon, in a couple of days here, the K contract. So yeah, you definitely want something. And you can always see, right? Like you can see how it says next to the expiration, you can see CL, M6, those type of things, right? So you make sure that helps you know that you're getting into the next expiration. I'd probably, what, they're short the 98? I mean, I would probably go out to Well, the other thing too, and I think you might want to go May. So what I've been noticing around this time period, and probably you have too, is like when you open a lot of these expirations, you'll see how wide some of these options are. That particular one was nice. And again, this is about to expire soon, but go out to like one of the other Aprils. This is what I've been noticing with these. Look, like, actually, this one's not that bad. April 20th, that one's not that bad. But some of those are really wide. And so I think I've done stuff in May 1st. Like that one is a little crazy, whatever that was. I've May, for whatever reason, that's the May 1? Wow, is that the one I've done? And point being is just make sure you pay attention to the option, the widths, because some of them have been pretty crazy.
Yeah.
I'm in May 14, sorry.
Okay, there you
That's
go.
where I am. Yeah, that's where
May
I think
14.
a lot of the volume is. And look at the volume of the options. That way you'll know exactly how liquid the expiration you are trading, because some of those are just really like bad widths.
Yeah, and you can see it here. Like if I'm nitpicking between the 90 and the 90 and a half, or the 91, I'm absolutely going to the 90 because there's 1,000 contracts traded today. If we look at open interest, there's 11,000 contracts open. So you have a much better implied market here at the 90 versus going to the 90 and a half. So just make it easy on yourself. Go to those round numbers. You can see it here, 90, 94, 95. They have much more liquidity than the weird strikes. But to Jamal's point, if you're buying back this April, 7 days out, the 98 for $5, and you're rolling it out in time to the M contract, you have to realize that the M contract's at 89. So rolling the same 98 strike to the new contract, let's say you're going to May 14th, 35 days out, the 98 is going to be much further out of the money. And you're still going to pick up a credit, but it's not the same at the money roll. So just something to consider. If you want to roll to the 98, just know you're not picking up a lot of credit because you're moving it 10 points out of the money, even though it's the same strike. So the delta equivalent roll would be to roll to like the 90 in this case. Maybe you don't want to do that, which is fair, but just something to call out. When you're rolling from one contract to the next, you will see a new last price, and you have to make a delta adjustment to account for the new last price, which in this case is 8 points lower.
My bad on that SLV. They're actually in April, and the call is only like 13 to 15 cents or something like that. So yeah, you might want to take action sooner rather than later. But everything that Mike said applies.
Yeah, you've got no extrinsic value here. You're just dealing with basically 100 deltas, which you can see here, 96 deltas if you have the short put. So if you buy this back and then you roll it out to June, for example, throw it at the 80 straddle, pick up 650. It's a nice credit received. You're almost picking up 10% of the notional value of the stock price where it is, and any rally from here is going to benefit you.
What do we got next? There's a couple of things I'm trying to figure out with Thomas what they're talking about, but and we can answer this generally, I guess. But question about zero DTEs, always getting burnt on zero DTE. Any questions? I assume by that, well, first of all, this is what I've been talking about. Honestly, a lot. And this is one of the things that I was kind of almost going back and forth a little bit with Jim last week on the show. Of course, gamma is king, but look, it's hard to trade near term when things are moving around so much on headlines left and right. Whether you're selling or buying, right? Like, it's pretty difficult. So, I mean, you got to be risk defined, first of all, which I think you are. It sounds like you had a call spread. I'm assuming you sold a call spread and the market's popped up on you here. I mean, it's tough, man. I mean, that's part of the game. I think one of the very few zero DTE things I did was the big move was yesterday. On Tuesday, we were in the office, and I think I sold the $5 wide expected move. It was 94 point, almost 100 point, expected move. I sold that, and that was $5 wide, and I lost on that yesterday, but that was like tight. And I think you got to keep it tight right now in zero DTE.
Yeah, couldn't have said it any better. I mean, you have to adjust your risk dramatically. Like in a regular trade, when I say regular trade, I mean 45 to 60 days, regardless of whether it's defined risk or undefined risk. I'm comfortable risking $1,000. If I'm doing a 1-day SPX trade or a 0-day SPX trade, I'm risking $300 max. And that I usually do the same strategy. I'll just sell an iron condor, collect $200 exactly, risk $300 on a 5-point wide spread, And I got blown out of mine. I had a 200 point range iron condor and the markets were up 200 points. So that doesn't work. But my risk was only $300. And the nice thing about keeping defined risk small and not having a stop is, yes, you could see losses right in the open, but we could have seen a situation yesterday where we were up 150 and then 10 minutes later the markets sell off and we're only up 70 and that trade would have been a winner. So it makes a lot of sense to keep the risk way smaller than you normally would for a regular trade, like a standard trade where you have the ability to manage it more. The 1 day and 0 day trades, you don't have the ability to manage it really at all. Like the whole key is banking on number of occurrences to generate over time with smaller risk and having implied volatility overstate realized over the long term. But you're going to run into situations like this where you have 2, 3, 4 losses in a row and then you have a lot more winners. So, but at the same time, Vecchio said it best too. I was on the show with him yesterday and he's like, I do all these things well, but I don't scalp well. And sometimes like that's just it. If you are having bad luck or you feel like you just can't get a handle on the 0 day or 1 day stuff, it's not for everyone and you don't need to do it.
Yeah, just move away from it for the time being.
Yeah.
Microsoft trade ideas, question mark. Oh, jeez. You know, I might move this one. I'm gonna keep this type of trade on. First of all, I'm gonna talk about the Super Bowl that we have in here.
Mm-hmm.
Probably gonna roll it out to June. I don't care. I'm gonna keep doing this thing until it works.
Yeah.
That's my thought process.
Yeah, I mean, we put this on 44 days ago when Microsoft was at like 400, I want to say.
Yep.
We sold the 380, 370, 425, 440 call spread. I bought back the short call. I think you did too. And we still have plenty of time. Like we're 10 points in the money. Microsoft's at the absolute lows that it's been trading at this whole session and through this whole thing. And there's still 36 days left. So we need a 10-point rally, and anything greater than that is going to be great for this position. I've got a really long-term 500 strike calendar spread here, long Jan, short SEP. That one's flat. But yeah, I agree with you. I mean, if you're looking for bullish opportunities in a Mag 7 stock, look no further than Microsoft.
For real.
I think. But that doesn't mean you throw the house at it. You still got to keep your risk small, and that's what we've been doing. All these positions that we've been layering into have been $500, $500. So that's small for our size. But yeah, trade ideas. They have earnings coming up end of April. I think if you were doing something like a Super Bowl, like the one we did, it'd probably look something like this, 350, 340, or somewhere around there. And then you're buying a call spread.
400 probably.
Yeah, 400, 410, or like 395, 405, something like this. Even if you're paying a small debit, like a 10-cent debit, I don't mind that. Because really the strategy here is you're getting a rally and you're getting the bulk of this value from the call spread that you bought. But that's what I'd be looking at.
Is it a good day for a downside put butterfly? I would say
probably,
so.
Yeah. They haven't been working out recently, unfortunately.
Well, yeah.
But I've been doing a lot more near-term ones. Normally we set this up with like 20, 30 days out. We did just both do a super bear, so that helps our bearish thesis. But yeah, I think if you're trying to hedge a bullish position or a bullish portfolio, a time where the S&Ps are up almost 10% in 2 weeks is a great time to throw on the hedge. So yeah, you could even go to April 30th, same cycle, and we've been doing 50 or 100 point wide butterflies. It's just going to depend on how expensive this is. 67, 6650, 6600. This is $1, nice and cheap. I'd probably make this 100 points wide if we're dealing with that kind of level of value here. 67, 66, 65 is $5.
And as you guys can tell, we always like doing these around those big, nice, round strikes. You know, like I just feel like those are areas where you can actually probably sit for a little bit sometimes.
Yeah. And we've been throwing these on $500 for 100 point wide, and even if the market rallies all the way back to highs, this will be a $200 loser, just because the value holds with time, and any kind of violent sell-off, you can take $200-$300 out of this pretty easily. So yeah, I'll throw this on. What's the worst that can happen?
Yeah, right.
And the nice
what
thing,
expiration year? The 30th?
April 30th, yeah. So another thing to really emphasize here is these downside hedges. The one I just put on, $500. The Super Bear, $800. I have all these other positions that are bullish that are going to benefit from a continued market rally that will offset those losses. So can't emphasize that enough. That's why I really like these downside butterflies, because you're putting up $500 and your max profit's $9,500 if you held it all the way to expiration and you pinned it perfectly, which isn't something we're trying to do. But it's nice to just have that in your back pocket with little monetary risk up front.
Yep. Let's see, what do we got here? Yeah, no, great words of encouragement, Jared, giving words of encouragement to Thomas, who was asking about the SPX0 DTE trades. I mean, if you're in a slump, switch to MES, way less capital exposure. It's true. That's great call out. Problem child, Intel, short the 55 straddle in May. This thing has been on the move, man. Holy cow. I've noticed it. They're short the 55 straddle in May for $803 credit. Roll to the next cycle, the 60 straddle, and turn it back into a tight strangle. What say you?
Good question. Yeah, big rip here, rip through your strikes. Nothing really you can do there. You had a gap up through the night, so still.
This thing's been strong, man.
Yeah, it's been really strong. I think if you're already in the earnings cycle, so earnings are going to be middle of April here in this 15-day cycle. You're already there. If you roll out to June, you're going to get rid of some of that implied volatility value, but you will have some more time value associated. I'm not sure you're going to be able to pick up a lot of credit just because you have a 10-point implied move in May and only a 13-point implied move in June with twice the amount of time and a lower implied volatility.
Yeah, 7
so
ticks.
Just to show you, like, you're picking up $3 by rolling out the same straddle and doubling the time. If you're trying to alleviate upside risk, I think you could go to something like this. If you're trying to be conservative, 60-65 strangle, you shift your upside risk from 55 where it currently is to 65. You still pick up a small credit, which allows you to maintain that credit you've received, and you basically end up with a 60-65 strangle here with $8 in credit, I think is what you said.
Yep.
You could also go to a straddle at 60. You could shift it to an upside straddle, pick up more premium. This will bring you to $12. So lots you can do here, especially if you're trying to stay in this thing long term. But yeah, it's a good question. And if you're trying to alleviate upside risk, I think you got to make a move sooner than later, just because if this thing keeps ripping and your straddle gets deeper and deeper in the money, it becomes a lot harder to make those adjustments out in time and manipulating the strikes for a small credit.
May 9th, 2025, this stock was $21.53. Just 1 year ago.
Crazy.
This thing has been on the move, bro. Let's see. Yeah, good. True, you can do poor man covered calls in Microsoft as well. I mean, it's $300+ name. Those leaps are probably not too cheap, but still worth doing for sure. How would you suggest? Oh no, we already have that one. Wait. Oh, it's a different Intel trade. How would you suggest managing Intel? Short 2 of the 55 calls in May.
Short 2 55 calls in May.
Short 2 of those. Did you move to June? Turn into a strangle for $115 credit? I mean, that sounds good. Sounds good.
Yeah, I think it's a similar story. I mean, you could move your 55s out to June and up to 65. You're going to pay a $30 debit for that, so I don't love that. But if you do create a strangle, now you're picking up a net credit overall. So I think if you're trying to alleviate pressure here, adding a downside put is an easier way to do that. Otherwise, you have to roll those 2 calls out way further in time if you're trying to move them above the market. But I do like the idea of something like this, kind of neutralizing it, especially if you don't mind having the downside risk. If Intel does reverse a little bit, you can get rid of the call, just roll the put perpetually, have a covered call risk profile. But yeah, still flexibility here, but same story. You're at 55, it's at 60, and climbing. If it keeps climbing, it's going to be a lot harder to manipulate the position.
In the money, losing. Dell call spread, 150, 170 in April. Do you ever pay a debit when you can't make money, just extend time hoping that you'll avoid the full loss? I actually do. I mean, I do every now and again. I'm not going to lie. It's not the greatest thing to do, but I do. In this case, oh, jeez. I don't know. What does this chart look like? I'm guessing earnings, though, right? I'm guessing rolling into earnings. No earnings. Do they already have earnings?
I guess not. I mean, if you go to June, it looks like it'll be priced into June. But yeah.
Yeah, it's in late June probably, because they had it on February 27th.
So yeah, I mean, if you're trying to roll this out in time, the problem with rolling out in time with a credit spread is that, or in the money credit spread, is that you are paying way more extrinsic value to buy this long option, which is why you pay a debit for in the money credit rolls. One thing you could consider is widening it out. That's really like last ditch effort, but you still need a big move to the downside. So it's not a great adjustment, but instead of going to the 150, 170, you could keep the 150 there in May, and you could buy the 175 for a scratch. So you're basically picking up another 25 cents, but you're adding $500 of risk to the position. Same story here. Like you could go to the 180 and make it 10 points wider and pick up $3. So this is like forcing a credit by making your spread wider when you move out in time. But again, you still need to move to the downside. Otherwise, this is going to be another loser down the road. So I don't love it, but it's tough.
Yeah. Yeah. Or you just call it.
Yeah. You'd save yourself $150 if you call it. Or if you wait.
Just leave it.
Yeah. If you leave it and you get another 5-10 points to the downside, this is going to go from an $18 spread to a $15 spread, and then maybe you call it. But the long option right now is helping you offset max loss a little bit by $200 or $150, but that's going to go away quickly over the next 7 days if it stays in the money.
Does a 0 DTE option count as a day trade pattern? So I'm not sure what you mean by that, but let's just take up SPX, what we're talking about. If you open it and close the trade, and within the same day, that's on the path to a day trade situation. The reason why we like doing SPX is because it settles the cash, so you don't. I try not to. I mean, for the most part, I hardly ever really take things off. Unless I were to like put on a call and we rally like 50 points. Yeah. I'm gonna. That's worth taking it off. But for the most part, try not to. So in general, not just putting on a 0 DTE trade is not day trade pattern. Obviously, you got to open and close the position to have that happen.
Yeah. If you're using MES, that is a way to get around it. If you're using futures products, but I think that pattern day trading situation is likely going to be going away pretty soon here.
Fingers crossed.
And if and when that happens, we'll be ready for it.
Somebody is on the same MES trade as you, looking for a small debit, 14 points, to make the same adjustment you did today. Worth to take a small hit or go further out? I mean, for the most part, when you go further out, you just try to collect more instead of paying debit.
Yeah. The reason why you're paying a debit versus my credit yesterday is just because the market's up more. But yeah, I don't mind it. I mean, 15 points is whatever, especially if you've been in this trade the whole time. 15 points off of 460 is really nothing. So I don't mind it if you wanted to do the same thing. But to offset that, you could shift the straddle higher. So instead of going to the 7100, maybe you go to the 7125 or the 7150. That will move you from a small debit to a small credit. Or like Jamal said, you could go to the June cycle, and that will definitely give you a credit because it's much further out in time. And that, if you wanted to, you could, instead of going to a straddle, you could go to like the 7100, 7200, or the 7000, 7100 if it makes sense from a credit received standpoint. But yeah, if you want to go to the 50-day, you could just move it up 25 or 50 points, and you'll get the same credit that I got yesterday.
A wide upside broken wing butterfly spy setup. Question mark. Questione.
Broken wing butterfly, huh?
So if I let a 0 DTE expire, it's not a day trade. Nope, it's not a day trade. It is not. just make sure you're doing that in SPX and not like SPY or something that you'll actually settle to shares. As long as you're doing like an SPX that settles the cash, you just let it expire. It's not a day trade.
Yep. Yeah, broken wing butterfly to the upside. I'm just pulling up random strikes here. 6,900, 69.5, 710. Pick up a credit. If you bring this in and remove your risk, you're going to reduce that credit, but I don't mind that either way. And yeah, this is an interesting strategy here. Inside the expected move, putting up $300 in buying power. You keep $1 if there's a big sell-off. The only caveat here is having a 5-point wide spread here in SPY is not really going to give you too much value if it goes in the money. I mean, it'll be worth $200 or so, but you really need this to go down in terms of days to expiration so that you can keep a lot more of that. But yeah, if I were to set something up like this and then there was a market sell-off tomorrow, I would absolutely be moving this call down from the 705 to the 700, because then you could remove the risk and leg into a free butterfly and still maintain a credit if you can do it for $1.10 or less. So if you don't know what that is, if you go to tastylive.com and you search for creating a free butterfly or rolling into a free butterfly, you'll see videos that go deeper into that.
So apparently the guy who was like trying to say that we were fake from the floor.
Oh yeah.
I guess he started doing it yesterday with Liz and Jenny, and Frankie blocked him.
Oh man. Hey, sometimes you get put in timeout from Frankie Boy.
I guess last question here, and I'm pretty sure it's a no, but MBT options, are they tradable? They pretty much are not. I mean, I haven't looked in a while.
Yeah, we don't have them.
We don't? I guess we don't. Well,
BTC.
Yeah, those options are not tradable.
Yeah, these are just huge contracts. If you have 500 grand sitting around, then fine. But yeah, MBT, we're just trading the raw contract itself. BTC, we're not trading these. If we're trading Bitcoin options, we just go to IBIT.
Yeah.
Because IBIT, 18 million shares traded today. For May, you can see these are penny wide. It's a beautiful market, and it's a $40 stock price. So even if you have a large account, you can do multiple contracts here, penny wide markets. It gives you the exposure to Bitcoin 1-for-1 ultimately. So we're trading IBIT if we're trying to trade options in this.
Yeah, it's the best way to do it. It's the best proxy for it.
Yeah. That's it. We're out of time. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. And we're going to go eat some lunch and see what the rest of the market brings. But thanks for tuning in, and we'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at Tasty Live, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Okay, you wanna see? Okay, you wanna see? Perfect timing, I'm on the run. Wait till then tell me something. Said I love it, I'm working, I'm perfect, and you know I'm worth it. Well, I'm high speed, wanna fit. Look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip. Everybody count to 3. Okay, you wanna see? Okay, you wanna see? Come on, y'all. Let's go.
What is going on, everybody, and welcome back to Risk and Reward. Today's Thursday. We got some pretty volatile markets ripping back to the upside today after some mudslides, I guess you could say, earlier in the weekend. We got a little bit more headlines, more news coming out with Iran and just overall conflict. So it'd be nice to get into that and do a little tour to market. What's going on, brother Gus? How we doing today?
Doing good. We're so back, it seems.
You're so back.
First thing I said to you this morning was I was so sad to have to miss yesterday, traveling back from Texas.
Was yesterday the 1,000-point rally?
Yeah, yesterday was the big one.
Was it the big one?
Flying back. Well, I mean, it was Tuesday evening into yesterday's open.
Yeah.
But yeah, the long bias I've had this entire time, the pain I have held through, is all being made worth it here with the moves that we're getting in the last couple of days. So I'm a happy camper.
100%. I know we had given some of it back, but over the last, I would say, hour or two, we've been skyrocketing to the upside too, picking up a little bit more ground too. So I'm looking forward to that. How was the trip, brother? How we doing? What's new? Anything you got for us? Anything out of the blue?
No, nothing too crazy. Yeah. Good trip. Always good to spend some time with family. Parents are doing well. Good weekend. Ate a lot of good Mexican food. Ate a lot of Whataburger. Hit all the stops you got to. Saw some friends. So yeah,
nostalgic a little bit.
Good. Feeling refreshed. Feeling ready to go. And I came back and the warmth followed me to Chicago, it seems. So
it was so nice walking out this morning.
Yes, quite a pleasure there as well.
Sometimes you need a little reset coming back into things. Yeah. Especially we got some good headlines kicking. So
we got the Masters going on. I got a tea time booked for this Saturday. Now that we got this nice weather rolling around, I'm happy. The seasonal depression is over until we inevitably get cold again somehow 2 weeks from now.
I know. Vic's sitting at 35 tomorrow. No, but before we get into things, we can go ahead and jump straight into the Tasty Trade platform and go from there. What's going on, Jared? What's going on, Grumpy Mike? We did a little bit of...
You got some legs. You got some legs in QQQ.
Oh, I do. I put on a little bit more short delta, so we're going to see how this works out. But we'll get to the bottom of there. But yeah, we got quite a few positions on in there. We'll have to manage separately. But today we did a little bit in NASDAQ. We had some levels that were reacting off of some of the similar levels that we were taking trades off of yesterday. So we took some off of those, which we'll get into in a little bit. Micron Technology has been surprising me a little bit. This one's been up on the day. These are pretty wide markets right now. But after that initial dip that we had gotten to the downside, we got a little bit of a retracement. So we're throwing on a little bit more short delta again. So we're kind of double dipping in Micron a little bit because I think this is maybe within the same, maybe 14 to 30 days we're putting the trade back on. So Sitting break even right now. Haven't really gone anywhere. But we got a little bit of Micron back on there. And then ES, whenever we were skyrocketing to the upside, I wanted to take a stab at it, but just kind of cut that trade off and called it a day. But QQQ, we do have a few legs on here. Sold the out of the money put spread, which was nice just a few days ago. And we're going to be able to collect the full credit on that leg. But with that being said, we got a 1,000-point rip to the upside. So this call spread to the upside is going to be completely worthless. So those are going to pretty much cancel each other out. Not going to get pretty much anything from that. A couple days ago, I bought this 600 put on QQQ. I wanted to add a little bit more short delta. Depending on what the market does, the market's been so surprising staying at these levels or not at least having any type of consolidation or pullback. So I'm hoping we at least get something like that. Then we can take advantage of that put we threw on there. And then we also sold another out of the money call spread so that we're not going to be so much with our back against the wall, forced with time. So that's kind of what we did over there, but nothing too fancy or exciting, but Micron got on some more short delta there.
Yeah, I like it. I haven't had a look at these memory stocks.
Yeah,
almost all week. But
yeah, SanDisk and Micron has been moving a little bit. They gapped up a couple of days ago over the weekend, and then kind of been holding their gains.
Yeah, they're kind of starting to diverge a little bit. SanDisk at all-time highs and up another 7% today, while Micron continuing to not lower lows is not the expression that I want to use, but continuing to maybe stabilize a bit is better vernacular. But yeah, this move in SanDisk is just insane. I think I have to get short. I said the last time we were pushing earnings levels like this, I was like, if we start testing this 850 level again, I simply must get short. And I think it might be high time for that. I mean, because this thing, when it comes down off these spikes, it comes down so hard and so fast. Like I could do something highly speculative. Like what if earnings on, what is this? April 30th. So it is around the corner, but not like creeping up on us. What's the date today? I have this.
Today is 9th?
Okay. 9th? I have this like travel week thing going on where I don't know what day of the week it is, what the date is. So what about what if I do something real silly? Like a short call vertical, take advantage of some of that call side premium, put this at like I mean something stupid, like 750, 760. That's 305 buying power for 700 of credit. Or I could do the 355 or the 755, 760, 145 buying power for 355 of credit. That would involve quite the down move. This is 8 DTE, if I didn't mention that. April 17th expiration cycle is what I'm looking at here. Sort of take earnings out of the equation, and then I could even dip back in on earnings if I get burnt on this one. Because I don't know, I was gonna say a world where I get burnt on this one, like we are so elevated headed into earnings that I'm just looking at it the same way I looked at the last earnings with Micron, where it's like you have to get short here. But this is so far out of the money, I could lose, and it doesn't mean that we would still be elevated. But like that 750 level on the chart is just still so reasonable. What if I move up a little bit to like 775? How are we looking there? 775, 785, something like that.
Crazy. Just 3 days ago, it was trading at 690.
Liquidity.
685 at its low. Last April 6th? What is that, Monday?
Hunting for liquidity at these strikes here. These spreads are crazy wide. Yeah, I'm just going to do it. I'm just going to get silly. What's this? There's no liquidity there. Man, these are all just sort of ugly. How can we make this happen? All right, I'm going to fire on this 750, 760 short call vertical on the April 17th expiration cycle. This is like really, really ugly. But we'll see if we can't get a fill here. I don't know. These are all just sort of gross. I mean, let me move down to 7. I look to get filled for 700 notional. That makes it a perfect 2-to-1 risk profile. That's well away from the mid, but okay, I got it. 701 is the fill.
Getting a fill there? 701?
Yeah, we're in there. Just following what's happened with SanDisk. This is not some grandstand that I think the run is over or anything like that. It's proven us wrong on that front time and time again. But We've gotten some Rivian-esque price action out of SanDisk in 2026, where it tests these highs and then it'll come down really hard off those highs, and you think it's dead, and then it goes back. But I don't care about that part. 15 DTE. Just looking for this, a big drop like this. And honestly, this is a crazy situation where I think 15 days could be too long. I'm worried that might be too much time horizon to give to this thing because, you look at this last pop that we had in mid-March when we test the 775 level, it rips down and it's below 560 11 days later. And then what's 15 days after that? That would be like April 4th. It's all of a sudden back up at 700 again. So perhaps 15 days is even a little too long if I have top ticked this, but we could get another higher day tomorrow or something before the drawdown. And the alternative is 8 DTE, which feels a little too, or sorry, no, I am 8 DTE. The alternative is 1 DTE, which is obviously too aggressive. So yeah. Okay. I'm talking out my ass. I did 8, not 15, so I don't even care. Okay, 8 is perfect. That's right where I want to be.
A week and a day, yeah.
Yeah, 8 days to expiration. Pray that we top tick this, because if it runs down, I think that we're all of a sudden just at 650 before it starts testing higher highs, and that could happen quick. So
I'd sure rather get short at 835 rather than 6 or 7. Any prices that it was trading in over the last even any time this year. So 840 looks pretty attractive up here.
Yeah, so got that added to the account. I haven't made too many moves today. I did trim my oil on the big drop yesterday. I just took off one of the mid-dated ones, like a 75 DTE or something like that.
Yeah.
Just to take some risk off as we start to get these down moves, because I was a little overexposed. But I still do have 4 short oil contracts on. I halved my VIX position today. I have a 18 put at 39 DTE on VIX. I had 4 of those, so I have halved that down to 2 now, beginning to scale out there. And then that's pretty much it. Meta has risen like a phoenix from the ashes for me. I'm very, very pleased with the move that we've gotten in Meta here. It does this. This is how it moves.
Meta said, I am him.
Yeah, I got long again at the very, very bottom. I put on a 600, 605 short put vertical at 70 DTE to hedge against my 710, 715 short put vertical, also at 70 DTE. That's working out swimmingly right now. And even that 710, 715 is almost back at break even. So if I'm able to escape from that at a break even after testing the 500 level since I've had that on, that would feel like a winner.
No, 100%. I could kind of kick myself a little bit. It's nice that you're able to scale out of that USO. When we were at the highs today, I was debating on maybe selling an out-of-the-money call spread. But because I had bought that put and I sold some extra short delta in the indices, I didn't want to short oil at the same time. So because of that, I didn't take the opportunity. So kind of sitting pocketless when it comes down to oil, but still so much juice in them. So.
Yeah, this oil stuff is still a little sketchy because it's, we're putting a 2-week pause on strikes if they reopen the Strait, and it's still sort of nebulous, which is why we're still elevated. But this putting on this 2-week pause in exchange for reopening the Strait is like that gives me gives me faith that we there's a resolution on the near horizon, which is that's what the broader market is reacting to is the idea that negotiations are here and resolution is probably close. Oil still a little bit hesitant because it's, like I said, still sort of nebulous, but I think that this just goes to show this is a 2-week pause in the Strait maybe being open for 2 weeks and we get this sort of down move. So if we get a resolution and the Strait just is real, you can imagine the down move that we're going to see in oil. So still feeling fine about my positions there, though I am still, to be transparent, still deeply red on the four short oil positions, but showing some life.
No, 100%. Momentum shifting in the right direction. Anything else standing out? Affirm? How's Affirm doing?
Affirm is green for
the GOAT
today. Yeah,
the absolute GOAT.
Against the it's just AFRM. One too many Fs.
I think I put 3 at first and I went to like 1.
Taking them out. But yeah, Affirm, this gives me a lot of confidence as well. It did take the bounce with the broader market on open yesterday, but then immediately sold back off and is continuing to sell back off again today against some green action in the broader market. So anytime you got the short positions working out in this type of environment, that inspires some confidence. So still just narrowly green on those, but got 281 days letting that eat, feeling fine about Affirm as it stands.
They took They took volatility to the slaughterhouse, brother. How we feeling about that? I mean, to the absolute slaughterhouse, not only did we send it to the downside, we gapped down to the downside and then went to take yesterday's lows on VIX too. So volatility coming in a little bit. That should be nice for a lot of the premium sellers over the last few days, or, maybe even put buyers on volatility. So
for sure. Yeah. And and volatility wise, I mean, I was directly short VIX, so I'm happy to see the collapse in that regard.
Yeah.
And just in general, I mean, my bias was still so long. And I will continue to stay long biased, though I will start to scale out of some of this stuff and begin to try to rotate back towards, 50, 60% cash, because we still are in a weird spot. If these 2 weeks go by and nothing serious has been discovered and the strikes resume, I think we'll be, chasing the lows again. But on the other hand, if sometime in these next 2 weeks we do find the full resolution, we'll be ripping back to the highs. So want to stay long biased. But as I was alluding to last week, as we begin to approach all-time highs and, test the 7,000 level in SPX, which we're not doing just yet, but we are trending that direction. That's when I want to start to rotate back over to having a little bit of short bias going on in the event of, the headline risk is still very prevalent.
Yeah, 100%. And another thing that's really interesting is just this reversal that we've seen in the overall market. And it's like not betting that it's going to be super, super bearish, but I think the tenacity and the volatility of that up move without any type of breathing room is interesting. But something that I'm really looking forward to at least is volatility. And something I never really thought about it in this way though is like the VIX, because now we're sitting back at 19 again and it felt like it took forever for us just to get to 25 or 30 VIX. But honestly, if the range can at least just expand on VIX itself, like if we started bouncing between 18 and 28, like that range in which VIX sat in, was a wider range, I honestly wouldn't even be against that. It'd be nice to see something like that too, but I'm not going to continue to count on a 32 VIX, a 34 VIX, 35 VIX, 36 VIX. But I think this is typically what we'll see whenever we get headlines kind of going left and right and a lot of uncertainty. And I think VIX is really reflecting that.
I know Intel is catching a big move today.
Intel, INCC?
Yeah. Back over 60 on Intel.
Wow.
Yeah.
My CEO's had a great week.
Yeah, like 10, 15 year highs we got going on in Intel here. I'm somewhat tempted to fade this move because it's a compound of, good news coming through for Intel. This run began before the broader market run began, but then also now it's just the broader market bullish sentiment lopped on top of it. And it feels tempting to fade this with how elevated we are. Even if we were to just sink back down to like the 55 level or something, just let it breathe a little bit before it chases higher highs. It's a similar situation to SanDisk where I feel like we could catch a few red days. Earnings on April 23rd for Intel. We're really moving into earnings season quickly here. It sneaks up on us.
It really is sneaking up on us. Because I know even there's a few more names I think I was looking at earlier today where earnings is right around the corner.
Yeah, some good call side premium on Intel here, and some pretty tight spreads.
Yeah.
Let's see. What if I could just target right at the money here, like 57 and a half. Yeah, I'm gonna get short this. I'm gonna get short a little bit of Intel here. These are just really cheap, so I have a little bit of mobility in how I want to get into these and how I could potentially scale out. So I'm going to do essentially the exact same trade as SanDisk, just a lot less aggressive. I'm going 8 DTE on Intel. I'm going to get long the 59, short the 58 call. That's $35 of buying power for $65 of credit. That feels disproportionate enough to me that at these elevated levels, we'd be fine. And I can put on 5 of these and still be at a reasonable price and give myself some room to scale out. So see if we can't get a fill there. There is good liquidity, but
yeah,
we seem hesitant to fill. $1 below the mid. Yeah, there we go.
101 million shares traded on the day. Somebody take it. We got to have takers. Intel has become a meme stock. Apparently, I haven't even seen what it's been up to over the last 7 days. Didn't recognize, a healthy company, such a prominent healthy company is moving like this. So
yeah. And it's just, we got a similar pop in late January of this year. And then it was followed by the type of move that I'm talking about, that I'm looking for now in this spot where that's actually way more aggressive. Just giant gap down.
Someone got hit.
I believe that was that would be their last earnings report was January 23rd. If this next one is April 23rd, that tracks. But not necessarily, I'm not trading this around earnings. I'm not looking for a down move that's that aggressive. I need it below.
Be nice.
Nice. I would take it. I would certainly take
it.
But I'm just looking for below 58, which is, that's nothing crazy in this environment. just a small little dolphin dive into some range boundness over the next 8 days is all that I would need there. And it's just, it's the same thing that I've talked about with SanDisk and I've talked about with Micron. It's like every time you log one of these 3, 4, 5% days to the upside consecutively, the next one becomes even harder to get home. It becomes exponentially more challenging to continue to grow at this pace. So
there is no infinite growth. Who am I quoting right now? There's somebody. It's not Edison. It's one of those guys though. There is no infinite growth.
Yeah. So just looking for a little rejection back to the downside here, and it doesn't even need to be major. Like I don't even need 55, 57 would be just fine, and that's very reasonable expectation in the next 8 days. I think.
I agree. None major. None major. That being said, anything else top of mind before we switch gears here to the TradingView platform?
Nope, that's what I got. Just rotating into a little bit of cash and a little bit more short bias as we rip to these highs.
These highs have definitely come around the corner a little bit sooner than anticipated, and I'm sure all of us kind of feel the same way. But no, we can go ahead and jump over to the TradingView platform here. I know yesterday we were able to, I think we took a couple trades yesterday. I know where we left off yesterday, guys, I think was this last break-even trade that we had taken. Never mind. I think this was a three-point loss, $6 out. $6. That's definitely a McChicken right there. But with that being said, we took a couple more shorts off this same 25,090 level that we were looking at. This was into the afternoon yesterday. So coming in here, we were really looking to see that day's low get taken out. And we never came back down to this level. So this is going to serve as one of the more interesting levels if the market does come back within inside this range. For a little bit more context, we'll pay attention to that. But over here, I may start doing this a little bit too. I'm kind of, depending on the opportunity, either sizing in one time off your first entry on all the contracts or starting to scale in. There was a little bit more conviction on this setup right here, just because I got stopped out over here and then we just have this death candle. So when there was a little bit more conviction, we just decided to enter with the full contracts right off the bat so that we can kind of just scale out piece by piece as we make lower lows. So we had done that yesterday in the afternoon, right after we had gotten off. And then in the morning today, we had spiked into the same level, had gotten a lot of aggressive selling once again. So we started to scale in a few contracts over here. We entered at about 25,084, so very near this value area high. And then we scaled out to the downside. Really, these swing lows down here were primarily the objectives that we really wanted to see. But depending on how fast the market moves in that direction will determine your comfort level to be able to continue to hold that trade all the way through. Because we scaled out of 2 of the contracts and we left one runner on to potentially catch a larger move. But the market didn't want to do that just yet, at least. It wanted to take another stab at the high before it did it. So that last contract that we shorted first up here got stopped out at break even. So I didn't mind having that one last contract on to potentially catch, maybe an extra 50, 75 points, depending on whatever the market wants to do. It's kind of just a runner, right? But because we were able to scale out of those first 2, totally comfortable snagging some off the table and then just putting that last contract at break even. So that's what we decided to do right there. And then the market gave us another opportunity right off the bat. We scaled in a few more contracts here. We took one off because for a second it was looking like it could potentially break out. But then we re-entered a couple more contracts at the downside. And then once again, the goal was just to scale out as we hit lower lows. But because of the nature of the market right now, I just decided to get out of the full position right there and pretty much just call it a day. Since the market had already given us another good opportunity in the day, we were pretty satisfied for that. Obviously, in hindsight, if we would have scaled out to take these swing lows, we maybe could have captured an extra 75, 80 points. But I mean, just looking at how the market is responding now, this is exactly why it's nice to be able to leave a runner to potentially catch lower lows, but also have that stop in where you can manage your risk just in case we do reverse like we kind of did into the noon hours over here. So we looked to take another short. We stopped out of that one very quick. Oh, no, I'm sorry. We took a few more shorts and then we did take more profit on this one. I forget. We scaled out to the downside again. So sometimes the market just gives you 1, 2, 3 opportunities, and it's not like that every single day. So if this is the first time you're watching, we don't get 3 opportunities in one day. That kind of just the trade just happened to fall in our favor for the day at least. But you can kind of see we don't want to remain short outside of that value area high. So then the market kind of just did its thing from there. And I think there was also some news in the market. So that headline risk has been very real, especially this year too. So if you ever feel the need to take your profit early or take all of it off the table, never feel bad in doing so, because as you can see, the market can flip on its back in, less than an hour. But no, from there, we'll see where the market heads. We have another value area low sitting at 25,289. And I doubt we'll pull all the way back to 25,089 in the next couple hours. So I doubt we start testing this very soon. So it's looking like the trading day might be over, but we'll pay attention to it going into Friday just to see how price responds here. And we'll keep it at that. But market really forcing us just to pay attention to the headline risk and being very decisive on the decisions that you want to make. But I guess that's a little bit nice. That feels a little bit better on the opportunities we had gotten today, since kind of missing out on a lot of the oil action, I would say, over the last 24 hours. So
yeah. This action on oil has been crazy. I'm just sitting here.
The oil's been wild.
Looking at everything organized by DTE on my platform here, and this 36 DTE oil I have might be dead in the water. Also, just as an update, I did just, as Errol was speaking, take off the Live Nation position I've talked about at length over the past couple of weeks.
LYV.
Yeah, LYV. I got out of there at about 90% of max profit. Content to take those gains there. Sometimes I like to let things grind to expiration, but that one, I really thought it was dead. So being able to recoup all the way to get out at 90% is fine. And it's looking like it's starting to hesitate a little bit in the broader scope. Rejection yesterday, and then just slightly trying to chase those highs again today, but seems to be running out of momentum here. Broader market's flying, headline risk. I'm happy to just take the 90% and recoup my capital there. So
I like it. It's not that these things are moving. I mean, you'd be surprised. There's these other underlyings like Live Nation. These things are moving very directionally too. So they definitely have some juice in them.
Yeah.
No doubt.
Content to let that eat. And then that's really, that was the only thing that I'm flagging that really needs management here. My Nike longs are not panning out the way I had hoped, but we got a little bit of time left on those.
Yeah, we got some time. We'll see if we get there.
It's ugly, but the bottom does seem to be in. I'd be shocked to see us make lower lows here, and that was the whole thesis. So I was maybe a bit too aggressive with my time horizon here, but at the same time, I only need over 47.5, which is right freaking there. So hopefully that'll happen. This is some good drawings here.
Thank you, Picasso. Not a great drawer. I will be honest. I don't have the most steady hand at all. My hand needs to be like anchored to something for it to like be pretty consistent.
Sure.
I was painting some nails, not my nails, but I was painting some nails yesterday. I was like, wow, I cannot control my hand. Like, stay still. So, anyways, anything else top of mind before we wrap for the day?
No, Live Nation. Only thing top of mind for me. Painting anything with a brush has always been challenging for me. A brush is it's a
broad brush. What kind of brush? Broad, narrow brush. What kind of brush?
It's just a tough tool because if you press too hard with a brush, then the little ones on the sides want to flare out on you.
Yeah.
I was never a good painter in art class in school.
Yeah.
Never. It's always been challenging. If you can paint out there.
Oh, you're saying
kudos to you.
Oh, I thought you were saying a metaphor for a second. You're saying in general, like a brush.
Yes.
Too good
No.
with a
Yeah.
brush.
Actual tactile.
Yeah. I've seen some people that are really good with just the expectations on where those bristles are going to land, but I just never been able to get a hang of it. They make it look easy though.
Yeah, but no, that's all I got.
Lastly, you draw?
What?
You draw?
No.
Okay. You just like specifically said I don't.
I'm artistically challenged in general, but I'm slightly better at drawing than I am at painting or anything involving a brush. So that's that's what I got for the day.
Cool.
Just slightly rotating into some short bias, taking some buying power back in, just some risk off the table, have some capital ready to deploy for whatever giant directional move that we get next. Looking to rotate into some short delta. Short delta in the last 7 calendar days for me has moved my portfolio delta in the last 7 days has moved from 67 down to 28 now. So we're slightly getting a little bit more neutral. Happy to take some of those profits on the longs.
100%. Jared said, I'm an engineer. I can build you an engine, but stick figures is how I draw.
Yeah.
Jared is over here whipping up the blueprint. Like, trust the process. Just trust the process. Wait for the finished product. Jared, nice boy, Ranch, Big Dale, Grumpy Mike. Everybody else, thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Turn it up.
We're back. It's still Thursday, April 9th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, more signs of hope today in this market. Everyone's feeling good.
Yeah, I mean, we're breaking through it little by little. Overnight, oil was up a lot, but now it's come down. So getting a little upside in equities here, and seems to be doing what, we thought it would do. Kind of just grinding a little higher, not as much as yesterday.
We have less volatility than yesterday, that's for sure. The VIX has flirted with the 20 level at points today, dropping below it even some. Likewise, we had oil, which was trading up towards 102, 103 again. Last time I saw it, it had a 96 next to the quote. So that has really eased off. And with it, Thomas, oil coming in, volatility coming down, good news for stocks, which have had a much more modest push higher today, but they are still pushing higher, up 0.6%. Perhaps because we are finally seeing signs of ceasefire progress here, at least in the news. Yesterday, there was concern that Iran was going to back out of the ceasefire because Israel was violating one of the terms. One of the terms that Iran laid out was stop attacking Lebanon. The U.S. and Israel said that wasn't one of our terms. But Iran said, okay, well, if it's not one of your terms, then we're backing out of the ceasefire. While they were close to backing out of the ceasefire, apparently, Pakistan relayed to Iran vis-a-vis the United States that the U.S. was going to get Israel to stop. And that is what came out this morning. We had a report from NBC News that Trump had asked Netanyahu to stop the bombing in Lebanon. Israel turned around and came out and stopped the bombing in Lebanon. It was looking for a ceasefire truce with Lebanon right now as well. And that's what the market wants to see, because now the catalyst for potentially breaking the ceasefire has been dissipated. Gives you a little bit more breathing room to the upside here, Thomas. We're going to be talking about that and more over the course of the next episode. But, one of the reasons why I just have so much hesitation to chase this market to the upside right now is that some of the things that were bothering the market prior to the Iran war, they haven't been resolved. And they were the albatrosses preventing us from making significant breaks to new multi-month, multi-year all-time highs. I'm thinking of software here, Thomas. IGV, the software sector ETF. Because while everyone is still focused on Iran and oil, what's happening with the headline indexes, IGV here today is breaking to a fresh yearly low. And so we do have this AI boogeyman problem, so to speak, still lingering in the background, even if it's not getting the attention that it was at the end of February when we didn't have the Iran war as our main center of attention. We do have this problem percolating. And this goes the same for banks that are connected to private credit and those private equity companies, which have not exactly moved higher substantially and recovered the losses that they accrued earlier this year. So, Thomas, I know that you and I both may be a little bit hesitant on this market. Is this me being selective and looking for confirmation bias to reassure myself that I'm correct, not being long the market right now?
Well, I mean, IGV yesterday, we saw it initially, it rose with, lifted with sentiment, kind of rising tide lifting it, but it sold off through the day, ended lower. Now today we're getting another move higher, breaking recent support. And I mean, obviously it's going down when the market's going up. So there's definitely still that concern in the background. You're just not seeing it in the headlines now because everyone's focused on the Iran war. But yeah, I think it still represents, a problem once we get past this, especially that software stocks are still going to be punished after this. I mean, they are right now, despite a market that is going higher. And it's looking like it's breaking major support going all the way back to 2024.
The April lows are being cleared out. We bounced off them at the end of February, Thomas, but today we are cracking on through them. Yesterday's action was a lot where you saw the market gap open higher, and then at the end of the day, where the Nasdaq's up 2.5%, IGV is lower on the session. The market treated the rally as exit liquidity. And so what are we seeing here today? Breakdown to new lows. These problems aren't going to be gone just because the Iran war right now is at least giving us some reasons to be optimistic in the short term. Eventually, these catalysts are going to run out of steam, and then we have to get something legitimate to hang our hat on to provide that next kick higher. So We have some good news moving us to the upside right now, Thomas. Can't deny that. 68.74 session highs here, up by 0.7%. The NASDAQ up 0.7%. The Russell up 0.9% here. And we got that catalyst this morning. We were trading closer to 68.25 or so when the news came out about Israel stopping its bombing of Lebanon. And we've added almost 1% since then. So at what point do you start to sell, Mr. Westwater, if you're like me and don't believe this thing?
Yeah, so I have, where is it? I sold a call spread on ES, and it is at, it's not loading right now, but sold a call spread. So, out of the money, still room for the S&P 500 to rise, but expecting more volatility in the ceasefire perhaps. Now, supposedly there's a attaché of people going over from the U.S. this weekend for in-person talks, and I think what comes out of that is really going to set the tone for next week.
Right. J.D. Vance, Steve Witkoff, Jared Kushner appear to be that delegation, which is an interesting group of people to have because several weeks ago, prior to the war starting, you had Iranian officials complaining that these folks weren't really being serious negotiators and weren't being reliable messengers back to President Trump. J.D. Vance, likewise, again, perhaps posturing, but J.D. Vance was complaining yesterday that the Iranians misunderstood the ceasefire agreement. Perhaps it's because they don't speak English that well. So, maybe he's just trying to be a bit of a bulldog going into the negotiations, but also he's poking the people he's going to be negotiating with. So we'll see what comes of it. But you clearly have the framework here of something to off-ramp further still. And the markets are enjoying that on this Thursday with our volatility coming in substantially. I think that's the one thing people are paying attention to most here. The fact that we have a 19 handle on the VIX again here, Thomas, we're getting close to our lows that we've seen over the course of the war right now. In fact, poking through to fresh lows in the volatility index here today. So is this the sign to you, the fact that volatility has now broken out of this plus 20 range area, that we have turned a corner of sorts? Do you now take that as a sign that we have now entered the new regime?
I mean, yes, in a way. I think volatility, it's still going to come down unless we get some walk back after these negotiations. But both sides, I think, are incentivized to kind of push this forward. I don't think it's going to be a really quick resolution. But as long as there isn't an escalation, I expect this volatility to keep kind of coming out of the market a little by little. Until we ultimately get some kind of a deal where I think you'll see the biggest move down in volatility. We're still elevated, so I mean there's still some things to do if you expect volatility to continue to come down with premium selling. But overall, yeah, I think it'll continue to come down. I'm not sure if we get a really steep acceleration in equity prices. I think we're going to get more of a tepid step up and consolidation along the way versus big up days one after another.
Thinking about where we were in February, Thomas, in terms of volatility, right, prior to the war starting, and if we are looking at a serious off ramp, then it stands to reason that volatility should come in more than where it was in the week or two prior to the war gearing up, because during that time we were doing our troop buildup. We were watching, those carrier strike groups move into the region. And so that may have been contributing to this rise in vol. So if the carrier strike groups leave the region because of a permanent ceasefire, then you could make an argument that vol has to come in a little bit more. But I have to do technical analysis on volatility. Certainly would never do something like that. Just thinking about where vol was trading for a portion of February, you're talking about 21. I'm looking at the M26 contract right now out in June. You're talking about 21 and a half in that area. When you go over to the J26 contract, Thomas, the front month right now, you see that vol is effectively at the low where it was February 26th, the Thursday. prior to the war starting. So you really have to ask yourself the question right now, given this market rally that we've seen. The S&P 500 was 6,400, now it's 6,870. The question you have to ask yourself is it worth chasing for these last few points? I mean, maybe they're not the last few points. Maybe this is the beginning of something much bigger. The trek to 72, 74, 8,000, who knows? But in the short term, given everything that we know and the gilded optimism that we're currently operating around, should volatility be lower, given what we know, than where it was prior to the war starting? And having processed all that information, my guess would be this is probably a floor of sorts. It's still high. VIX at 1920, volatility futures out of 20 is still decent volatility to do some selling here. It's a 40 IVR after all in some of these indexes. I'm not going to say it's gone, but this feels like another waypoint for us to now rest at and say, let's see more progress.
Yeah, it makes sense for some volatility to stay in here until it's over, right? Because there's still a chance it could unwind. You know, it's still a conflict where it's not settled. There's still higher oil prices. There's still, you know, now a little bit more growth fears after the GDP number. There's, you know, there's things that will keep it elevated compared to the pre-war highs, but you know, what happens to see an acceleration would have to be, you know, some kind of escalation, military conflict, the talks falling apart, something like that.
This thing still has room to run if it's an inverse head and shoulders pattern in the S&P 500. Once we got through that 66, 50, 75 area, you have your neckline break. And so with that being triggered a few days ago, the target gives you something north of 69, about 69.60, just around, give or take a few points. Markets overshoot, undershoot all the time. But that, generally speaking, has not been reached yet, right? We've achieved a significant amount of the thrust, but not the full move. So I'm thinking about the S&P and thinking about the NASDAQ here, and you know, the NASDAQ looking better. It certainly has broken that downtrend that's guided us here over the past several weeks, going to late January. Break the bearish engulfing bar high here from March 18th. I mean, there's some serious technical damage being unwound right now. We have to give credit where credit's due. But these patterns that are showing bottoming and relief, they may be nearing their completion. You get a step back for a little bit, and then upon that step back, that determines whether or not we're actually in the throes of a legitimate rally, and we can defend the breakout. So one day at a time here. The market could still run up right now, particularly if we're going into the weekend with news that the ceasefire is in place and negotiations between high-level U.S. and Iranian officials are proceeding.
One really interesting thing is SMH breaking out to new highs today. And, you know,
Yes.
we've made this big move in just 2 days to where we're breaking into new highs.
Huge.
Yeah.
Huge.
And, you know, I think that is a vote of confidence for the market going forward. I mean, the semiconductors have done a lot of work. They're doing a lot of work now. It looks like really, and you got this, you know, this pretty good discount. You know, if you're looking at the drop from the war, you could have bought all the way at almost a 16% drop from previous highs.
And it's going to be a wicked rally if it keeps going here, Thomas. I mean, I can make a case that we're looking at a bull flag of sorts having come together in the tech sector. And that's been carved out over a number of months going back to last October. Technically, that's a case I'd make. I just have a hard time crossing the bridge. But these ships still aren't going through the region. You know, I sit on AIS tracker websites and watching the ship flow all day, all night.
Yeah.
Nothing's moving still.
Well, yeah, there's only been a few ships really, and there's been, you know, tanker trackers seeing ships that have started to move towards the strait and then they turn back all of a sudden. So still a lot of confusion. I think a lot of tankers companies are still waiting for more clear direction, guidance on how to do this. And the ships that are going through a route that's very close to Iran. Perhaps they're, you know, doing some kind of process where they're registering for a passage. Other people are saying that they're avoiding the typical shipping route because it might be mined.
Yeah, the typical shipping route is closer to Oman's territorial side of the strait. And that's apparently what Iran has mined. So now if you want to get through the strait, you have to go through Iranian territorial waters. And you could only do it through this, I think it's what's called Kashim Island. Learning a lot about the geography of the Middle East these days, Thomas.
Yeah, and it makes sense tactically for them to do that. If you're going to, you get more control of the strait if ships have to pass closer to your borders than they did. So if they did mine it, they mined closer to Oman to concentrate that traffic closer to their shore so they could get tighter control over this shipping route.
I see here that Trump is expected to speak on this all in a little bit. We don't have an exact time. Yeah, no. Lots of comments from Arabic leaders, from Middle Eastern leaders. Nothing of interest here. That's suggesting we're off course. So, Thomas, the plan as was yesterday. I mean, I'm waiting for an opportunity to sell, to get some short deltas here. I'm not going to chase this to the upside right now. I'm still doing directional neutrality for the most part in S&P 500. There's a short dated put spread that was put on for protection that it's going to expire worthless, which is whatever. But here, the ones that have actually been pushing on, these could be monetized today still. I mean, this particular one, the new one that was put on, is be at a little bit of a loss. But the shorter dated things that are closer to rolling off because of where the strikes are right now, I'm not particularly concerned about 7100, 7200 being tested. So provided the market rally here, there are still several things people can do layering into positions. We could look out at the one standard deviation move, which here at 29 days to expiration right now, that's 63.50 up to 73.50. And do we really think that we're going to get to 73.50 over the next few weeks? So maybe not. Maybe you want to start scaling back, and doing the short call spread here is a way to express that point of view. Short iron condor is a way that maybe you want to be optimistic about this, but you don't think that, necessarily we're going to out of the woods on other issues like I am with IGV. I think that's where the short iron condor comes in, because if volatility keeps going down and the market just trades sideways or even inches up, but doesn't crack through the all-time highs, then we're golden. It's just, it just feels uncomfortable given my proclivities as a bull to be on the sidelines watching a market rip the way that it's been ripping. Tough to stay away from it.
Yeah, and obviously yesterday was the big move because it was on the news. Today we're still seeing upside, but it's smaller. There's less speculation. So I think tomorrow it's going to be telling, because are traders going to want to carry risk into the weekend, which they've been averse to for much of this war, maybe besides for last week? But is that pattern going to come back in where we see de-risking going into the weekend, where you have an extended time frame where there's more chance that something bad happens?
We haven't seen de-risk, de-risking wasn't necessarily the case going into Easter, right? People were happy to hold the market up after the previous week's rally. We had that huge rally off the low on March 31st. And then going into the weekend, I was of the mind that people would take a step back, but wrong. 68.69 though here, Thomas. NASDAQ, 25,229 as it were. So midpoint of recent trading ranges, that is certainly one way to look at this. That's I keep gravitating to that right now because I feel personally still uncertain about what's the scope and scale of what's occurring here. Are we close to the midpoint? The midpoint's basically the 50-day moving average right now. In fact, of the past 6 months of trading, 24,835. NASDAQ's a bigger futures product than the S&P. So if you were to do something like a short iron condor here against the highs north of 26,500 and below 23,000, you'd find yourself in a situation where you're looking at some pretty steep buying power used up. Let's go here, 26,500, right? For the average retail trader putting on a position like this, that's a big max loss, risking 3 to make 1. Also the buying power over $4,000. NASDAQ futures, generally speaking, they're not they're probably not suited for most individual retail traders, given account sizes and the buying power that it would take up. It's why I spend more time focusing on ES. And I know most of, Tasty Nation, those are the folks who are trading ES, MES, SPX more than anything else.
Yeah, it's easier to get in and out of the S2 than the NQ.
A little bit easier. Thomas, we can move on to the bond market here today, where they're looking better. The 30-year auction that came out this afternoon wasn't great. Again, probably a C plus maybe in terms of a grade. That's been the cut of the jib for the Treasury auctions all week long. But you know what? They're not fading today, and that's good news. Talking about getting buy-in from other asset classes that was seemingly a little bit more absent yesterday. Notes and bonds are both moving up, and the volatility crush is very real. 16.3 IVR now here in ZB. Just from that perspective, do you think that we can proceed safely elsewhere? Shouldn't we be relieved and get confidence in taking a directional beta long exposure in equities if volatility in the bond market is coming down and yields are coming lower? This is all good news.
Yeah, I mean, I think so. I would like to see a lot more upside. Bonds still have a lot of work to do from the highs we traded at just recently. It's like, I think right now the Fed is pricing, or the market's pricing for a Fed cut 25% by the end of the year, around there. And that's what swaps are pricing. I'm not sure if it's a lot different for Fed funds futures. But did the GDP data change any of this morning for the rate cuts? Did you see that?
Let's go to 8:30 this morning. The contract of rate cut odds are going up, then this should be going from bottom left to top right. No, didn't do anything. I don't think so. So it's the third final revision, right?
It's still mostly about oil, right? I mean, what oil's doing.
Oil's come down.
Yeah.
That's the only thing. Oil's come down. And oil's off $6-7 from its high. And notes are given the opportunity to run. We had that auction come out here at 1 o'clock. Did that do anything for the market? Not really. That's the candle. Hard to make the case that the downside we're seeing here at 1:57 Eastern time is related to the auction. That didn't provoke any movement in expectations. You could see it here in notes. Auction comes and goes at 1 o'clock. The market doesn't really do much of anything with it. So we're all paying attention to oil. That is the whole ball game right now, Thomas. Oil is the fulcrum upon which everything rests. But the fact that we've seen volatility come off so meaningfully at the long end of the curve, that is one of those things you like to keep in your pocket if you're an equity market bull. It gives you confidence that if you're holding long right now, you have some other substantiation that was looking a little bit absent, dare I say, yesterday.
Yeah, and so we're like 20 days somewhere around there from the next Fed meeting. When's the blackout window start? It's like sometime next week, right?
We are getting very close to it. The next Fed meeting is the 29th, which means that the Fed communication blackout window begins on the 18th of April.
18th. So, I mean, maybe watching for what they say on oil. The thing is, the Fed, if oil comes down now, and it's expected to, if this is resolved, the Fed doesn't like to react to one-time moves in inflation, whether they go up or down, and it's one time. They care about more the long-run trajectory of where they see prices going. So I think they're largely going to brush this off, even if the talks are still going on. The expectations are there's some kind of ceasefire coming. I think they're mostly going to brush off any temporary bump in inflation from energy prices and leave that pretty much, largely out of their calculus. So then you go back to, inflation expectations over the long run, what growth is doing, And, we don't have another jobs report in between now and then. So it's going to be mostly weekly data that we're focusing on from here.
The inflation data that we got this morning was not good. One of the again, thinking about reasons here to be a little bit less optimistic than folks. So we had the PCE report come out. Core services X housing, one month, 2.7% annualized. Looking back over the past 3 months, it's 4.1%. Over the past 12 months, it's 3.3%. In February of 26, 56% of categories had greater than 3% inflation in this latest data series. So this inflation is just not, we already were going into, and this just given the nature of the report, Thomas, or thinking about what we looked at today, this is yet to even digest the oil impact. The oil impact is going to arrive at a time when inflation was already above target and moving in the wrong direction. I don't know how the bond market is going to enjoy that. I saw Jeremy Siegel put out a comment earlier, Wisdom Tree's Jeremy Siegel, that the Fed's next move needs to be a hike and not a cut after today's PCE report. So we're really that's why I keep saying day by day, there's a lot of these issues that I pay attention to that usually, like last year, weren't problems. One of the reasons why I could tell Ilya to go take a hike with his bearishness was these macro level problems weren't cropping up in reality. But now they are. The inflation data is gross. Tomorrow we get CPI, by the way. The headline number doing at 3.3% from 2.4 month over month is expected to jump up 1 full percent after rising 0.3% in February. So if you don't see it yourself at your gas stations, you're going to see it in the official government data tomorrow. It's beginning to arrive.
Well, I see it at the gas stations, but yeah, the CPI number, that's tomorrow, you said, right?
Tomorrow morning, 8:30 Eastern, 7:30 Central.
Yeah, so that might set the tone for tomorrow.
Just a reminder to the world that the Fed is in less of a position to cut now. And so even if the war ends, they want to look through the inflation shock, given their history, recent history of 2022 and the experience they put us all through, thanks to the belief in transitory. Do we think they're going to look at 3.3% headline inflation up from 2.4 and say this is great, particularly as oil is still sitting around 90? Come on. The metals market still feels cautious around all this, Thomas. Gold's here yesterday, tried to make a run up, got rejected. Today is trying to make a run up and holding it a little bit better. Not quite through the 50-day yet, but we are starting to retake the uptrend from those November and October and November lows there, Thomas. It's almost got its hooks back into me where I go, okay, yeah, let's get long again and just ride this for a little while. How are you thinking about the metals here?
I mean, yeah, we need a little bit more to resume this trend. I was thinking something like an iron condor this week. But you're right. The chart looks like it wants to go higher. Somewhat of a little bull flag here playing out. Needs to break above trend resistance, moving average. So gold went down. We assumed on Gulf states selling gold to finance cost. Do they come back in and buy gold? I don't think they do that right away when the concern is, they have to come out of this war with fixing, infrastructure, kind of reestablishing order in the Gulf states. So I don't think that's going to happen right away. But if you expect that, the equity market's going to do well, gold was going up while the equity market was doing well previous to this. So, if you assume stocks are going up, if you're getting long gold too, then you're almost making the same trade again in a way.
So So maybe that's how I'm enjoying this still, because I still have that 5,000 call, which I have been a good soldier holding on to, watching it melt away. But the movements that we've seen over the past week is still very much in play. And given how much I paid for it several months ago, I could still sell it out here and turn it for a quick profit. So I see this like you do. It's one and the same. Is gold going to have a bigger role on the other side of the ceasefire? Like, is this America's Suez Canal moment? I saw here something from one of those OSINT reports, OSINT accounts on Twitter, and it's been passed around here. So Iran is demanding that oil tankers passing through the Strait of Hormuz make toll payments in the form of cryptocurrency, including Bitcoin and stable coins, such as Tether's USDT or the Trump family's USD1. What did George Carlin used to say 20 years ago? It's a big club. You ain't in it, Thomas.
Yeah.
It's a big club and you ain't in it. So just gold, silver, the cryptos. I know the cryptos are having a decent day. Not as well as they were doing before, 1% or so now. How concerned are you that Trump is going to allow something like that to happen during the ceasefire? Because, not for nothing, all the gold bugs out there who say things like, well, the fiat currency is nonsense, and were it not for the petrodollar, the dollar would be worth a lot less. I can't help but hear those voices, the Peter Schiffs of the world right now, screaming about petrodollars and the dissolution of that system and what it would mean for precious metals.
Yeah, I mean, the thing is, the U.S. dollar, a lot of it, and you see the memes before, right? This is memeified. It's like what backs the U.S. dollar, and you're showing a carrier strike group pretty much, or B-2 bombers. And the idea that that's based on is that, the U.S. dollar or the U.S. government military secures world trade. And, part of that is being in the global reserve currency as the global superpower. So, maybe it hurts the U.S. dollar a little bit long term. Ultimately, I still think it remains the world's reserve currency. For that to change, really, you need something to shift to. And the euro can't do it. The yen can't do it.
USD1 can do it, though.
Yeah, sure. Yeah. I mean, we'll have to see about that.
Gold could certainly listen. There's been talk for a number of years about the BRICS led by China accumulating enough gold so that they could have a gold-backed BRICS payment system. The U.S. giving up the ability, the countries transiting the Gulf and making payments in dollars. We need a new narrative here, Thomas. What better narrative than the end of U.S. dollar dominance? But I say this tongue in cheek, and I know there's really no other choice right now. You can't go to any of these other currencies because, in part, Iran's sanctioned, right? So, like, they're not going to ask for payment in euro because they can't operate in that realm right now. Crypto is probably going to be the place to be, and the fact that crypto is even being discussed, I think, is one of the significant use cases, right? It's outside the hands of censorship and sanctions and blah, 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 blah. And here we have it. It's being used to undercut the global empire. So I'm waiting for silver, getting back on topic, 47 IVR. Volatility is pretty cheap. We haven't moved through the area where the market has been using it basically as a crossroads of sorts. We'll call it around 76, 78, around there. We've seen it treated as support. It's been treated as resistance just over the past 4 or 5 weeks. So to that end, buying calls right now into resistance is not the way to do this. I also don't want to be short here. So what my plan is, I'd like to see the market get back through this candle in particular, right? The 4-hour time frame, the 8 a.m. candle on March 18th. Why do you say that? Because that's the candle that provoked the break of this range. If we can get through there, the high was $79.12.5. If we can get through $79.12.5, you're now looking at the sequential period of time that defines silver's breakdown and consolidation that has now ended from a technician's perspective. And so asking for $3 basically of improvement here is not nothing. It's a $76 product. And so getting $3 out of this is, 4% plus here. But were we to get that, I start thinking about what do positions that are looking like recent swing highs look like? How can we build into something maybe a little bit bigger now that these Iran risks are receding? Do we think that silver and gold are going to have a place in the world if the dollar is being challenged and we're no longer doing oil sales exclusively in the US dollar? Absolutely, at least in my view. So not yet, but getting to a place where like a 90, 91, 90, 92, something that where we're risking 1 to make 4 to make 5, make 6, at least it has a floor above 20% probability of profit. I'd be okay with rolling the dice on silver again. But I don't want to do anything directionally neutral here. I definitely don't want to get short. I don't feel great about getting long into resistance. But gold, silver, they are perking up and they're starting to act like they've maybe started to get their chutzpah back. And that's exactly what these markets, it's what I've been waiting for, to finally get back in on these markets for the first time in weeks.
Yeah, I'm not getting into gold or silver just quite yet. The only metal I have on is a short put spread in copper. And keeping that on for now. But when I get in, it's probably going to be gold for some upside.
Copper has perhaps made the turn. We're looking for, again, reasons for optimism. Dr. Copper here, coming for a checkup. It's north of 5.6, 5.65 again. It's through its 1 month. It's through its 50-day. It's through that neckline that carved out support for the final days of 2025 and all of 2026 up until March 18th. March 18th, of course, is the day that you have the breakdown in silver. That's why I was looking at that particular candle there. Copper's already hurdled those levels. So little by little, Thomas, hey, if copper's holding up here, this is a China story for the most part. If copper's holding up here, then Chinese growth is probably going to be staying strong. I mean, we can think about the Australian dollar perhaps as an outlet for some of that optimism, and we'll go over there in a moment. But the Aussie is the best performing major currency today, given everything that's happening around the world. So there are some things to start doing that, having been in hiding for a number of weeks, it feels like, thanks to the Iran war, I'm still having trouble shaking off some of my own biases when it comes to the macro and the supply chain problems, having traded through COVID and the Russia-Ukraine war. But how could I not let those things influence my thinking? The metals are a different story. And they're all starting to look a little bit more technically sound for the first time in weeks.
Yeah, and copper is weird right now because I'm not as certain that it's going to have this big bull run through the rest of the year as I was in the beginning of the year. But I do think we see some relief here. There is signs that China's copper market, they're exporting a lot. Prices on the LME are still high. They're selling copper into LME warehouses. They're importing less. The smelters are still running at high capacity to sell those exports at those high LME prices. Really, we need to see a still strong or staying strong U.S. economy and a Chinese economy that is shifting more to construction spending.
Shifting more to construction spending. We're going to start. I would love to be able to stop talking about this war every day and actually go back to the job of analyzing the differences between economic growth rates and inflation rates between countries, and then trying to figure out what currencies make money. But we're not in that world just yet. It's all the same thing. Risk on, risk off, metals on, metals off. Metals perking up today with oil coming back in. It's a welcome sign. 48.05 right now. Days going on. Getting some of these headlines. Stocks coming back in. About 20 points lower than where we were when we started the show. Everything. This is why I'm waiting day by day. Other people have been navigating this better than I have, so I'm not saying that I have all the answers. I think I've actually navigated this quite poorly in some cases. I'm trying to avoid making those mistakes and not getting over my skis once more. If gold and silver are not necessarily turning a corner, oil really may be here in the short term. What a good bit of news that the market responds. Oil's back to 103 quietly, adding 12% from yesterday's lows, tick by tick over the evening hours. And then we get this headline that Israel is going to stop wantonly bombing Lebanon while the US and Iran are trying to work out a ceasefire. There's some proof that things are moving in the right direction. Signs of progress, if you will, as opposed to a ceasefire where both sides are saying, no, that's not part of the deal. That's it. That is. And then fighting continues elsewhere. The negotiations this weekend are going to be the most important thing, Thomas, right? So I think first things first, if you're trading oil over the next few days, just fully anticipate a gap on Sunday night. A fairly sizable one could exist. Other than that, though, Thomas, how is your perspective on this market taking shape after what we've seen over the past 2 days and price action wise?
So I'm still in my short iron condor. That's between 68 and 110. So, trading around 89, I'm fine leaving it on there. It's got 35 days left. So maybe next week I'll take it off. I did add a position yesterday. I did a short put spread June 16th. So that's 68 days out. And I sold the 76.5 and I bought the 75. So, if we drop even, 5, 6, 7 points, I'm still fine there. I'm expecting, for there to be more downside, more upside swings on these headlines, but ultimately, for the next few weeks, 4 weeks, staying above 76. And I think that's a pretty good call, because even if you get a resolution, a lot of that geopolitical premium is coming out, but supply chains still take time to get back to normal. There's still infrastructure that has to be repaired. There's still, there's still effects that linger past the war itself, the geopolitical premium itself, where prices are probably going to stay elevated for quite a while, probably into the end of this year. You're muted, Chris.
Sorry about that. Yeah, for the foreseeable future, this is going to be something that we're contending with. One of the interesting happenings of what's going on in the market right now is that if we look out to Z6, for example, these are really stable. These have, yesterday they did not give it all back. So prior to the ceasefire announcement coming into play, we see that oil is trading at, at least December expiry, it's trading near 74. We're still near 74. So whatever structural issues, Thomas, have accumulated as a result of the fighting, if it's tankers being hit or terminals being hit or pipelines being destroyed, even a ceasefire, which may take pressure off the front end of the curve, it does not speak to the issues that are now going to raise the floor on oil moving forward. It's part of the reason why, when looking at how this market's evolved, I still feel comfortable on these dips buying oil, getting long deltas in some form or fashion. But the short put spreads are becoming perhaps the more reliable, safer, dare I say, way to go expressing this view, as opposed to doing it through something like a long call, where a day like today, if you were looking for a move back to an 100, you had to be sitting at your terminal ready to make the trade and get out when it got there. Or if you held it, now you're not near your strike and now you're back out of the money. But with the short put spread, there are still ways to express your view in the market that oil is not necessarily going to fall and get paid for it. 22 days to expiration right now, 84.86 at the CLK6 contract. Let's pull this back up at the screen. 84.86, effectively saying that we're not going to break through the March 23rd low. That pays better than 1-to-1 right now. If you were to put that up here on the, there we go. Let's put you back on the screen. 84.86 pays better than 1-to-1. 66% probability of profit, Thomas, and it pays better than 1-to-1. We don't need to be too cute about things.
You don't find that too much.
No, you never find that out at all, right? There's just so much vol in here. And if you can pick the right time horizon and the right levels, knowing that we have this problem where there's just infrastructure and capacity destroyed, and then repressurizing these pipelines. So spending some time last night reading a report, again, reiterating what Qatar said a month ago. once the fighting stops and they want to get gas moving again, it's going to take them a full month to repressurize their pipelines before they can even begin loading gas into tanks. So the supply is going to be tight in the short run. The infrastructure damage is keeping the floor elevated in the longer run when you look out to CLZ6. If there's no meaningful energy crisis that lasts for a long time, you're not going to get that meaningful demand destruction either. That would be eating the back half of the curve. So I think we just need to, again, day by day here, but keeping in line some like North Stars about how physical molecules have to make their way around the world and supply demand dynamics. If we can get opportunity, I could even go further. I don't need to go 1 for 1 here. We can go down to 80. 82 is still risking 3 to make 2 at a 72% probability of profit. Does anyone think we're going to see $80 oil in the K contract in the next 22 days, M contract next 22 days? So there are ways to express bullishness without buying the calls right now. And there are meaningful risk to reward opportunities that are presented here. If it's in the K6, if it's in the M6. If you want to be directionally neutral, Thomas, I think that's great too. I'm doing a lot of that myself, but bulls need to adjust how they express their bullishness because the game is evolving now that we're in ceasefire hope territory.
Yeah, and that's why I sold the put spread yesterday. You get a good risk to reward, good POP. It's a good trade. If you figure, what's going to be different from before the war to after the war is finished, it's really, you figure all the geopolitical risk premium is out because the war is over, but you're still left with slightly lower supply for a while. So, I mean, prices returning to pre-war levels, maybe there's a 10, 15% premium versus that just from the lingering supply issues.
Natural gas here is still getting killed, Thomas. Is this one of those local domestic economy issues unrelated to the war? I've seen a lot of oil and gas folks on Twitter kind of wringing their hands saying, didn't think natural gas would have a 2.7 next to it a month into the Iran war. Do you find that surprising?
I mean, it's really weak, and we've talked about this a lot before. Natural gas, the U.S. market, it's a lot more insulated because export capacity is already at near record levels. So, demand from Asia, demand from Europe, they're going to have to compete for U.S. capacity. So, you can't move more volume. So really, you're still depending on the weather, the demand internally. And the weather, I mean, it looks really, really mild for this time of the year, which means 70-degree weather across the East Coast, the Midwest, where people are coming out of winter, you're just opening your windows, you're not turning on AC, you're not using your heating. So power generation, demand is going to be low. You can't export more. And now we're going into injection season where it's just really there's no bullish thesis in the market until we get, we're still a month and a half, 2 months away from where we could get really extremely hot weather and you start getting, increased power demand from people running their ACs and stuff. But for right now, there's really no bullish catalyst to look at.
The volatility is just not there, right? 24.7 IVR in natural gas. You're going to trade natural gas. You're doing it because the thing's going to be jumping around. It's usually giving you something more interesting there. Natural gas has lower IVR right now than stocks, that the bonds too, and bonds too. Yes, even the notes. Notes have a 28.7 IVR. Natural gas has a 24.7. I only trade natural gas because of the allure of how unpredictable honey badger like it can be when other things are quiet.
Yeah.
This is quiet when everything else is jumpy. I have no reason to even consider trading this right now, given near hit factors.
We do see, there is one interesting story. It's OpenAI is putting their plans on hold for a UK investment for a Stargate project. That's because of very high energy prices in the United Kingdom. And, you know, they've announced this after Dutch TTF futures have spiked really high. Like we said, U.S. futures haven't really reacted too much to the war. TTF futures, the Dutch TTF futures have. So UK facing an even bigger energy problem, and now it's affecting investment there. So maybe a negative tilt angle for the pound.
Dollar keeps slipping, and the pounds, you know, we've seen during the war what country had the greatest rise in their bond yields, long end of the curve. It was the UK. Gilt yields went up the most. The UK is very sensitive to changes in energy prices, but the dollar keeps on slipping itself in this market, which, given how big the dollar is in the world of FX, it's a fairly meaningful development. And it gives you that confidence. Again, if you're an equity market bull, something like this structurally gives you confidence. It's not just that stocks are rallying and oil's down, but then all of a sudden the dollar's still at 100, 101, 102. Here it is falling back, which over the course of the war, vehicle for liquidity. On the other side of it, you don't need the cash on hand if the war is winding down. In terms of the talks moving forward, right now, as people have sent me, the Pakistani Air Force is escorting the Iranian delegation to Pakistan right now. So those talks will begin soon. They'll arrive in Islamabad tonight. And if we get more signs of progress, Thomas, I wouldn't be surprised if the dollar is the one to look for first. So depending upon where you are, what time it is, what you're trading, futures may be closed, for example, when the news come out. It's in that 5 to 6 p.m. Eastern hour. Check out Spot FX. See what the euro dollar is doing. If euro dollar is moving up, you're probably looking at good news coming out of Islamabad, and maybe that helps inform you for what other asset classes may be doing. Calendar for tomorrow. So we had PCE today. That's the Fed's preferred gauge of inflation. We get the one that the rest of us pay attention to, the CPI headline inflation tomorrow morning, 8:30 Eastern, 7:30 Central. 3.3% expected from 2.4. It looks like the run-up has now been revised to only 0.9% from 1%, Thomas. That's the month-over-month rate. Beyond that, consumer sentiment, that's going to be a fun one as well. I wonder how consumers are feeling about all this. I would guess not good. So maybe some bumps in the road into the weekend, or maybe none of this matters, and we're looking through it all. And that's old news because the war is ending. So who cares what happened with March CPI, Thomas? That's not our concern. We're done here today. We'll see you later on today for overtime. Nick's joining me after last call, so hopefully we'll see people there. Actually, no, Jamal's joining me today. So hopefully we'll see you guys there for overtime. Until then, though, thank you, Thomas. Good luck trading. Up next, Dr. Jim with From Theory to Practice.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Okay, well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well,
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Why don't we get up there and you can lay some hands on me, and I'll see if you're slippery when wet.
That's really inappropriate for a second.
I want to lay you down on a bed of roses and send you off to Slumber Town in a blaze of glory.
No, don't say things like that because my boyfriend was an aerial artist and he used to do things like that.
I might be Monday now, but someday I'll be Saturday night. You give life a bad name. Whoa, shake it up just like bad medicine. Bad medicine is what I need. I'm going out.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Thursday edition of what it is that we are trying to do. I'm so glad that you are here, because it is only because of you all that we can do what we do. So thank you guys so much for being a part of the network and my show and all the shows. I just appreciate y'all, man. I appreciate y'all so much. So thank you guys. If you're watching over on the Tasty Live network, then I would actually bounce on over to YouTube, because if it is real time, right around 2:30 Eastern, give or take a couple of hours, April 9th, 2026, then you can hop into the chat. You can communicate with your brethren who are also watching the show. You can celebrate with your fellow bears. You can commiserate with your fellow bears, but it will be a good time had by most. And most importantly, you have one job to do today. You have one job to do today, guys. One job only. It is to pump the algo. So get in the chat. Comments, questions, stories, jokes, put them all out there. We got to train up our AI agents. We got to train up these bots, so the more information, the better. It doesn't even have to be true. It doesn't even have to be real, because most of their answers aren't real either. And so it's perfect if it's all made up. Just put it in the chat, because everybody wins. So let's go ahead. Josh, bring us into the market. Man, speaking of everybody winning, guys, I was promised that yesterday was all fake. I was promised that there's no ceasefires, there's no this, there's no that, and we were going right back down into the bottom. Even the S&P is up 28 and a quarter. So you got the S&P 500 looking pretty good. No, it sold off a little bit in the last hour or so. And so I don't know what's going on out there, but neither does anyone else. You got the risk-free instrument, also known as the NASDAQ futures. Extremely high-risk product, up 84 on the day. You got the boomers up 259, and you've got the Russell 2000 futures index up 11 on the day. You got bonds down a little bit. You got notes up a little bit. Got oil up $4, but it kind of feels, I mean, it was up like, what, $7-8 a little while ago. We'll take a look at the oil charts here in just a second. But UB40 getting hit a little bit. Got the shifties. They're getting beaten up just a wee little bit, only up $20, given the fact that they were up maybe 50 or 60 just a little while ago. You got the Hunt Brothers out there. They're up 54 cents, just a titch under 76, but they were up around 77 just not too long ago either. And so apparently markets moving, things change. Like apparently, all right, like some things kind of, they go in one direction, then they go in the other direction. Like the buyers take control, then the sellers take control. Man, it's almost like there's two sides to this equation. This is some pretty wild stuff. You got volatility on a day like today. Volatility is going to be down maybe a decent amount. Yeah, volatility futures down 44 cents. And then spot volatility down 89 cents. You got the VIX down to 2018, down 86 cents. It was just under 20 a little while ago, not long ago. If I bring up, what is that, a 1 minute chart? Man, I don't know. Can we do the Errol Coleman settings? These aren't even the Errol Coleman settings. I mean, this is the artist formerly known as the Errol Coleman settings. My man's trading off of like 3-second charts now. He's like 1 minute charts. Like, what are we? Are we looking to, for some decade long, like retirement type stuff? No, man, I need the action today. And so if we go to like let's do like a 15-minute guy. Yeah, so you can see volatility's been getting beaten up pretty much all day long. And then the lows earlier were just around 1967. So, I mean, we're not too far off the lows. It hasn't been, like a huge rally back in terms of volatility, but we are certainly higher than we were just a little bit ago, about an hour ago or so. And then if you look at the market, the S&Ps were all the way up to 68.76. So they were 25 points higher. Now they're only up 25. They were up about 50 a little while ago. You got the NASDAQ. The NASDAQ was all the way up to 242 at one point. It's only 152 now. So 90 points off the highs. And the boomers, the Russell, same thing. I mean, gold was up to what? 48.25, I think. Yeah, 48.25, 48.26. So it was 25, 26 points off the highs. And then silver was up around almost 77. So silver was almost 77. 76.83 was your high there on the silver situation. So, all right. So what we're gonna do today is we are going to go into the portfolio. We'll take a look at what's going on. We'll take a look at what's happening with the different goings on in the portfolio. Look at Dell down 472. Man, it is a good day to be alive indeed. When the NASDAQ is up, the market is up, but Dell is down. And so, man, the contra indicator that is Dell. How about that? And so Dell down today. You've got the market looking good. And then I'll get to you guys, of course, in the middle of the show, right around the middle of the show or thereabouts. And then, oh, wait a minute, guys. Hold on. Wait a minute. So tomorrow, listen, guys. Tomorrow we've got CPI at 8:30 Eastern. No fake sensationalism. No doomsday scenarios. I'm just going to say, I'm afraid. I'm scared. I mean, this print tomorrow, this is not good. That's all I'm going to say. You've got a little bit over 18 hours left to get all your affairs in order. I would not waste this opportunity because it could be your last one. And so we've got CPI tomorrow. So we'll probably play it to the upside. We'll probably play a little something to the upside for CPI tomorrow, just in case we make it through. We're not even supposed to be here. Like, based on the end of civilizations and this, that, and the other thing, we're not even supposed to be here on a Thursday. So I kind of feel like we're playing with house money. And so let's go ahead and see if we can't parlay that into something special to the upside. So, all right, so we'll take a look at that here in a couple of minutes. But let's go ahead. And if I go to, all right, so number one, let's look at oil. This is our daily oil commentary. So oil, yeah, I mean, oil was up a significant chunk a little while ago. I mean, it was up over, now again, this is the M contract. I know, most people are looking at the K contract, when you're kind of looking at looking at your board and you're looking at the front month and what have you. We're in the M contract because we've rolled and, it's a futures options position, not a future position. And so if you're trading, futures outright right now, you're probably trading K, but because we're trading the options underneath the futures, we're actually, more focused on the M cycle for our MCL inverted strangle. But you can see a little while ago, it was up over 102, right? Yeah, it was almost 103 earlier. And so now at 98.42, I mean, it's not, it's not the 92, 93 it was this morning or yesterday morning, I should say. It's not even, the 95, 96, 95, 96 it was just about an hour ago. But, again, it's moving around. It's whipping around. And so oil is, a lot of things happening abroad, obviously. And so oil is responding to all of that. I mean, it gets on its horse and heads higher. It gets on its, squirrel and heads lower. I'm not even sure. What would be the antonym to horse in that scenario? I don't know. Pony, maybe? I'm not sure. It gets on something else that is not nearly as fast as a horse, and maybe it heads down to the downside there. And so oil at 98.41. For us, I mean, the M cycle at 90, it's still not that bad. It's not amazing. It's not terrific, but it's also not too bad. And so for oil and our purposes right here, this is still very much a wait and see situation. This is still very much a do nothing situation. And so let's go ahead and let's let the theta kind of work in our favor. We still have a lot of positive theta. We still have a good bit of extrinsic value. Oh my gosh, hold on. Autumn's calling me. All right, we're doing it. You guys ready? Hey, what's going on? Yeah, of course. Yeah, do you want to say hi to everybody? Because we're on air right now. Yeah, of course. Yeah. All right, I can do that. I mean, have I ever let you down before? Have I ever forgotten something before? No, groceries are fine. You tell the people the truth. All right, love you. All right, so we'll see you later. It's unbelievable. Is it not amazing? I mean, we got to cut her some slack. It's not like I've been doing this for 10 years. It's not like I've had an afternoon show on the Tasty Network for 10 years. I mean, we just started this week. And so she's getting her bearing set. She's, trying to figure it out and all those kinds of things. And, could you guys not hear? Oh, man, I tried to put it on speakerphone. Oh, that's too, we missed it. Sorry. I did my best. I had it on speakerphone. She told me to bring Amelia's scooter in. And then I told her about the grocery thing, and she said, yeah, I totally forgot. And she did say hi to all you guys. I'm sorry you guys couldn't hear it, but I had to do it in the moment, and that was the best I could do. Next time, I'll make sure I have a mic set up, kind of plugged into my phone for her guys. For her. But anyway, I digress. Where were we? Man, I don't even know. Okay, oil. We got theta. We got extrinsic value. And Amelia's scooter will get put into the garage. Don't you guys worry about that. So, all right, let's go to MES. I'm not going to do anything. This position is making me pretty mad, actually, so I don't want to talk about this guy. Let's talk about Meta and I think maybe just Meta right now. So I want to do this trade. I'm frustrated you guys couldn't hear because we did it, man. We absolutely did. I put it on speakerphone and everything. It didn't work. Anyway, so for Meta, look at this guy. So 610, 600, and it came back. Again, they laughed at us, they mocked us, they jeered us, right? But we stuck with the DNS, right? We stuck with the do nothing strategy. It is the default setting for a reason. Like, it is the default setting, it is the numero uno strategy for a purpose, right? We did nothing. It's defined risk. You already know the worst case scenario. You don't need to go in there and start short circuiting processes and overriding things and kind of usurping, kind of the natural flow of the strategy. This is one of the best things about a defined risk strategy. You know the worst case outcome. You already know it. And as long as you've kind of made peace with that and you understand, just how bad it could be in the event that it doesn't come back, then it gives you incredible freedom. It gives you incredible freedom and flexibility to kind of continue to hold the position if you want to. If you like the trade, you like the direction, you want to give it a chance to come back, then you can do all those things. And that is exactly what we do with Meta. So now we are going to be able to enjoy the spoils of victory. And so we did this for $4. It's currently marking at 212, and we're going to take this guy off for about 50% of man. I'm so frustrated, man. I'm frustrated in the MES trade. I'm frustrated. I had the volume up, but it just wasn't picking it up on the microphone. And so, man, brutal. We had a chance at greatness, man. We had a chance at greatness, and it slipped right out of our grasp. Maybe next time. It's not like she's not going to call again. We just got to wait a couple of weeks, and so we'll be all right. And so, all right, so Meta, let's close this guy down. And let's be done with it. It's just so funny that she called and she didn't text. Like, that's just really funny to me. It's just really funny to me. Maybe I'm the only one. I don't know. But do you guys think that's kind of funny? I think that's kind of funny. Anyway, let's close out of Meta. All right, 212. Let's be done with it. 215. All right, so we got out of Meta for 215. So there you go. All right, beautiful. Okay, so let's go ahead and I see you guys in the chat, man. You guys are lighting me up. You're lighting her up. Like, everybody's getting lit up, man. This is some funny stuff. Yeah, you guys are saying you couldn't hear her. Yeah. Jared says hi, Autumn. I'll tell her you said hello. And yeah, this is just funny stuff, man. And so, all right, let's go ahead and okay. So I want to trade CPI tomorrow. Again, this is probably the end, but just in case it's not. Just in case we make it through to the other side, man, let's do a little something. But I want to shock the muscle here today. So it's a Thursday, right? Like, normally Thursday would be what, like shoulder day? Thursday could potentially be like arms day. But what if you went in on a Thursday and did legs, right? What if you went in on a Thursday and did little hams and calves? That's what we did this morning. And so I'm like, all right, let's play CPI tomorrow, but let's do it with gold. And let's do it with an expecting move butterfly, but a different product from what we would normally use with like SPX. Because with SPX, it's great, it's amazing, but a lot of times, you're usually risking $3, $4, $5 minimum to get a butterfly with a reasonable amount of width. Like, of course, I could go into SPX, and I know I could use XSP or whatever, but I'm a bit more comfortable with SPX, so that's why I typically go to SPX. But we could do something super narrow for like $1 or 80 cents. But then it's like we're basically just throwing our money out the window because it's going to be so hard to be profitable on that trade because the wings on the butterfly are just too narrow. And so because of that, I'm thinking, let's mix it up a little bit today. Let's go to GLD. We can go with the cycle that expires tomorrow. And let's go to the 1 day cycle. And I'm kind of thinking, again, just using kind of common sense, just kind of surveying the landscape around me, kind of looking at the world as it stands before us today. I don't know how you can be anything other than just mega, mega bullish across the board. Across the board. S&P 500, NASDAQ, metals, even a little energy, like whatever you want, man. Just play it to the upside. I think you'll be all right. I'm about 37 to 38% sure of it. So we go to GLD. You've got the stock at 438. What if we did, I don't know, we do a 439, 444, 449. Let's start with that. Is that about $1? Yeah, 99 cents. So we're 99 cents on the expecting move butterfly to the upside for GLD. It's only $5 wide. And this is great because it's a very cheap shot. Right now it's only 96 cents. So this is a very cheap shot to take a directional play in a major index. I mean, this is obviously, the gold ETF. And so if you want to take a directional shot on a binary event, size is critical, like sizing it correctly, sizing it small enough, absolutely crucial. And so, that is priority number one. And so you can choose SPX as long as your account can handle it. And mine can, but still I'm like, all right, we've actually had a decent day today. Dell's even down a little bit. I'm like, well, let's go ahead and be mindful of that and not necessarily go into the weekend with everything just set ablaze all around us. Right? Like ashes over here, ashes over there. And I'm like, let's be a little bit more methodical with how we do things. So I like this trade. The thing I am going to do though, let's try to, let's see. What if I did like a $7 wide butterfly? So let's go to 437 and let's go to 451. Is that what, about $1.50? $1.92. Okay, so this one's a little bit pricier, but I kind of like it. It's still significantly less than what we would do with SPX. And now our probability went up, our profit potential went up, and just having a nice wide butterfly just gives you a lot more maneuverability, let's call it, for managing the position, should it move in your favor. And so I like this trade. This is going to be our CPI trade for tomorrow. And if you've been following the show for any length of time, that I really like using expect to move butterflies for binary events because they are a relatively cheap way to play, some explosive move one way or the other. And so there's a number of ways you could do this, of course. You could do vertical spreads. You could do, I don't like doing outright calls or puts. I mean, it's simpler because it's a single leg, of course, but man, you can just get hosed, just absolutely rinsed on volatility. When the volatility comes out after these binary events, you get the move that you want, but you don't get paid. Like you don't get nearly the profitability that you thought you should get or that you arguably should get on that trade because of the structure of the single leg long option. It's just so heavily dependent on volatility. That's why we like selling those options. That's why we like selling puts and even selling calls from time to time. And so if you want to take a directional shot, my go-to is the expect to move butterfly, but it does have multiple legs and it's a bit more challenging to manage. But I like it as a vehicle to take a directional shot. So let's go ahead. Let's go into this butterfly. $1.99 it looks like. We should get filled. Let's see here. What did we let's see. Let's do like 202. We should get filled. GLD is pretty liquid. All right, we got filled. So there's your 202. There's your expected move butterfly in GLD for CPI tomorrow. That is going to be our play. We close out a meta. That's pretty much it. Everything else is just wait and see. I mean, Dell is down. That's good. MES is up. I guess that's kind of bad for us now because, our short call is in the money, but that's okay. I mean, and then MCL M6 is we're still hemorrhaging some cash on that guy, but it could be worse. It could be a whole lot worse. So we'll take it. So, all right, let's go ahead though. Let me see where you guys are at, man. Where are you guys at? I see you guys. I see you guys. It's so funny. So I'm gonna surprisingly let a couple people that are commenting on the Dr. Jim and Mrs. Autumn conversation that we had, where you guys can only hear one side of it. And Viggy Zach says only Jim can get calls while on the show. While in the show, can dig it. Yes, I appreciate you, my friend. And then Point B says Mrs. Jim is on the air, and suddenly Doc is not his best behavior. That's true. I did kind of feel like I was on company behavior, right? I did kind of feel like this doesn't even feel natural to me. And it's not how I am like around the house. But like answering the phone, it's like I didn't want to, I was kind of doing that out of respect for her because she was probably surprised that I answered. And she didn't say like, are you on air? That was another thing that was interesting. She just gave me the orders that I needed to receive. Like she just gave me my marching orders. She got right to the point like, hey, Amelia's scooter is outside when you're done with your show. Can you bring it in the garage? And then I said, have I ever let you down before? Right? Like, can you think of any instances where I have not done what I was supposed to do? She's like, I can think of many. One of which is 2 weeks ago when you left the groceries on the porch. And so I guess I was being respectful of her. But next time I'll just kind of throw her under the bus. But no more burnt steaks. Perfect natty etiquette. She runs the real show. That's true. All of that is very, very true. And so let's see. And then Point B says, Doc been teaching theory to practice, but she been practicing at home the whole time. That is correct. That is absolutely correct. And let's see. Griffin Jones says, yeah, what did she really say? Wrong answers only. Yeah, I would love to know that too. That would be pretty funny if you guys put that in the chat. And so, man, that's some good stuff. All right, so let's go to, man, I see Tomas is in the middle with a surprise and delight that's actually related to trading. So maybe we'll go to this one. Tomas says, hey, Dr. Jim, could you please give a little dive into some omnidirectional trades like ratio spreads? Of course, we can certainly do that. So if we go into, you go to like a tasty default watch list, you sort by IV rank. I mean, this is going to be a high implied volatility trade. So whether you're doing a put ratio or a call ratio, I tend to like put ratios more than call ratios for the same reason I like short puts more than short calls. Doesn't mean I won't do a short call. Doesn't mean I won't try to cheat death from time to time, but it's not really a staple. It's not really something I'm doing on like a daily basis. And so we'll probably go to the put ratio spread. Maybe we'll look at some call ratio spreads at some point in the future. But since I do put ratio spreads a lot more, I mean like 9-1 or 15-1 when it comes to put ratio spreads relative to call ratio spreads. Just like I think many of you guys out there, Tomas, you yourself, or anyone else that's watching, you're probably doing a lot more short puts than you are short calls. And so I think we'll look at a put ratio spread. And, if we sort by IV rank, and then you look at, we can go to GDX. So GDX is nice because there's no earnings coming up. This is one of the gold miners. I think we just recently did a ratio spread in GDX, actually, very recent, like in the last week or two. So maybe we'll queue up another one. I mean, the IV rank is 74. So that's obviously really, really nice. There's no earnings again because it's kind of an index. And so let's go in. It's a $98 stock. So that's pretty solid as well. Let's go into the trade page. And so if we go to May with 36 days to go, that's fine. When it comes to setting up a ratio spread, so we're going to use the curve view to kind of help us here. If I can get the settings situated correctly, which that's a big if, but we'll give it a shot. So when you set up a ratio spread, generally speaking, you can do other types of ratios. You can do a 1/3, you can do a 2/3, you can do a 2/5, you can do, the artist formerly known as Bob Nosnoff used to do like 5/12s and like crazy stuff. And so you can really kind of customize it in terms of achieving exactly what you want when it comes to downside protection, velocity of the downside move relative to the upside move. I generally just stick with kind of your standard cookie cutter Betty Crocker recipe 1/2 because it kind of checks most of the boxes already. And so maybe that's another project we should engage in the future. Call ratio spreads, maybe some 2/3s or 2/5s or what have you. But like if I was going to set up a ratio spread, so if I just did a standard 1/2, so if I buy a 98 put, and then let's say I sell a couple of 95 puts. So I'm going to pick up a $3 credit for this. And my probability of profit is super high at 70%. The P50 is 82%, but I think that's tracking to 50% of the credit collected. So it's important to remember that the credit collected is not your maximum profit on a ratio spread. The maximum profit, as we're going to see in the curve view here in a second, it's going to be if I pin the short strike. So if I go all the way to the downside and I pin the short strike and it happens to be expiration, then that is going to be my maximum profit, which in this case would be the credit collected plus another $3 on top of that, because that is the width of the put spread, to the downside there. And so the buying power here is very reasonable at $1,700. We may actually end up doing this trade or something similar to this there, Tomas. But let's go to the curve view really quick. And let's see if I can get this set up right. So if I go curve, I go into, look at that. It's beautiful. Okay. So I'm not going to touch anything. That's exactly what I wanted to see. So you can see right here that all my risk is to the downside, just like it would be with a short put. If it rallies, then I'm going to keep this credit collected. But again, the peak, so let me even grab, let's get a little magenta kind of working for us there. You can see the peak right there is if I pin that short strike. Now, again, you have to keep in mind, it's very similar to a butterfly in that regard. You've got to pin the short strike and it needs to be near expiration. Like if GDX goes down, like if we put this trade on and GDX goes down tomorrow to 95, you're going to be showing losses, maybe even significant losses. Not like crazy losses, but you could be down a couple bucks on the trade. And that's a head scratcher for a lot of new traders because like, wait a minute, I looked at the graph, I looked at the curve view, like I understand like what I want. Isn't this a good outcome for me? The answer is yes, but not today. That's a good outcome for you at the end, right? The reason why you're showing a loss early in the trade, if you get that move, early on, is because the short options, these two short options you have down here, they're filling up with extrinsic value because now they're at the money and they weren't at the money before. Well, whenever you sell an option, it doesn't matter what kind of strategy it is. You want the extrinsic value to go down. You don't want it to go up. So if it goes up, that's going to work against you. So if you get the quote unquote move that you want too early, then that can actually work against your efforts to make money on the trade. And so understand with the ratio spread, you don't want to pin that short strike early on in the trade's life. That actually does indeed work against you. And so that's why a lot of times when we do a put ratio spread, we want to collect enough on entry such that if the stock does rally, then it makes it an easy decision to take it off. It makes it a very easy decision to take it off. Like case in point, let's say I wanted to do a similar trade, right? But let's set this up a little bit differently. So if I clear away the drawings and I go back to the table view, and then we'll go back to the curve view in a second. Let's say I wanted to do like a super wide ratio spread, which there's a time and a place for that. But let's say I wanted to do like a 98, like 90. Yeah, let's do like a 98. Oh, not 88. Yeah, let's do like a 90. Oh, this is perfect. Let's say I wanted to do like a 98-91 ratio spread. So now if I go back to the curve view, you're going to see that now I have a much bigger tent, right? I have a much bigger tent to where I could make, significantly more money than I could have with that only $3 wide ratio spread. Maybe not that much different, actually, now that I look at the max profit. But when it comes to the width of the vertical spread that's baked in there, here's where you want to be careful with that. Number one, understand that in order to get near max profitability, you're going to need to be near expiration again, and you're going to need to pin that short strike. Now, the wider you make that vertical spread in there, the more forgiving you can be. It doesn't have to be as late in the cycle, and you won't have to be as perfect with your precision when it comes to pinning that short strike. But look at the problem that you've created for yourself, in my opinion. If the stock rallies, you can only make 37 cents. That's the most you can make. So what are you going to do? You're kind of putting yourself in a little bit of a bind, right? Because if the stock rallies, let's say GDX goes up, you're going to see that the mark price on the ratio spread is going to be marking for a dime. It's going to be marking for 15 cents. And then you have to decide, all right, do I take it off and just make 20 cents, 21 cents, whatever? It's not really economically significant. So by not collecting enough on entry, you kind of make one whole side of the market, higher in this case, a difficult decision for you when that could all be avoided by collecting more on entry. Now, you may like the wider spreads that are in the ratio spread because it gives you a better break-even point, and you're maybe prepared to hold it closer to expiration to get maximum profitability out of it. Maybe it's kind of a hedging mechanism that you're using like against, otherwise long delta in your portfolio. Like there's a time and a place for that, but I would still make sure you're collecting something economically significant on entry to make your decision-making process easier in the event that the stock does move higher. So for us here, I really like this trade, Tomas, not this one specifically, but let's roll the put up and let's just do it here on the curve view. What if I did I kind of like the one that we had set up, this little $3 guy. I mean, my break-even point is way down below 90. And, I'm collecting $3 on entry, and I have a $3 wide put spread in this. And there's only 36 days to go to expiration. Now, my intention is not to hold this to expiration, but I don't know. Maybe we'll break a couple of rules. We're already answering phone calls on the show. Like I'm already having private conversations with my wife on air with you guys. Yeah, you couldn't hear her, but I filled you in on all the relevant details. Don't you worry about that. So I'm thinking maybe we hold this guy. Maybe we run it down a little bit closer to expiration just to see what happens. I don't know. Let's just put it on. I like the trade, Tomas, and let's just we'll see where the wind blows us. So GDX, hopefully that helps though a little bit, Tomas, in terms of thinking about the gimmies and the gotchas and the different things that are happening with the ratio spread. So all right, so we got filled. So we got filled at 314. So, all right. So beautiful. So there we go. Okay. So that is, GDX. All right. Let's go ahead, man. Let's go all the way back to the beginning. Am I going back to the beginning? Man, I think I am. I see you guys commenting on Banana Natties, and I'm like, I should stop and see what they're saying. But I got to get back to the beginning. My beginning peeps, man. I appreciate you guys. iPod Touch is in the house. Man, iPod Touch, what is going on, my friend? Man, I mean, I don't know. We're about due for another Event Horizon, and we need you to be the liaison. You are the tour guide. We can't do this on our own, man. You can't just leave us be in the middle of the forest. No map, no compass, no flashlight. You've got all the supplies. You've got all that stuff. So you need to lead us to the promised land, my friend. And we've already been in Egypt for 400 years. Can you be the one to kind of guide us out? That would be amazing. And so iPod Touch, I appreciate you. Day 3, this is the moment of truth. Day 3 of what though? Is it day 3 of 3? Is it day 3 of 100? I need an endpoint. What is the endpoint? Let me know what the other day is there in the old day 3. Or Genyu's in the house. What's up there, Org Daniel, the only doctor that takes away the gotchas of naked positions? No, even I can't do that. Nobody can do that, unfortunately. And so, if you ever figure out a way to do that, Org Daniel, you let me know, and it can be our little secret. That would be amazing. Brad Munn, what is going on? That's my Mount Clemens brother. I appreciate you, my friend. What is going on? Narciso is in the house. What's going on there, Narciso? Dr. Jim, thanks for the education, man. You are welcome. Thanks for being here. If one doesn't believe the hype, what do you... I like the way you led that off. That's good. What do you think about the SPY June 30th put Christmas tree structure? Ooh, I haven't done a Christmas tree in a while. It's been a really long time. We'll take a look at it. So SPY, what are we doing? You're buying one, selling three, buying two. Okay, so a little, the classic 1x3x2. We can just take a look at it, and then we'll see what's what. So we're out to June 30th. So we're going end of the second quarter. Obviously we got to check with our JP Morgan collars to make sure that we're not, walking into a potential ambush on the old JPM trade. But assuming that we're not, we buy a 678 put. Okay. We sell 620 puts. All right. So I'm going all the way down to 620. I'll come back and take that up to 3. And then we buy a couple of 591 puts. All right. So I'm going to buy 2 591s. I'm going to sell 620s. Let me make sure I unhighlight that guy. Unhighlight? I don't think that's right, but it's already out there. A 1x3x2. Okay, so you're paying a debit, a little $6 debit. Let's look at the curve view, and let's see what the curve view has to say. Yeah, I mean, that's kind of what I thought. It's kind of just a skewed butterfly, essentially. It's definitely not too good to be true because, you're going to lose your $6 unless you get close to your short strike. I mean, it's a little bit skewed and it looks a little, janky because it's a 1x3x2. But I mean, too good to be true. I mean, no, it just looks like a normal trade, in my opinion. Like when I'm looking at this, it's a butterfly where, if you get close to the middle, you're going to do well. If you don't, then you're not. And so it's a fairly cheap shot. It's only $6 on SPY butterfly, which is a pretty reasonable price. You're paying 1% of the the underlying price there. That's not bad. And so this could definitely be a way to hedge some downside exposure. And you've got a fairly wide range of profitability there. I mean, you're looking at anything between anything basically 600 to 670 is going to be good for you. But of course, anything higher and then anything that is truly catastrophic is not going to be so good for you. But yeah, I mean, it doesn't look too good to be true to me at all. If I'm looking at that correctly, yeah, buy, sell, buy. Yeah, that's what we did. And so, I mean, go for it there, Narciso. I mean, I say go for it. It's just, in my opinion, it's just kind of an unbalanced, skewed butterfly. And so, yeah. It doesn't look special to me in any way. I mean, no trade really does because it's always just gimmies and gotchas. Sometimes you can't really identify all the gimmies and the gotchas if it's something you haven't looked at in a while or maybe you've never looked at it ever. And so you kind of have to run it through the old mental processes there. But yeah, I think it's just a skewed butterfly. And so let's see. Sergio's in the house. What's going on there, Sergio? Appreciate you, my friend. N1C is here. Funnily, Microsoft has a higher credit rating than the USA. Yeah, it's all made up, man. It's all made up. Like there's another great example that it's all made up. Should they have a higher credit rating than the US? Probably, right? Maybe that's more support that it's all just made up. It's all just make believe. And by make believe, I mean it really matters a lot. And so Ash Finn is in the house. What's going on there, Ash Finn? I appreciate you, my friend. Thank you for being here. Algo Trader is here. Who are the people in this video? Oh, I think you're talking about the commercial before the show. I'm not sure what their names were. I can't remember. But man, even I've seen all these commercials hundreds of times each. Even like if I'm watching the network during the day or I'm getting ready for my show and they're running promos or whatever, even I stop and watch them and listen to them because they're very, very funny. Like they're so funny. Like, oh man, like that guy and that girl were so funny and they really, really did a great job. And so let's see. Oh, Brett Munn says, Dr. Jim, what high school did you go to by chance? I went to Notre Dame High School. It is closed down now. And so they shut it down, man. Not like when I was there right after I left. They shut it down. I graduated in 99. They shut it down in, I want to say, 2008, 2010. Like it was 7, 8, 10 years after I left that they shut it down. And so, yeah, I went to Notre Dame High School. And it was great. I really enjoyed my time there. Made some great friends, and it was really, really, really good. And so, Brad Munn says, LCN, yeah, Lance Cruise North, right? Class of 08, man, look at you. There you go. All right, nicely done. I think they're still standing, if I'm not mistaken. And so that is an achievement that we were not able to get ourselves. Sam L's in the house. What's going on there, Sam L? Greetings from Paris, Doc. I'm out here doing tourist stuff. Croissant in hand, charts closed. We live to trade another day. We do, my friend. The market will be here. It is not going anywhere. You do not have to worry about the market. It will be here when you get back. We will keep it above zero. Maybe only asymptotically so, but we will keep it above zero so that when you get back, you'll be ready to hit the ground running again. And so, A. Wills in the house. What's going on there, A. Wills? And hello there, Mrs. A. Wills. I appreciate you both for being here. A. Wills says, Dr. Jim time, the best 45 minutes on the network. Yes, it is the Dr. Jim power 3/4 of an hour. And so you did it, man. You made it. I appreciate you so much. Thank you so much there, A. Wills and Mrs. A. Wills. And even any little A. Willses. Are there any little A. Willses? Are there any mini A. Willses that we should know about? That would be pretty cool. And so Ranch is in the house. Well, I just noticed I got my 50% in SLV. Time to redeploy the troops. Isn't that an amazing feeling? It's an amazing feeling when you have an order in, a profit order, of course. It's not so amazing when it's maybe a loss order. But you have a profit order in, you kind of forget about it. And you're living your life, you're doing your thing, whatever. And then all of a sudden, you get the update on your phone, or you hear the ding because you're in the platform. You have it up on your, on your phone or your laptop or tablet or whatever. And then you hear the ding, and you kind of forgot about it. And it takes you a second, like 1 to 3 seconds to register what happened. And then you figure it out, and you realize you made some money. Oh man, that's a great feeling. That is a great feeling indeed, because you kind of aren't expecting it at that point, because you're kind of doing some other things and living your life. And so that's some good stuff. Good stuff indeed. Nasita's in the house. What's going on there, Nasita? Dr. Jim, Palantir is going through some pain. Does the good doctor have a cure for Palantir? I mean, I'm pretty sure they're listening to our conversation right now, so I don't know if I want to help out Palantir. I mean, they heard what Autumn had to say, even though you guys couldn't hear what Autumn had to say. Palantir down $11 today. Whew, man, when do they have earnings coming up? Yeah, it's got to be soon, right? Ooh, May 4th? Yeah, that's Star Wars Day. I don't think I am going to do anything here now, there, Nasita. But remind me on May 4th. May 4th. Is that a Monday? That's a Monday, isn't it? Yeah, it's a Monday. Yeah. Monday earnings. Interesting. Is it after the bell? It's got to be. Oh, they're not telling us, but it's got to be after the bell. So remind me on Monday, May 4th. We'll do a little something for Palantir earnings. I don't want to do anything now, though, because, again, if you do something with earnings in 2-3 weeks, you're making it hard on yourself. I just did a calculated risk about that. I just did another interview today, by the way, with my man Noel Smith from Convex Asset Management, and he was a former market maker. And so we had a great conversation. We went off in all kinds of different directions. It was pretty quick. We usually keep them to 10 to 12 minutes. Well, they tell me 10 to 12 minutes, but then you add in the Dr. Jim conversion factor, and they're typically 18 to 25. But for this, and I'm not even saying anything. So imagine if I started chiming in. I mean, these things would be hour and a half long. But this one was a little quicker. It was only 12 to 13 minutes. But Noel, great guy, man. Got to know him, got to meet him, and that was really, really cool. We got into some really, really good discussions about volatility and hedging and a bunch of different things. And so, we couldn't really hit on things in depth because of just the nature and the scope of what we're doing. But my hope was that he would drop a couple breadcrumbs on the trail that we could maybe pick up and then, use for future learning kind of on our own. And so it was really, really good. I really enjoyed it quite a bit. But I just did a calculated risk about earnings and the best time to trade earnings. And again, it's right before earnings. It's not now with Palantir in 3 weeks, in my opinion, there, Nisita. I would wait. And so if you're already in a Palantir position, that's obviously a little bit different. Now you've got to endure the pain or stew in the bathtub of filth or do things around it, of course. If you have a specific position or whatever, by all means, drop it in the chat, tomorrow, or you can email me. I'm jschultz@tastylive.com if you want to kind of reach out. I'm happy to share my thoughts. Again, I can never tell you what to do, but I'm happy to share my thoughts. And so, but thanks for being here there, Nasita. Remind me on May 4th, and we'll do a little something. Wolf is here. What's going on there, Wolf? Point B is here again. Sam Al doing my daily duty. Confuse the algo and support the doc. I'm not sure. So yes, I like that a lot. But should we be confusing the algo or should we be supporting the algo? I just want to make sure that I'm on record very clearly saying I am in full support of all things AI. Algos, Groks, ChatGPTs, Claudes, Geminis, Perplexes, whatever. I'm fully on board. I've been on board since day one. You can go back and check the tapes. So that way, when the robots take over, they'll go back and they'll hear this and I'll get a good position. I may get a little kind of like a mayor type of situation, maybe a little governor of the city. And so, So just wanted to be really clear about that. But Brian Rackins here, Ranch is here. What's going on? What's going on? Lorge is here. What's up there, Lorge? Lorge P is in the house. What's up there, my man? I appreciate you. SC Golfer is here. What is up there? SC Golfer. Hey, Dr. Jim, what do you usually do if you're going out of town on vacation? I'm going to be out all next week. I will have limited time and internet. Virtually all my positions are May 15th. Expiration. Yes. Okay. So a couple of things. Number one, you're already in May. You're going to be out for a week. Okay. That's good. You don't want to have anything like sooner than that. But then number two, I would scan things. Anything defined risk, I would not worry about. Anything undefined risk, you're going to have to use your best judgment. If it's undefined risk and you're a little bit concerned about it, then I would just close it. I would just be done with it. Because much like Sam L, it's going to be here when you get back. Like it is 100% going to be here when you get back. And so I would not put yourself in a situation where, you're not able to enjoy your vacation with your family, with your friends, whoever you're going on vacation with. Like you want to enjoy that time. We need time to unplug. We need time to unwind. And so by all means, I would just, get everything in order now. If you have undefined risk positions that are A, really small, and B, you're not that concerned about, then just leave it on. Like just leave it on. And then you're kind of, the benefit is the gimme. You are kind of forced into the do nothing strategy because you're literally not going to be doing anything trading related, right? Maybe you pop in once a day or once every couple of days, whatever, but it's not going to be like what you normally do. And so that's what I would do. Defined risk, I wouldn't worry about it. Undefined risk that I'm concerned about, I would just close it. And then undefined risk that was small enough and I wasn't concerned about, I would just leave it. And so just keep it kind of simple in that regard. Griffin Jones is here. What's going on there, Griffin Jones? Still trading CL. Man, look at this guy, man. He's getting after it. Man, that's some good stuff. Jared Kramer for the algo. And the good doc is here. Time for some B-minus humor and some banana natty cracking. Man, that's a power move on a Thursday at 3 o'clock. Man, go for it, my man. That is an absolute power move. Point B is here. We got RZX is here. What's going on there, RZX? I appreciate you. Ashwin, the show is algorithmic as always. Man, thank you, my friend, very, very much. Sam L, I'm here for the algo ritual and the digression wisdom. Yeah. I don't think we digress at all today. That could be a first. But I digress. And so Ram Vashar is here for the something. Look at that. BDH is here. Man, Ram Vashar, pump our bags. I'm doing the best I can. EMI S&Ps are up 42 again. Man, I was promised it was going to fade. Man, all-time highs are back, baby. They are back. And so where are we at? I got to go. Wow, it's crazy. Ranch is here. Griffin Jones is here. Point B. Doc, almost choked on my natty Tuesday watching my position go red. Woke up Wednesday and the banana was back in play. Theory to practice works, man. I appreciate you. I appreciate you so much. I got to go on that note. But guys, I appreciate you. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
We're making our own way. We're making our own way.
Hello. Welcome back. Tim Knight here, and it's another green day. We're continuing to get all those optimism fumes off of the ceasefire. It's funny because yesterday I lost a little when I should have lost a lot because of risk management. Today, being entirely short as usual, I should be losing something, but I'm actually having a great day. And it's not because I had like one lucky break, like somebody got bought out and so forth. Most of the shorts are down. And in fact, a lot of them are down to 6, 7, 8%. That's pretty cool. I've said it before, I actually would rather have a day when the market's up and my shorts are down. Distasteful as that sounds, but it just feels good to just spit in the eye of the bulls and still do well. So it's a good day. Profits are flowing, and that's even with the NQ is up, the ES is up, the RTY is up, YM is up. Everything's green. So if the day appears again that the market falls, that should be even better. So yeah, it's a good day, and we'll see what tomorrow holds. Of course, there's a tremendous amount of uncertainty right now. You know, we're, I guess, in day 2 of this yet another 2-week delay, which I expect will be met with endless 2-week extensions until January 2029. And I'm just looking at the charts because you know what? There are things besides Iran that are going to appear from the mist. Earnings, for example, economic data, things that have nothing to do with the Strait of you-know-where. So let us jump into the charts and catch up with each other. And we're going to start with crude oil, which is a big market right now, of course. And it's up a little bit, a little more than 4%. It's been less insane than it used to be because things are kind of tenuously settling down. The funny thing is that equities are only a little bit below lifetime highs. And in some cases, they're at lifetime highs, whereas oil is still up 80% from where it used to be. It's like nobody cares. You know, people are breathing relief that it's 95 instead of 125, but still, people would have dropped dead in January if oil was suddenly $95 a barrel. So ain't much to read in this. It's maybe there's some energy experts out there having a ball with this. I've stayed far away from it. The NQ, and as I mentioned yesterday, there's kind of a mix. You've got some instances where things are still clean, gaps haven't been violated, trend lines haven't been broken, and so forth. Then you got junk like this, where we are deep inside enemy territory. The price is, if you think of it sort of 0 as the bottom of the pattern and 100 as the top, we're at like a 50-55 point here, deep into it. And that's because of all the life is good optimism out there. We won, and everything's going to be great. And we'll have a joint venture with these guys, which isn't going to happen. But there's a lot of, and this is the sort of strength I love to sell into. Because when the market was getting just raised to the ground, it was more and more uncomfortable to short because, like, you know, the prices are worse and worse. And like I've said so many times, one tweet could upend the whole thing. I'd rather have this situation where everyone sees unicorns and rainbows and is prancing naked through a field. Yeah, give me the optimism. I'll sell into that instead. Much, much better. Now, my interest in semiconductors have gone from like passionate to like complete insouciance because SMH is at a lifetime high. As I said, my big wipeout yesterday was my SOXL puts, which are RIP, dead and buried. And I ain't touching that stuff. So for whatever reason, because they're, you know, like NVIDIA, we'll see in a moment, it's not like it's at lifetime highs, but SOXL, SMH just blasting higher, well above the pattern here. What a fake out. Look at that beautiful breakdown. And then nope, boing, all the way up. Absolutely amazing how it undid months of grind just in the span of a few days. NVIDIA, which is the big one in this, is actually still not at all good looking. We've been grinding around for, is it coming up on 10 months now within this pattern? Chris, maybe you'll hear me better if I lift my microphone up some. And there we sit. We're in the middle. 10 months, grind, grind, grind. I still imagine it'll eventually break to the downside. But so far, hopium is keeping it up. And of course, most of these gains we've seen lately have been because the multiple contraction is undoing itself. It's not like we invaded Iran and suddenly earnings collapsed everywhere. It's just all about simple coefficients. And now that people are allowing tech stocks to have fat coefficients again, big PE ratios, then prices naturally are allowed to get bigger and bigger. But there's no actually fundamental data we've been basing any of this on. But happily, earnings season will kick in next week and start to heat up more and more as April winds on. Micron MU is also up over 3%. Not touching it. In fact, I'm kind of wondering if I have any semiconductor. Yeah, I'm short NVIDIA, which is up 0.85%. That's one of the few things that's up today. That's about it. I'm not really touching anything else because, that stuff stings. Actually, no, I am short AMD a little bit, and maybe not for long. We are right up against the stop loss on this. There's the gap. And I've got a stop loss there, and if it crosses it, I'm out of there too. So AMD and NVIDIA, that's it for me. But as I said, in spite of, at this very moment, ES is up 37 points, NQ's up 134 points, RTY is up 15 points, everything's green. But the shorts are coming through, which is what I try to do. Try to find special opportunities amongst all the weeds. Here's a few of them. These are items that I'm short and are just having a good day for some weird reason, and I could not care less what it is, but they're behaving themselves nicely. Here's DT, Dynatrace, I guess. See, I don't even know the name of the companies I'm short, but there's Dynatrace tumbling nicely, almost 8% below that beautiful topping pattern. So yay, DT. INFY, that is Infosys, ADR, it's down, but not as much, 2.5%. I'll take it. That'll do. Big gap failure right there. And a lot of overhead supply on that one as well. IoT, these tend to be kind of like small and techy, but that's not why I chose them. It's all about the chart. But IoT is taking nearly a 10% tumble. We'll drag that guy down. We got a nice new price gap today. Look at that. It's a little lower than that, isn't it? So that's falling nicely. So, this is just housekeeping, kind of get in there and tighten up the stops, trim where needed. Sometimes it falls so much, it's like, I'll take, a quarter off the table just to trim risk some. Hello, jumping rectangle. All right, let's put you back where you belong. This is NET, which is Cloudflare, NET. And this is a good example of, it's nice that it's falling. It's down about 10%. Yay, I'm short. It's an ugly chart. I mean, this is really misbehaving itself. It had been, it had pushed into the pattern and pushed into the pattern. And again, it keeps doing that. So it's an ugly, ugly mess. But and this is when I took profits on just because it is such a mess. I took partial profits on this, but anything that can go down 10% on a pure green day is a friend of mine. Palantir, which was a good performer yesterday, keep on keeping on here. Palantir's down almost 9% today. It fell nicely yesterday in spite of that historic rally we had to endure. Again, rather messy. This is not a clean setup. I mean, if I were to grade this pattern, I'd give it like a C- or so. But part of it's about relative behavior. The fact that it sunk yesterday in the midst of this eye-melting rally was great. Rocket Lab, RKLB, which, let's face it, anything with a rocket has probably 80% of the value of any company related to rockets or satellites is based upon SpaceX frenzy. Because SpaceX is slated to come public in a couple of months. They're talking about nearly a $2 trillion market cap, which to me is just bizarre. Because, if you buy an Apple or a Google when they first come public, and the company's worth $10 billion, $20 billion, $5 billion, you've got an opportunity to make generational wealth. If you buy a company that's valued at $2 trillion, maybe you'll double it over a decade or something. It's not going to go to $100 trillion. So kind of richly valued. And I think it'll be fascinating to see how the market receives it, and like a week later where the thing is trading. And of course, there'll be tremendous chatter about the world's first trillionaire, Elon. But anyway, I'm short Rocket Lab. ALB. This is a prettier chart. I talked about C- on the other. This one I'd give it A- to. This is a nice pattern. We are banging out what looks like a head and shoulders top. It isn't complete yet, but it's acting properly. It's down about 2.5% right now. And of course, we want to see it slip below the bottom of the pattern. There is CRWD, CrowdStrike. Another one down about, a lot of things are down about 8% today or so. And that's great. And this one's a pretty clean pattern, pretty clean. Give it a B- C+. So we had a nice red bar yesterday and a bigger one today. Here's a better known one, HPQ, Hewlett-Packard, founded about 4 blocks in that direction on Addison Avenue. But HP is down 2.5%. I've noticed, I'm not showing it here today, but IBM also has been pretty weak lately. Here's a more obscure one, Omnicom, we've talked about. This is down also. Is everything down 2.5%? This is bizarre. Everything's down like 2.48%. Very strange. But this one has been one I've been holding on to for a couple of weeks. It continues to slip. This was a really nice one. I think I mentioned this one yesterday also. Salesforce, CRM. I had puts on this going into yesterday. I added to that, and it fell again. It's down 3.25%, down almost $6. Very good looking pattern up here. I actually took some profits on it because it's getting pretty deeply depressed, but that's probably a mistake because anything behaving like this in this environment probably has a lot longer to go to the downside. But that's Salesforce. Rubrik is also down hard, almost 12%, RBRK. So a lot of these SaaS companies, a lot of these newer internet software companies, I don't know how Roblox is doing, but Rubrik down hard. There's a whole theme around what used to be very hot sectors, and they're reversing away. And speaking of IPOs, by the way, the old saw about IPO, it's probably overpriced. That's still true. I mean, I was thumbing through some recent charts, that is to say, charts that don't have a lot of history to them. You don't have to look far to find stuff which basically hits a lifetime low every day. And that's in this insanely overvalued market we've got. I mean, like I said, this is not take a lot of cherry picking here. This was simple. Here's a few. Here's Figma, FIG. This is junk data, I think, by the way, just from some old security. So this is when they actually came out. So that's FIG, FIG. Here's GAMB, gambling.com. None of this is actionable. I'm just kind of making a point here. Here's GTM, another lifetime low. Monday, I talk about SaaS companies, and Monday's another good example. This is another lifetime low, down 4%. And then here's one a lot of you have heard of, StubHub. Lifetime low on this one. So you get the idea. A lot of these are down 50, 60, 70%. Lifetime lows virtually every day in a pure green environment. So, SpaceX is going to have a tremendous amount of institutional support when it comes out, but what it'll be like in 6 months, be very interesting to watch. So, just to wrap things up, here is the ES with its Fibonacci, which did a yeoman's job showing where support was, not so much a yeoman's job on resistance. We hit that bad boy and then poing right back up. So we're in the midst of this range between these two fib zones. And if for whatever reason things sell off hard again, that's what we're looking toward, the next level lower. That's it. Hope you're doing okay. And I'll see you here to wrap up the week tomorrow. Goodbye.
Your crypto needs a wallet. And crypto is better when it's tasty.
You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Madrugada chegou, não quero mais acordar. Como dá pra sonhar o que é impossível saber? Sentir o gosto do sol, andar por cima do céu, fingir que nada mudou depois de ter você. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou, não quero mais acordar. Madrugada chegou.
Mikey, my friend, we are back for the last call, and the E-minis continue their rise higher. E-mini S&P 500 futures 68.70 here near the high of the session. I think this is just about the high. If not, yes, we're about 6 points off the high here. Got the NASDAQ up 177. You got the Dow up 340 and the Russell up 19. Everything up around 0.75% here. You've got oil futures stubbornly bid here at 100. It's been a sticky spot. We had a huge move yesterday, rallied into the close, rallied into the overnight session, got as high as 102.70. Kind of a wild move that markets continue to stay up into this move, but see if that continues. Volatility smashed 21.32, down 59 cents, about 2 2/3% here. Just a huge vol crush. Bonds have been choppy. They're 114.05. Pretty wild move in bonds over the last two sessions. Gold up 18 and silver up 54. Not really. They've been stronger throughout the session, but not really moving like we're seeing in the equities here. And then Bitcoin as well, steady bid at 72,000 on the futures, spot at 71.7. How do you feel?
I don't know. It's a great question. I feel like something has to. I feel like oil needs to come down a little bit here, but who am I? Who am I to judge oil's price? But it just feels odd.
I feel like something's lying.
Yeah,
I know. I feel that way too.
But vol is telling us that everything's done. Everything's over. We'll be at 7,000 by next week or tomorrow. It's crazy, but to give you some ideas of like how I'm trading this. We were at the SIBO today. So I closed one of my iron condors that I had in SPX that I put on like a month ago. It was just a really wide 1,000-point wide iron condor in terms of the range, 20 points wide in terms of risk, but that was a nice $300 winner. But I'm just layering into downside hedges right here. So I put on a new iron condor that hits the upper bound of 7,100 where we've kind of bounced from to the downside
in SPX. Okay.
The May 15th cycle. So 7,100, 7,110 on the upside, and then 6,550, 6,540 to the downside. So that encompasses basically the whole range we've traded in, except for a couple days to the downside. Sold that for 350. And then I put on 2 downside hedges. So I did the cookie cutter 100-point wide butterfly on the downside.
Okay.
In the April 30th cycle. That's 21 days out, and that's the 6,700, 6,600, 6,500 strikes for $5. So I've been doing that pretty consistently. This has been a 10% rally in a week and a half. So why not throw on some downside hedges?
Yeah.
And then I threw on a super bear.
Ooh, spicy.
Yeah, in the same cycle. So that's pretty close to where we're at. 68.50, 68.60 call spread. But the nice thing about this strategy right now is that there's still tons of put skew on the near-term cycles. So a 68.50, 68.60, 10-point wide call spread finances a 15-point wide put spread. So I did the 6,800, 67.85 long put spread, and I still collected $1.15 for that. So if we have like a 100-point sell-off day, that will be like a $200 or $300 winner, and I'll just close it immediately. And I would do the same thing for the downside butterfly if we get a similar move. But I don't know. I have bullish positions ready to go. It just feels like a good time to layer back into a couple of downside hedges that are small, and then the iron condor that encompasses the whole range we've seen during this whole Iran war situation.
I kind of feel the same way. Which is weird because I was bullish. I've taken off quite a bit of delta, basically all of it. I'm almost completely flat. I also feel like there's a little bit of weirdness right now with the move in oil, equities remaining very, very strong. I mean, a lot of it, I think I put towards kind of like the rallies we've seen in like your Metas and Apple and Google, like all those stocks kind of making back a lot of the ground that they lost. So I think that's really helped here. But I too feel a little funky about this market. It's just a little weird to see volatility this low, oil at highs. Even speaking of volatility, I mean, vol futures, it's basically a flat curve.
Yeah.
Which is pretty wild. I mean, we went from steep backwardation to basically nothing.
Yeah.
The oil market, very, very much backwardated. I mean, you've got 99 in the front, 90 and going into like the mid 80s. I mean, they still have it kind of done by the end of the year, but you're seeing the whole curve kind of shift up.
Yeah. That's what's interesting to me with crude. Like we had a 15, 16 point backwardation 2 days ago, and then you get the ceasefire and you see the front contract just get decimated. But to your point, the June to October cycles seem to have crept up in terms of price, because those back months, those really far out ones, like end of December, or sorry, end of 2026, beginning of 2027, those were trading at 70, and they got as low as 69 2 days ago. Now they're sitting at 72 and 73. So you're seeing the tail end of that curve kind of lift up, which is interesting, all things considered.
Craziness.
It's crazy.
Any other stocks sticking out to you? I mean, today, I actually got long a little volatility into tomorrow. I feel like, you got CPI, which I don't think any of those things really matter anymore. At this point, we have so much more to worry about. And they've already told us they're going to be, the numbers are not going to be inspiring, for lack of better words. So I got long a little volatility into the weekend. Although we've reversed that kind of market pattern, we've had Monday face ripper, sell off basically the rest of the week for, all of March, if not some of February too. So I got long a little volatility. I've been dipping my toes into some long delta in like some of these software names. Palantir is one that I was looking at today. ServiceNow. I've been trading around gold. I've been trading some volatility in Intel, Apple a little bit. Tesla I got long today. It's not like it's hard to find fresh, exciting new opportunities with the V bottom and low volatility. We looked at an SPX 0-day trade today at the right around the open that we were doing 15 to 20 points wide depending on the day, but they were trading at like 475 prior to today. Today was like 375.
Yeah.
That's the difference in a 25 VIX to a 21 VIX.
Yeah.
The VIX itself actually below 20 right now.
Yeah. And now it's just really tough because for tomorrow, let's say you wanted to do as a 1 day to 0-day iron condor for tomorrow. My setup is collecting $200, risking 3, but it's just too close. First of all, the implied move for tomorrow.
Well, it's close based on volatility.
Yeah.
It is what it is.
Yeah.
But it feels too close when you're watching 100-point face rippers.
Yeah. I have recency bias, so this just feels too close. But yeah, 42-point move implied for tomorrow, which feels light.
Mm-hmm.
Same story for today. It was only a 45-point move today. We actually chopped around there, so you had some opportunities if you did that today. But yeah, I mean, 67.90 to the downside, that's 30 points out of the money. And
seems like nothing.
Seems like nothing. And then 68.70 to the upside, it feels like just too tight in both directions. So I'm going to do nothing. And if we get a face melter to the downside, I'm already covered with the super bear and the downside butterfly that I added. So I think I'm done. I feel good about where I'm at.
Yeah.
I've got some bullish positions in your classic Apple, Costco, JP Morgan, Microsoft, Nvidia, silver.
No Amazon? Didn't we put on an Amazon position together? I closed out of mine today into this $11 move. It's had a 20-point rally in the last 2 sessions.
As it should.
It's unbelievable.
We did on the 26th. We did a 210, 230 call diagonal spread. I closed it 3 days ago for a $100 winner. Whoops.
Oopsies.
Yeah.
That's okay.
But at that point in time, I thought we would sell off because that was the day where crude oil was ripping higher.
And the market was flat.
Yeah.
Yeah. Been a lot of mixed signals in this market. This one is one for the history books.
Yeah.
Been a crazy one.
But very much like last week, we said this exact same thing. We said the only way this makes sense when crude oil was up 15% and the E-minis and NASDAQ went from down 1.5% to flat is if the market's just front running the end of this thing. And that's still the same case. The market could be front running the end of this thing and crude oil being up today could just be a non-factor. Yeah.
Just a short-term move. Some of the biggest movers in the market today, you got Amazon to the upside. It's the leader of the S&P 100, the top 100 stocks here. You got Intel in there. You got a bunch of the semiconductor names going nuts today. LRCX up $11 and change. Micron, high of the session here, up 15. AMAT has been super strong. You got Texas Instruments in there. Netflix is up $2. Meta has had an incredible bounce back. I mean, it's back to 630-ish. It basically moved 100 points in a week here. That's been a huge move. You got AMD strong. Definitely a strong session here. On the downside, Palantir, I mean, these are literally all service stocks, except for maybe Oracle. I guess that's not as much of a service stock. But you got Palantir, Intuit, Adobe. You got CRM in here. You have Dow Chemicals. So those continuing to get sold a little bit. Some of the oil names have been a little bit weaker, like CVX and XOM have kind of given up a lot of their games. You're seeing that kind of correlation change between energy and the energy names, like an XOM or a CVX, not as highly correlated. It's a weird one. This one's a weird one.
Yeah.
It feels almost like FOMO.
Yeah.
Like you weren't Like today, you're up 40 here. It's the high of the session. It's a good day. Good day. Half a base, 50 basis points, whatever. This feels FOMO-y, like you weren't willing to buy at 6,300.
Yeah.
And you watch the market rip 200 points and you say, you know what? I'm the stupidest person ever. We're going to V bottom right from here. I'm buying today. And then you get a couple points here. You feel like a genius.
And then everybody's in.
Everybody's in.
And they go.
And then they wreck you.
Smash. Yeah.
That's kind of what it feels like to me. Into the weekend, you still got the whole uncertainty with everything. I don't know. Feels a little FOMO-y. I haven't got the text yet, though.
Ooh. Yeah, I mean, just objectively, like, regardless of whether you think we're still going higher or going lower, if you bought in at 6,300 and now you're at 6,800 in 3 days, I think it makes a lot of sense to consider taking some risk off, booking some winners, and getting back into, especially with the vol crush, getting back into some cash positions and seeing what happens if you want to lighten up for the weekend. And on the flip side, if you thought we were going lower and you think we're going lower, now you've got a 10% rally that you can fade. And you can do it small.
And vol has increased or has decreased. So the value, the price of those put diagonal spreads, butterflies and stuff is cheap.
Yeah. So, I have some longer term bullish positions with diagonal spreads and whatnot, but I'm definitely adding in some bearish positions in SPX just because if you get a 100-point sell-off in the next couple of days, those positions will help a lot, given the things that we've seen now and the rally that we've seen, the magnitude of the rally that we've seen.
Yep. E-mini's up 45 here. You got the NASDAQ up 180. Have you been trading any gold and silver? I've been leaning long and kind of scalping around it. I'm not as long here, but do you have any trades on there?
Yeah, so I have what wasn't supposed to be a year-long trade, but now is going to be a year-long trade in silver.
Okay.
But it's actually fine. It's looking good. I sold a strangle the day before it crashed. So if you see that chart there,
like
that
right
day, the day before that,
right up
I
here,
sold right there, as foretold. But it's fine because the premium was so high. I sold a strangle for $8.60, and I've rolled it 5 times, and I have $2,000 in credit now with an 87 straddle.
Okay.
So break even's at 67, right where we're at here, and I feel totally fine with it. But I'm going to be in this trade for a little bit, unless silver rips higher. But I'm bullish silver, and I haven't traded gold in a little bit.
Well, it's super high there. You can still do it. I mean, it's an IV rank of 51.
Yeah.
But, monthly implied volatility, 30 handle. That is, that's not normal volatility in gold.
Yeah, and gold has increased 10% in the last week and a half as well.
So yeah, got a nice bounce back to like the middle of its range.
Yeah.
Might be like a wide iron condor or something like that can kind of fit into your positions.
Yeah. I think it's interesting to consider what might happen with the earnings season, which starts next week. So the banks kick it off on the 14th before the market opens. You got Citigroup, JP Morgan, Wells Fargo, Bank of America, yada, yada, yada. But you'll have Netflix next week.
Yeah.
You'll have Amazon, Apple, Microsoft, all those stocks the week after. So it's looking pretty crazy. I think a lot of them are going to reference, actually, Apple and Amazon are both later this month. But you'll have Netflix. NVIDIA will be probably later too. But yeah, I'm very intrigued to hear what they have to say about these prices and how they might affect some of the process of the software or hardware that they're.
Yeah, it's been interesting. I mean, some of these stocks, like we talked about, Meta was up $100 in like 2 weeks. Amazon, which has languished at 200 to 205 for pretty much this entire year, bouncing all the way back. In 2 sessions. those two have, and Nvidia has had a big move back. Google, if you look at Google, is basically near highs. I mean, it's like what, $10 off the highs. It had a huge move back. Nvidia as well. I mean, like these Mag 7s have kind of reversed all the pain very quickly. The other ones, your Microsoft, your Tesla, you feel like there's a catch up there, or are they just in timeout zone? Is it just like hands off mode with those?
I think this is your opportunity in Microsoft. Tesla, I'm actually bearish on. And I did an options math check on Tesla a couple days ago.
Okay.
I'm not sure, because SpaceX is going to be one of the biggest IPOs ever.
Yes.
And if you assume, you know what happens when you assume, but if you assume that, let's just say like 20% of Tesla traders are trading really SpaceX stuff, or like they're getting exposure to SpaceX through Tesla by proxy of Elon Musk.
Okay.
Now you have a direct way to trade SpaceX.
Yeah.
And we've always said like Tesla's valuation and volatility has nothing to do with their electric cars they make.
Yes.
It's all just like the future possibility of what could be. I think you see trading come out of Tesla and go into SpaceX.
Yeah.
I don't think people will continue to trade Tesla alongside SpaceX.
Or there's at least a portion of the people that have been, maybe they have a huge, position in Tesla from years back where they say, you know what, I want half and half, or I want 80-20 or whatever the number is. But some of that liquidity, I think that's kind of what's happening in Tesla. I totally agree with that. My other theory about all of them, because you put them all together, it's like $3 trillion. You're talking SpaceX, Anthropic, Anduril, Databricks, all these other ones. You put them all together, it's like $3 trillion, let's just say. It's probably around that. It's like a black hole of value that has to be filled with capital, right? There has to be cash from somewhere. It's either new cash or it comes out of something else. I think a lot of the weakness you've seen in like Microsoft, Tesla, even some of the other Mag 7 stocks, I think people are starting to think like, oh, maybe I gotta have some cash. Like I gotta have something ready for that. And maybe when those do come out, that's something to watch out for. I could be too much brain in this.
It's okay. No, I think you're spot on. I mean, I think Microsoft, regardless of where it goes, like we just saw Meta.
Yeah.
We saw Zuck being walked off the street from the courthouse, and now 100 points later in 2 weeks. Like
it's all sign.
I would not be surprised at all if you saw Microsoft bounce from 370 to 420 and above, just because it's Microsoft and it's the Mag 7 stock that's down significantly this year.
Mm-hmm.
So yeah, I think you still keep your risk small. I think you trade it for what makes sense to your assumption. But like, if I were to pick one Mag 7 stock to be bullish, it's probably Microsoft. I mean, I am bullish Microsoft with multiple positions, just because it's at a price extreme. Simple as that. But I am excited for SpaceX. I see a lot of people in the YouTube chat saying they're going to have fun with SpaceX IPO. Yeah, it's going to be insane.
It's going to be crazy. I'm sure, and I've gotten questions on like when the options will be live. I imagine they will be live as soon as possible. Most times it takes like at least a couple days.
Yeah.
I imagine this will be that sort of speed, if not faster.
Yeah. They know the implied interest in this IPO.
Oh yeah.
So they're going to fast track.
Those exchanges
options.
are
Frothing.
frothing. They are ready.
Yeah. So yeah, I would imagine that options would be available pretty quick. And the volatility is going to be sky high. You're going to see some craziness there. But it's going to be a really fun trading vehicle. I would assume that it's going to be super liquid, at least eventually.
Yeah.
And we can just get long space.
And it certainly can be both. I mean, we got a couple of people being like, why can't you be bullish both? You certainly can. We're just taking a spin on the Tesla move here and just some speculation, right? I mean, like if you have a big, marked profit in Tesla, why wouldn't you want some of that into SpaceX, you know?
Yeah.
So I don't know. Just a thought, just things that are going through my brain.
Yeah. And the whole liquidity leaving Tesla going into SpaceX thing, we've seen that before. We've seen it with AMC and their little spinoff, where now AMC is $1 stock. It used to be a high flyer, like
I would not
stock.
group SpaceX into
that's fine.
AMC, but
how about GE? GE Aerospace, it used to be the single stock that had everything, and now they branched off. So now you just have less liquidity for the individual names.
Sure. Some of them have done good. GEV, which is that stock doesn't go down. Have you seen this one?
I have now.
Yes, that one. GE Vernova.
Yeah.
Data centers, power.
But it's just it's an example of when liquidity leaves.
Yeah.
It's got to go somewhere else, and I think you'll see that pretty directly with Tesla and SpaceX, but we'll see what happens. When they actually IPO, there will be some kind of move in Tesla, I would imagine. Mm-hmm. And I would be surprised if it was a big move to the upside, we'll say.
Yeah. E-mini S&P 500 futures up 41 here. NASDAQ up 174. I cannot confirm this, but I'm seeing tweets that we are getting more Trump speak tonight. I don't know if that's fully true, but I will ask my Taiwanese sources. I'm seeing a couple things. I could be an agent of fake news. Who knows?
That'd be wild if he went on the mic and started talking about the markets. He's like, you see what happens?
Yeah.
Or it could be the opposite. It's the same thing like when we thought and when the market thought he was going to take the stand, it was going to be like a de-escalation thing. Mm-hmm. It wasn't. So you just never know. But still, 40-point move implied for SPX tomorrow feels light.
Feels light. I share that feeling. I just straight up bought shares of UVXY. Just a trade.
Wow. Straight up.
I don't know.
Tomorrow is Friday though, so fast market.
Fast market, tastylive.com/fast market.
Yes. Submit your trade ideas. They're always bangers.
Yes.
We've had plenty of great trades because we get to exit our own minds and look at what you've got.
It does help.
Fun.
It takes you out. It takes the blinders off.
Yeah.
You know, like we're just racehorses, so we don't.
Yeah.
Takes the blinders off, and I'm like, wow, it's a lot out there.
Wonderful world of options trading.
Yeah, it's beautiful.
So yeah, tastylive.com/fast market, and we also have a new promo for new accounts.
Ooh.
Double commission, earn a 200% commission rebate on stock and ETF options for 30 days. You can scan that QR code, or you can go to tastytrade.com/double and check out all the terms and conditions there.
Very good. Nice job.
So tomorrow, 40-point move. What is your guess? Up or down, inside or outside?
Down.
Outside?
I think we get back to 6,800.
Okay. So a small down move.
More than the expected.
I think we're down 60.
Ooh, and then rally.
And then we rally.
Rally
to down 20.
On what news?
Doesn't matter.
The Straits open?
Doesn't matter. It's just going to happen.
As we go into the close here, you got E-mini S&P 500 futures up 41. It's been a steady climb pretty much all day today. 1.4 million contracts traded. You got the NASDAQ up 176. It's the strongest of the group today. You got the Dow up 280 and the Russell up 16. Oil continuing to hover here at 99 to 100. It's had a big move higher. Oil volatility was actually lower in the morning today. It's now at 81 and change. So certainly some vol contraction there. Volatility itself, 21.20, down 71 cents, about 3%. You have the VIX, 1950, just unbelievable to see here this quick. Bonds, down 2 ticks. They're basically unchanged here. We've been at 114, just an incredible 2 sessions here. Gold up $16, silver up 34 cents. Not really buying into this move. And then Bitcoin, it's up $800 on the futures at 72,000, and then spots at 71,800 here as we go into the close. Who wins the Masters? Oh, I guess, well, this isn't our Friday, but
Tommy Fleetwood.
Fleetwood's the winner?
Yeah. It'd be crazy if Scotty won because in the DFS space, nobody played Scotty.
Really?
He's 6%. He's been terrible. He's 6% owned in the Milli Maker, and 3% owned in the big Milli Maker.
Wow.
So it'd be
he was actually leverage.
Oh, he was big leverage because he's priced like you can't play anyone else good. You have to play like the 6K guys. So if he wins, it'd be just comical. But I think Fleetwood.
You heard it here first. We're going to take a quick little 90-second break. Come back with more from Tasty Live. You got Chris and a special guest. Kazilia's out for the week, but we will see you tomorrow morning. So stay tuned for more Tasty Live content coming up next. We'll see you tomorrow morning. Peace.
Peace.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Volatility crushed, even as oil rises. It's still Thursday, April 9th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's your co-host, Jamal Chandler in Chicago. We're going to take you through the rest of these 26 and a half minutes or so of the trading day as we wind down. Another good day for stocks here, Jamal, where the S&P 500, the NASDAQ, they continue to add ground up over just 0.5% here in the ES, 0.6% in the NASDAQ. Jamal, what do you make of this very fine Thursday as we work through another day of headlines conflicting in other ways?
Thanks for having me on, Chris. It's been a minute since I've been on OT. I was down at the trading floor today. Mike and I did Option Trading Concepts live from the SPX pit. VIX pit, of course, is there as well. And there were definitely times where it was a little bit quiet as it was just this kind of trading day was transpiring, right? Like last couple of days, we've had up moves. We've had volatility come in. The interesting thing for me is I like setting alerts. People always talk about like having stop losses and all these type of things. I don't like those. I like alerts. I like for the alerts specifically in this type of environment because of when they happen. So I'll set up stuff like, let me know when you get to 6,800 in ES. Let me know when VIX gets below 20. Let me know when oil crosses 100 or goes below 100. And the way that this whole thing has been transpiring, those things will get hit at interesting times. Like a week ago, it's like when we dropped below 6,600 and VIX went to 30, it was like, yeah, those happened like in the middle of the night almost. The move, the after hours move that happened on Tuesday, which we had a spoiler alert, we had a little discussion today on Signal and Noise about one of the big trades that we saw on that Tuesday during the day. But anyway, when it was around 5:30 p.m. Central Time on Tuesday night, all these alerts start going off. 6,700, 6,750, 6,800. Like, whoa, what's going on here? Something's happening. And again, today, that was kind of a similar thing. When we hit 6,850, it was 6,800, 6,850, VIX below 20. All of these things are happening as pressure is releasing, is what I'm trying to get at. And that's what it feels like, honestly. Yesterday and today, it feels like the worst is behind us. At least that's the way the market is reacting.
Yeah, the market's definitely reacting like the worst is behind us. The short-term outlook for oil still somewhat insecure, given the fact that even with this ceasefire in effect right now, no ships are transiting the Strait still. Yesterday, actually, the fewest number of ships transited the Strait of Hormuz since the war itself started. And then Iran said they're only going to be letting 15 ships through a day, right? Not every single one of those ships is going to be a VLCC loaded with 2 million barrels of oil. Some of them are going to be dry bulk cargo that's making its way in and out of the region. The other things like helium, for example, urea, all the fertilizer. So it's, the supply is still screwed up here right now, Jamal, but nevertheless, pointing towards peace, we do see that Israel stopped bombing Lebanon today, which was causing some of the agita yesterday afternoon in the market that they weren't going to abide by the terms of the peace arrangement. Trump was able to tap Netanyahu on the shoulder and say, like, knock it off. We've got to reopen the strait. Like, you're killing our chances here, man. So at least we have that going for us going into the weekend. But the Iranian delegation's now in Islamabad. JD Vance is on his way over there right now. How are you contending with the fact that tomorrow's Friday, and given that we're going to be seeing these negotiations play out over the weekend, we're facing, I think, meaningful gap risk on Sunday night? Not that we haven't for the duration of this war, but how are you planning to operate around this particular weekend, knowing that there is an actual event that will produce some sort of reaction?
So, in that, I guess you're asking me essentially is how I'm positioned. I mean, I have longs on, mostly in individual names. There's no, I don't think, well, let me say this. My main core position is a year-long trade that I've discussed before, and it's in the Qs. It's in the MNQ. It was a strangle that eventually had to turn into a straddle as a result of us being down so far. And it's straddle at the 25,500 strike, which, I mean, you can see where we are. We're not that far away from that. And that's kind of the next level that we're going to bust through probably, or 26,000. And I don't want to be short this thing. So eventually I'm going to roll it, but I'm going to keep a bullish position in that. So as a result of that being my bigger position, and it's bullish right now for the most part, it's still long delta. And then I have these individual names where it's the Microsofts and, a sort of bullish positions in those. God, what are my main ones? I have Microsoft. I got, it's kind of stupidly in a way, CRM, which that resurfaced once again today, right? All of a sudden things are normal. It's like now we can get back to hating software names, but that's a topic for another time.
No, I actually think that should be the topic. We should go into that because I covered that on Futures Power Hour today, and I was looking at IGV. Like, hey folks, remember all that agita we had in the market about AI and how like software was dying? Well, we're back there. We're back at those prices when we were freaking out.
Yeah, no, we are. I find those very interesting, and at the very least, Microsoft and CRM is super interesting to me. So I got that. Palantir is also one of them, but then I'm along Tesla as well. I'm long Nvidia. These are like diagonal. So I have long deltas to go. If we continue to go higher and say we get back to 7,000. So as a result, I've taken the last 2 days. I closed out some other longs, but I took the other opportunity to get short a few things. I sold call spread in SPY, which is around 690 to 710, I think is a call spread, which essentially is former highs. I did a similar thing in the Qs. I also today, I waited. I did some yesterday, and then I waited for today because I figured there might be follow through, and sure enough, there was. And so I ended up putting on a super bear trade today. I'm short the 68.50 68.60 call spread to finance buying the 6,800 put, and I sold the 67.75 put. I feel like 6,800 is the current area that we're going to pause around, and so I wanted to play with that area and see if we fade from here, to your point about what's happening over the next couple of days and through the weekend. So I think you got to, like, at least, if you've been long here, I think, first of all, you do want to keep on some more longs, because we are at an area where I feel like we're either going to explode higher or we're going to retreat again because of some bad news. And I feel like it's going to be the latter, only because of what you said. Oil is still sticky at this 90 plus level. Now, maybe in a week from now, the K contract rolls off and all of a sudden we're in M, and then things just change. But right now we still have strong backwardation in oil. And that's probably the biggest thing that has been a little bit confusing. Like you said at the top of the show, that we haven't seen a bigger fall off in oil. But I tell you what, everything else that really struggled I shouldn't say struggled. Everything else that you mentioned, like the fertilizers, you look at CF, that name's gotten rocked. Exxon and Chevron and the like have gotten beaten down while vol is still high. So those are actually good areas if you want to sell vol in individual names, which I did in both of those. I got a strangle in both. But I feel like when you still have oil up, but it's contradictory because VIX going below 20, man, that is something. I mean, that to me is probably the biggest story of the day. And bonds are behaving and the dollar pulling back, all while markets are going higher. It feels like we could possibly be going higher, but I just don't want to. I still want to have at least a few shorts just in case we fade again, because it's hard to say a conflict is completely over.
Yeah, it feels like we're kind of at that crossroads again, where things could really turn the corner either direction, right? Will they turn the corner tomorrow? I'm trying to think about the two-sided risk here. Is there two-sided risk for tomorrow's market? Right? It either feels like it's going to be another one of these where we inch up a little bit or come down hard. But we're not going to get the catalyst that we need ahead of time before the negotiations take place. Also makes me think about oil. You were mentioning oil bouncing back through the end of this week and even next week as we work through potential negotiations. It feels like if I want to be long oil, I don't necessarily want to buy out of the money calls. It probably being short puts right now beneath significant swing levels, at least in the K contract still, that could work perhaps a little bit better. Like I feel more confident in saying that I don't think oil is going to dip below 90 over the next few days, more than I could say like oil's going back to 110. And it's basically trading in between those two numbers right now, but I wouldn't give an equal shot of it hitting 110 as I do it staying above 90. So the game is changing. Obviously, you look at that decline in volatility here. I think you need to use that as your guidepost. Like this is the lowest vol reading that we've seen in the VIX since the war started. The market clearly hasn't clenched and is trying desperately now to close the chapter on this, at least from the equity index point of view.
Yeah, there's definitely two-sided risk, and that's essentially what I was trying to get at. I feel like I want to have both of those sides on, but I mean, my real lean is to the upside, really, obviously, since we've been down for so long throughout this conflict. But there's a lot of internal readings, a lot of things that I've seen the last couple of days, data-wise, that points to the fact that we could be looking at higher prices within a couple of weeks to a month in the market. So I definitely want to be able to partake on that upside. That's why I have some of those longs. But a lot of my shorts are kind of, I can't say they're short-term. I did use June for those call spreads for SPYs and Qs. But again, I felt the need to put on a couple of shorts heading into this rally because it seemed like the right thing to do given how long I was.
I'm with you there. Jamal, I'm thinking about this equity market rally. I've been looking for something to sell because I didn't have long deltas on when the market jumped up over the past 2 days. And I'm trying not to chase it given what I still see as significant supply chain issues coming around the corner. I know that in 2022, ultimately, it took 9 months to work through. So we're probably looking at least a few months of issues here. And then the CPI data that's coming out tomorrow. I wonder, do you think the market cares about that? We're looking at basically a 0.9 or 1% month over month increase, which annualized is 12.7%. Could that upset the narrative heading into the weekend that, oh, geez, inflation really is going to be an issue?
Well, we had PCE that basically said that today, right? I don't imagine CPI is going to be too much different. I don't think so. I don't think it's going to upset the narrative. I think we're on our path to higher prices. I just think I don't know if we're going to 7,000 right away so quickly. I just don't think we see 6,400 anymore, I guess is really what I'm saying. So, I think we probably hang out in this 6,800 area, maybe 50 handles or so. It seems as though, ranges are getting a little bit smaller, I feel. I haven't really looked that up, but I just assume so. Like our intraday ranges were in the hundreds and 200 ranges. And now, the other day the expected move was 99 points, I think. And I'm not sure what it was today, but it seemed like we were kind of tight as far as the intraday range. So that right there is calming down. Obviously, volatility is coming in because we just saw it with the VIX. I think this is a good area, honestly, too, to possibly sell volatility. Like volatility is dropping as is across a lot of asset classes, whether it's equities, whether it's gold. Oil vol is starting to come in too. I noticed that today as well. At least I noticed it on my position, a couple of my positions that I had, my USO and my CLI and Condor. So look, man, things are settling in, and it seems weird because again, we keep hearing about how the Strait is closed. I don't know how many times I've seen that. Strait is closed. Just want to reiterate, Strait is closed. The Strait is still closed, but yet and still, and obviously oil is still hanging above 90 or plus, but yet and still, equities are saying, the worst is behind us.
Yeah, I keep looking at the oil flow data because at this stage of the conflict, the global economy has now lost over 300 million barrels of oil that would otherwise have been put into the system. And that's not even to go through all the other products that aren't moving, all the other commodities that haven't moved through the system as well. And then looking at the run rate that we have for the SPR and various oil releases, remember that those are expected to run until next week. We're 80% of the way through the planned releases so far. So you're kind of getting to a point where there has to be a ceasefire, Jamal. Otherwise, the global economy can go right back into the skids, which I got to think, first round of negotiations, it feels like both Trump's way of doing things and Iran's way of doing things is the same thing, which is to say, always walk away from the first round of negotiations.
It does seem like that.
Isn't that what Trump does? Like they go into negotiations, it wasn't good, I'm offended, blah, blah, blah. Yeah. Okay, let's come back. Now let's get a deal. Oh, look, we always had a deal coming along the entire time, right? Don't be a panicking. Everyone overreacted. This is the first conversation. So
you gotta be willing to walk away from the table, right? Isn't that what it is?
I think so. Well, yeah. When you feel the heat, you got to be able to drop everything in 30 seconds.
Yeah, there you go.
I just rewatched that. So good.
Did you? Isn't there a rumored part 2 coming out?
There is.
Yeah.
And I was just talking about it with my dad. My dad just said my brother got him the book or something for Christmas or whatever. And so he just read the second book and he's like, oh, they're making this into a movie. This is going to be great. Oh, so I'm looking forward to it. Whew. Yeah. Heat's real. Watch Heat this weekend. Watch Heat this weekend. Yeah, I'm going through a bunch of old Pacino and De Niro movies because, what else would I do as an Italian American? I gotta live up to the
what
stereotype.
Else? Give me some. What else?
Taxi Driver. Just watched that.
Yeah, awesome. You've seen Dog Day Afternoon? You ever see that?
That's next on my list.
Oh, dude. You've seen it before, though?
Yeah. I haven't seen some of these movies in 15 or 20 years.
Yeah.
And so after I rewatched Mad Men, after I started rewatching Mad Men following your lead, I was like, what else haven't I seen in 20 years that might be interesting?
Yeah. I mean, I binged Mad Men, but now I'm doing the slow deep dive in that season 4, man. That season 4 is deep. I'm savoring it. I'm watching that party. I'm watching that scene again, and I'm savoring going slow. It's so good, that season. So
we're 2 of 10 people I know that are currently rewatching Mad Men. It's weird why it's happening. Anyway, Jamal. So we got Friday's market here. You mentioned that bonds feel like they're turning the corner a little bit. You can see it in ZB and ZN. Rates coming in, oil stabilizing, and the other months. You're not seeing this run up in the M contract right now, by the way, where we're getting close to expiration for CLK6 and folks saying, this thing's going on longer, so let's start bidding up the M6 contract. If that was the case, you think it'd be true?
Scroll up a little more. I want to see December. The other day we were looking at December, and this was 75. Okay, so it's 73 now.
It's still hanging on. This is not really
in the mid 70s, right? That's kind of interesting.
Yeah. Are we going to go back to a pre-Iran war state in the CLZ6 contract. I don't know. I'm kind of difficult wrapping my head around that as well. Do you want to go out that far? Should we start thinking about the market in those terms, like get some real long exposure? You're telling me that I could sell the 64, 66. I'm gonna have to hold this forever, given.
Yeah, you will.
But what are the odds that oil supply over the intermediate period is returning back to its pre-war state? So that's why I say I feel like I'm more comfortable taking a bullish oil perspective, buy oil on the dips, not through calls, but through selling puts now. And the M6 contract here, there's nothing.
I don't know. I'd buy call spreads. I mean, I'm interested in the idea. I would do it. I'm looking at, I just feel like a lot's going to happen in the next week here when that K rolls off and that M becomes front. And so I'm interested in the idea of possibly buying call spreads in the futures options that correspond to the M contract. I just, again, doing that. I mean, I've already gotten short. I told you the different ways I got short, equities. And I did it in a big way again today with the super bear trade and SPX. I mean, me buying, calls and oil is the same trade. So I don't really need to do too many things. That's going to kill me if we keep going upside.
Yeah. And so just thinking about oil right now, there's no guarantee that the CLM6 contract, that it's not going to magically converge to 99. But if you're trading USO, right, you're benefiting from positive roll yield because USO holds a certain amount of oil in the fund at any given time, or oil exposure in the fund at any given time. And now they're going to be selling the front month contract and rolling into the next month, which the spread is $5, $6, $7 at any given moment. So there's a benefit there. And you can see USO, even through this tape, it's been holding up, still 126. We entered the month of March right around 80. So still a 50% gainer there on your oil fund. Jamal, last question here. How do you feel about gold and silver? I know this has been such a point of interest for us. I know a lot of people are trading this less than they were a few weeks, months ago. Do you think that gold's turned the corner? Can we get back in? Can we get long?
No, I'd rather. I had a call spread on. I can't remember if I told you. I think I did. In GLD, I had that up until yesterday, actually. But I had the 425, 450 call spread. And I decided to take it off because I just kind of could see where this thing was going as volatility is calming down, as we're going, all these things we mentioned. This was going to get to a point where, it went higher, but then it's going to start getting quiet. The moves weren't going to be as big. At least I feel. I didn't feel like I was able to hold it. I'd rather see. I don't know. It's like what kind of. I think the gold trade that we saw. I just don't know if that's happening again. I don't know. I feel like. You know how it was in what was that, 2011 or 2012 when it just was so crazy and they were moving big. And then once the reckoning happened and then they just kind of calmed down. That's what it feels like right now. So I don't know. I feel like, honestly, selling volatility in this is almost a better opportunity now. I've been doing that in SLV for some time. I'm still carrying on that trade. I went out to June now. That's probably been one of my best trades of the year is being short SLV. And I feel like you can do that in gold too. I think it could go higher, but I don't know about the velocity of the moves that we saw, going back to last year, even December and January, right? Like I don't know if that's coming again, Chris. Do you?
No, not in the short. I mean, if the capital that was pouring into gold and silver was largely institutional and central banks continuing to soak it up, you probably think now, at least for those significant buyers in Asia and the Middle East, they're going to have capital set aside from the gold and silver sales to pay for the additional energy expenses in the short term. So we've heard from the various central banks, it's been reported widely that there's been gold selling in order to raise cash. So that money is going to be used. And the rebound and that going back to the whole, we can just accumulate gold, maybe it takes a little bit longer. But Jamal, I mean, I think about the whole Iranian toll system that's being set up right now where it's going to be done in cryptocurrency and not with the US dollar. Just at the margin, is that something that could hurt the dollar dominance longer term? Maybe not. Turkey operates a toll on the Bosphorus. No one complains about that. So it's not totally unusual. It's also an open waterway. And America's basically founded on fighting piracy, Jamal. That's why Thomas Jefferson sent the Marines to Tripoli in 1803, so that we could keep open transit. Pirates were looting American ships, American merchant ships, in the Mediterranean right after we were a new country. And it's like, oh, this is really bad for our GDP. We better go deploy the Marines. So this is okay. The next few days are going to be really interesting. Volatility's obviously come in right now. I'm just taking it day by day. I like the wide stuff. I like doing the short iron condors still. I feel I'm obviously not enjoying that I'm not long these past 2 sessions. But the directional neutral things with like the strikes at 7,100 and 6,200, that's for the short iron condors, like that's still working. And just theta decay is time here, and time needs to go away. So little by little, as long as we stay within those ranges, I'm just going to sit tight.
See, the best part about you not being long, oddly enough, is that you're not really biased one way or the other, right? I mean, even though I can't say you're coming in with fresh eyes because you've been watching this whole thing happen, but you haven't participated.
Oh, I feel biased. I feel biased because
Really?
it's like I'm not long, so I don't want it to go up. Yeah, I'm a.
I would like I said, I put on a few shorts here and there, but seeing VIX drop under 20 today, I mean, 6,400 is not happening anytime. I'm going to go on and say 6,400 is not happening again. You missed that buy for those who wanted to get down there, who said I would have bought it. That's gone. And I don't know, 6,600 might be done too. I think it's a wrap, bro.
You might be right. Maybe we get back to the 1 month on some sort of fear shakeout, but I got to say, I'm going to use it as an opportunity to buy the dip this next time around.
In the old stock market, meaning prior to 2020, I would have said we're at 6,800. We're going to chop around here for like the next month or two before we go higher. But in this new stock market post 2020, dude, we could be back at 7,000, like in a month. I mean, the way the stock market happens these days. So we'll see.
We will see. We're going to have to see next week because overtime's out of time. We'll be back on Monday, 4 p.m. Eastern, 3 Central, right after last call. So for Jamal Chandler, I've been Chris Vecchia. Thanks for joining us. Stick around, though. Ilya Spivak's up next with Macro Money. See you there.
The markets are in a holding pattern. Apparently, we are waiting for something to happen on this ultimatum that President Donald Trump issued to Iran about opening the Strait of Hormuz. And so there isn't conviction on the board for now. What's coming this week, and can we get some conviction? And can we figure out what in the world is actually going on here? That's what we're going to try to figure out right now. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And as ever, what we are going to do is first and foremost take a look at the price action, see what that is telling us about what is on the menu here. And from there, see if we can't figure out some next steps. Because, of course, the key here is, as ever, what is the price action whispering to us? Because certainly attempting to make sense of this news flow seems like a dangerous kind of an idea instantly, just because the markets are so headline sensitive that everything seems to be switching in rapid form. So let's first and foremost take a look at what the prices themselves are telling us. And from there, maybe we can make some sense of next steps. Here's the view on the bogey du jour, of course, crude oil prices here holding steady against the spike high that they hit when this whole episode began. And we can see here that we gap a little bit higher at the start of the week, but we don't end up actually going anywhere. We're just hovering. And so, on the one hand, there's conversations after an Axios report overnight that maybe there's a ceasefire being discussed. There are conversations about perhaps we are going to have the president make good on this ultimatum that he's made, where he very clearly said, listen, I'm not backing down from this one. if Iran is not going to reopen the strait, and the deadline for that is essentially overnight here. If that's not met, then we're going to start to bomb all manner of energy infrastructure. The market seemingly not sure which way this goes, but they're pointedly not putting conviction behind that outcome or this one. So what we're seeing is the market is clearly unsure of whether the president means it, whether Iran is going to meet him halfway. They've certainly been sounding a defiant tone. Whether there is a ceasefire to be had, that Axios reports claimed that a whole range of countries are having these discussions, including the U.S. and Iran, and that Iran asked for this, which, of course, then raises the question as to who we're talking to and who is talking back when the president makes threats on social media. Because, again, that defiant tone coming out of social media on the Iranian side ostensibly isn't the same group of people that's negotiating a ceasefire if that ceasefire negotiation is in fact occurring. So the fog of war is particularly dense at the moment, and the markets don't want to make a call this way or that. We can see the same thing from stock markets. They attempt to get a little bit of traction, but ultimately they're holding back at a familiar level. If ever there was a clear cut, if the trend stays, this has to hold. And if it's going to break, this is the spot. This is about as classic of a chart setup as you can imagine. This is the deciding one. And we'll recall there was something very similar here, for example, in this instance, where we had a clear band of former support become resistance. We broke through that. We gapped to test it, and ultimately the trend held. Once we came down to this support, we came back again into this same area. Couldn't hold it, broke down. We've retested the underside here before, broke down. We're retesting it again. Not unlike we tested this 2 times, 1 time closer, 1 time more distant. Now we've tested this 1 time closer, 1 time more distant. Let's see if it holds. But for the moment, the markets are not prepared to jettison the war trade as an idea. Same thing with the bonds. We can see they're also pointedly testing the former area of support that they broke, and they're not finding conviction to overturn what has been a trend toward lower bonds and higher interest rates since this thing began. Same thing for gold. And the trend motivated in the same way. Gold, of course, doesn't yield anything, and so is a natural foil for interest rates, and as an alternative store of value is also a natural foil for the dollar. Well, what have we had against the backdrop of this war, where the melt up in crude oil has given us what we just saw in the bonds here, right? Higher interest rates, born, of course, of inflation expectations surging. And what do we end up with? We end up with gold lower because, of course, higher rates don't do it any favors, but also a higher dollar, which also doesn't do it any favors. And so we end up with a situation here where the market is ostensibly looking at this and going, well, this whole thing in its sort of sum total is an inflation risk. Nothing that we've seen so far suggests it's become any less of an inflation risk. Maybe we are going to have some variety of change, of course, here eventually. But for the moment, this is the story that we're looking at, and the markets aren't prepared to let go of that narrative, even as we see the sort of fog of war really descend on markets and obfuscate whether maybe we have some on-ramp here. The hopium, in other words, is not strong here. but neither is the panic. It is worthwhile to mention, though, that the markets have had more hopes for an on-ramp than they appear to be entertaining now. And that's something to keep an eye on, of course, because as ever, this is the story. We can see clearly that the markets are looking at this situation through an inflationary lens, where when you have a run-up in oil, or indeed any kind of concerted move in oil, it would seem, the lag for that to appear in headline CPI inflation seems to be about a month. And what you end up seeing here then is everything that we just saw in the price action across the major assets kind of cascade from that idea that if you have this surge in oil, and if it becomes sticky, especially since if you were to reopen Hormuz in full today, it would take months in the best case for things to normalize, and normalize they maybe could, but the reality is we probably can't go back to the status quo before the war, because now if Iran is going to continue to have control of the Strait under this regime, they want to charge a toll. So that's baking in a higher price perpetually in perpetuity. If it's a capitulation and a new regime takes hold in Tehran, well, there's no telling what they'll do with the Strait and how quickly they can get everything back in order. And if it's the U.S. controlling the Strait, well, then who's to say that it's not going to get used as economic leverage, especially against China? So there is a whole range of options here, but none of them seem to end up with this not being an inflation shock, at least for some amount of time. And when we look at where the world was, this is as of January here, these are the OECD countries, and we can see that 50% of them were already looking at inflation rising before this war, even though, of course, inflation had normalized significantly since the COVID spikes. And by, let's call it the middle of 2024 going into 2025, almost no country had rising inflation. Before this war, clearly it was a different story, but now it is almost certainly an inflationary risk, because whatever comes as a consequence of this war is going to come on top of what we're seeing here, which was already starting to become inflationary by itself. Now, of course, the counter argument is if this goes on long enough, the higher price of oil and the higher price of everything that is transacted through the Strait, be it aluminum or helium or fertilizers or the petrochemicals that are needed for all manner of fertilizers and plastics and what have you. Something like 50% of global polyethylene, the most common plastic that really goes into almost everything you see around you, goes through the Strait. So there is all kinds of an inflationary shock here beyond just energy. But of course, if you keep that squeeze long enough, people are going to start to say, well, we need to pay for those necessities that are now more expensive, like energy, like fertilizer, and we're going to, as an offset, start to claw back spending elsewhere. If it was a temporary shift, we'd just bite down and take the squeeze. But if it's going to last for a long time, well, then we need to make some more lasting adjustments to our spending patterns and pull spending from those things where it can be foregone to now cover these extra costs. And that kind of demand destruction has been starting to show up in inflation expectations. We can see here the 5 and 10-year break-even rates, which measure the inflation expectations baked into the bond market. They've started to come off recently, in particular at the longer end here, as crude oil has continued to march higher even though, of course, the initial march in crude oil since the beginning of the year fed inflation expectations. And then, of course, the war amplified that by many orders of magnitude. And so we saw a surge in the violence of this crude oil move. And with it, the inflation run up got another big shot in the arm. We now see these things diverging a little bit. And that could be because we're getting into that demand destruction risk part of the equation. And not surprisingly so, because just like 50% of OECD countries had rising inflation before this war began, so too 50% of them had rising unemployment rates. And so we were already in this uncomfortable location economically where global economies were starting to feel the stress even as inflation was starting to perk up. Well, here it is, the overlay of overlays on this thing. With the war, both of those things get worse. Now, you wouldn't know it looking at U.S. employment data that came out on Friday. 178,000 jobs added to non-farm payrolls. That's well in excess of the 60K expected. The unemployment rate ticking down from 4.4 to 4.3%. Reversing the rise in the prior month. But there is more than meets the eye here, it would seem. This is not exactly the rosy report that it appears to be at first blush. And you see that when you start to look under the surface. The actual tenor of these numbers is perhaps much more worrying than these headlines suggest. And you really get it when you start to look at the breakdown in the various subcomponents here. And what you see immediately is that the overwhelming majority of jobs here is once again coming from healthcare and education. And that isn't altogether unusual. Because when you consider what this seems to say, it follows a familiar pattern. We know, looking from the recent history, certainly a couple months back and longer than that, that this has been a structural sort of jobs growth. Take a look at the way back here. This is as far back as the data goes, about 3 years here. What you see is this pink area in the middle seems to be the largest one of the bunch. And that's, of course, education and healthcare services. Now, why is this consistently the biggest driver of employment growth? Well, rocket science, this is not. As of March, the U.S. hit the highest population of 55 years and older Americans on record. Unless you think that this is somehow proportionally matched by younger Americans, it isn't. We also hit the highest share at nearly 31% of the population for those Americans. So more, we're approaching a third, let's say, of Americans are now 55 years or older, the highest ever. These records go back at least to the 1950s, depending on which data you look at. And so when you consider what this means, well, of course, there's job creation in education and healthcare, in particular in healthcare. Somebody has to take care of these people. There's obviously a lot of demand here for services that target this cohort. Now, on the one hand, this means that job creation is not so cyclical. And so were there to be a big squeeze, these people 55 and over aren't going anywhere. And so you do need to still create the jobs that support them. On the other hand, it also means that everything in these other sectors is at best anemic. And so if there were to be some sort of a major economic shock, it wouldn't be very difficult to overwhelm the kind of structural baseline that occurs for this healthcare work job creation engine with all the losses that you might see were there to be a recession and a meaningful round of layoffs. And so it's, on one hand, a source of insulation for the job creation that there is now, to say that it is structural rather than cyclical. But on the other hand, the cyclical part is not exactly spread in an encouraging way. Most of it is modest, if anything. The second biggest job creator after education and healthcare services, for example, for March was leisure and hospitality, exactly the kind of thing where you might see people trade away to finance extra energy costs. And so encouraging, this is not. Now, we also got some ISM data from the Institute of Supply Management, a view on the service sector. And here, still looks like we have generally solid output growth. We come down a little bit from the heady levels that we saw in the prior month in February. That was, of course, the highest since back here in 2022. So very strong numbers, and a little bit of a pullback probably doesn't hurt here and probably makes a little bit of sense in context, but look under the surface and things look much more ominous. Employment contracts for the first time since the middle of last year. As ever, this is done in the logic of PMIs. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so you can see here, this is perhaps the first time that you're below 50 since back here, call it latter day 2025, October, November, but it's also the fastest contraction since December of 2023. At the same time, costs are surging. The price component here flying higher and is now at the highest since, let's call it July or so of 2022, mid-2022. Very much still around that shock that we have on the prices front post-COVID. Before the Fed's rate hikes that they start in March of that year really start to take hold and beat inflation back. So as we look under the surface, all of those risks, both to inflation and to employment and thereby to growth, all of them are materializing here. And we start to see how you get from an inflation shock to demand destruction, which is, of course, precisely the fear and precisely what the markets seem to be looking at here as we consider what comes next. Now, the biggest read-through from this, of course, is to what the Fed may do next. And here is perhaps the biggest risk for markets, because with the Fed's objectives seemingly in tension, we have a kind of rock and a hard place situation. From where the expectations sit currently, the markets don't expect any policy changes from the Fed this year, and they're flirting with the possibility of maybe one cut next year. That's not hysterical concern about demand destruction, but it's certainly a recognition that we don't have space for hikes or cuts this year because, on the one hand, the economy seems to be under threat. On the other, inflation is on the march. Now, we can see that even under these clouded circumstances, the stock market is responsive. As we've seen this surge in the policy outlook that erases rate cuts for 2026, the S&P 500 has come down. As you see the demand destruction part of the conversation start to come into the conversation at the beginning of this month, beginning of April, and coming out of March, as things get a little bit more dovish, as you start to put some rate cuts back into the mix for next year, stocks come back up a little. Now, there's a couple of things this week that are going to impact this closely. First, of course, is going to be minutes from the Fed's latest policy meeting. And we're going to see if this sit down, this is, of course, the March sit down, if reading the tea leaves there gives us any clue as to what the Fed might be biased towards, the sticky inflation or the demand destruction side of the equation. It seems like the vibe going into that meeting was inflation was the bigger worry. And of course, that is what the markets would be afraid of, because if the Fed is afraid of inflation, then whatever rate cuts are on the menu here may be too many. And if this starts to move back higher again, because you start to factor those out even for next year, well, then stocks probably get pressured lower. The next bit here is going to be the CPI report coming out Friday. And not surprisingly, we're looking for a big jump. 2.7% expected for the core, 3.3% expected for the headline. So a dramatic increase in inflation that's coming on the menu. Of course, that much seems clear from what we saw in our kind of mental map of how all of these things appear in sequence. First, you get the spike in crude oil. Then a month later, you get the build in inflation, give or take. But the question really is going to be, do the markets expect the Fed to look through that? Or is this the kind of thing that, in simple terms, takes this down 33 basis points expectation for next year, which is basically one cut in the 50-50 chance for a second, and trim that back? And if it does, well, then we can see the implications. And of course, from there, cascade all of the other major assets. So if the story after these FOMC minutes and the CPI numbers this week end up being the Fed is concerned about inflation first and foremost, and the story from labor markets looks like the kind of thing where the Fed is going to justify doing something like that by numbers like this, even as what's happening under the surface is vulnerable and perhaps is already deteriorating if the ISM numbers are to be believed, well, then the read-through ends up stocks probably find a way to hold this level and come back in. Bonds probably find a way to hold this level and come back down. Gold probably follows suit. And of course, the dollar probably has legs to punch through this resistance. Now, with all of that in mind, the exposure that I have on the menu here, still very long the dollar against the Aussie, the pound, the euro, the Canadian dollar, and in my spot exposure against the yen. That 6J contract is just too big, so I use spot rather than the futures. I am still short the bonds at the middle of the yield curve and at the long end, looking for rates to go higher. Still short risk. In fact, I've just extended my maturities a bit here for both the NASDAQ. That's now 46 days out. S&P is now 53 days out. I still need to work out what I'm going to do with the Russell and probably push out that one as well. But still short risk, long oil with plenty of time on the docket, and looking for the higher interest rates, fewer Fed rate cuts, and all of the implications thereof to wash over the markets from here. And that is macro money for today and for this week. I'll be back next week. I'm out the rest of this week, though. The show is usually here Monday through Thursday. After overtime, that's the show I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. Also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns next week. Live and on-demand recordings for the rest of this week. Happy trading.
Free market, come on, you know it, can you feel it? We got some